talk to people.
You sound so excited. This is network.
Of course, we talk to people we already know.
Yeah. To me, I'm a big player in the blockchain.
Hi, I'm Peter, by the way.
Phil.
Nice to meet you.
Hudson.
Yeah, what do you do?
And Naomi.
I work for the public relations firm.
Oh, nice.
So I'm looking for things for the blockchain.
Yeah.
Mostly with the application of applications for the school.
Okay.
Versus something like a security.
There's gonna be a lot of things this year, but like asset transfers, like kind of getting solidified, but there's a lot related to it.
Right.
Or at least relying on it.
So we're only now just started to experiment with it.
Awesome. Well, you're in the forefront, so.
Our developer team, we've been like begging them, like, you know, trying to ask for partner. And they started working with Ethereum.
Nice.
They kind of really good long way, and they got to do it. There's gonna be debugging tools. You know?
Yeah, there's just in the last few months, some people came out with some third-party ones that are not well advertised, they're not well. They're not
But other than that.
Yeah. But it's coming along, and I think, so I work with the Ethereum Foundation, so the educational resources that we're looking, there's been a lot of kind of that's happening, you know, some of the attacks on the network, but we're looking to kind of regroup and push out more educational material, like stuff, and tutorials and things like that.
What are the nature of these attacks though?
It's just like,
DDoS.
it's pretty much just playing the network with spam to slow it down. And they did that by compromising like a law. And so whenever you set any transaction or any smart contract in blockchain, each operation costs a certain amount. Well, those prices are not dynamically set. So like ad is cheaper than taking a hash of something. Those prices were set at the beginning of the network. We just haven't updated them yet because we didn't expect for this type of ad to participate for it. But someone exploited an opcode that was computationally expensive on the hard drive to be very cheap to execute. So they just spam that over and over and over again. And then also spam account creation. So 12 hours ago, I cleared out all of the empty accounts that basically had no internet that they spammed with because by clearing them out, you can still be confident in the private key, but they were in their position. So cleared out, so now things should be back to normal in 24 hours more, meaning like things working really well and transactions getting through and things like that. Which transactions always got through is just slow. It was just slow. Like 1/10 of Bitcoin's transactions were just slow.
Right.
I'm sorry, I'm driving. I'm Bill.
Bill.
I'm just another investment advisor by below.
Cool.
Also, we have 8 GPUs, rigs, caching Ethereum. We got
Perfect.
7 more coming this week. I've got 7 more, so we got 15 GPUs going. So yeah, it's really exciting. It's just trying to figure it out.
Awesome. Cool. I guess step one here, I was in the C market and trying to jump into this, like, the options trading, like some of that stuff, it sounds like, or like, at least stay with the regulatory, like, good side. But, I mean, with Ethereum, it's still gray area, if the US government, like, paid different targets.
Well, you saw that John Doe lawsuit from the IRS.
Oh, the Coinbase?
Yeah, the Coinbase.
Yeah, all they're doing is,
They're just rattling the cage,
Yeah.
but still, it's like the John Doe lawsuits can and should be pretty rare. And when you're like trying to drag that across 2 years worth of customers.
oh yeah.
The government asks for records of anyone who had ever interacted with Coinbase pretty much.
Yeah.
That's what I think that they can ask for is.
Unclear,
I
we'll
mean,
find out.
they can ask that, but Coinbase's team is one of the best legal groups I've ever seen in the currency space. They have ironclad relationships with a lot of different government, state and federal government agencies. And also, they actually get requests from like police and like FBI and like stuff like that to help them not investigate, but to say, hey, how do we do this? And like they have good relationships. I think they'll come out of this unscathed. Like they have a lot of good lawyers.
see what I can do.
It is, but I haven't had enough government experience to know how often that happens. That's just-
So, I mean, I read that as a slip up. And then you read the actual document.
Maybe it's like bargaining, like you just start like a ridiculous request and then work your way down.
Yeah, work that.
So no, we actually really just wanted that class.
So, what sort of things are you playing with your team that is just starting to? Okay, yeah.
Because, you know, I'm from a communications perspective, I'm looking at two things, supply chain and corporate social responsibility. So I think those two areas are right. I mean, and it's gonna be, you know, it's one of those things where we're actually pretty far ahead of our clients. You've got those, you kind of have to ask, okay, what's really the foundation? Giving you the ability to scale a lot of assets. I'm comfortable with it. Organic free cash, I don't know.
Oh, some things are that kind of tracking, origin tracking.
Right, right.
Yeah.
And then, you move on to sort of motivation, I think it's gonna be like a process for them. Like some type of, somebody's gonna say, no, my customer said.
When it happens, you'll be involved.
But also think it's just corporate social responsibility. Like in that, like investment, right? You know, I was thinking a while back that you're the CEO, you're in the corporate office, you've got a whole bunch of things that angry investors, you know, or angry environmental groups, all fighting for the same thing. The CEO has an obligation to talk to me for sure. And so I was thinking, well, investment company, and if I'm 18% Greenpeace over here is still kind of then you get through this. Which is pretty interesting because Mr. Corey was numbers, but if I don't get my dividend, you didn't achieve the promise of the system. Have something to great investor. Now I don't like that's not the first I invested based on I didn't get my dividend. There's gonna be really interesting.
Incentives are so important. The fact that we judge companies almost solely on share price means that they optimize almost solely for share price.
You get what you measure.
So yeah, we can add other
So
things in.
that's one.
Owners. Yeah, they just asked me. No, they just asked me to speak like yesterday. So,
Did you have to travel to?
no, I'm local. We're doing digital game assets on the blockchain. So,
Like achievements or earnings or.
so the most basic thing is licenses for the games themselves. And then sort of the second layer is items within the game, so skins or magic swords or yeah. So,
Instead of using PayPal or a credit card, you can download the game, Steam or Dota, whatever you can actually use.
yeah, I'm not sure which one you're talking about. There have been a few other people in the game space. I think there's like a game coin. But yeah. So we're building basically developer tools to make it really easy for game devs to put their identity and ownership information on the blockchain. Which make it all interoperable trouble coordinating between their own games. They like have to set up a whole API custom for each integration of their other games. And apparently that's a big pain for them. So if we can make a standardized thing that you can use by default, then it could be useful.
I'm the answer. I'm his partner. But no, I teach ballet. Yeah, at the high park school down on the south side, and I'm a small new class of ballet company. Oh, studio. No, but we have so many people like that. She got it right the second time. Yeah, we have a lot of people who get on the stage and just stand there and look around. And then we also have a few who get on stage and see the parents in the audience and booing their parents. And you're like trying to catch them from it on stage. Right, you see black.
Yeah.
So now she's going to from it.
Right, yeah, and so she was in this play where somebody wrote this play with like, the characters kind of like some kind of like,
Wow. That's a really good part. I'm sure you appreciate that.
That's amazing.
That's great. Well done. Well done. So we're about to move. And you're self-employed. Right, right. Yep.
I want to use this for a
Yeah, I think we'll wait till people arrive because it's actually not fun. It's like 5 minutes to figure out how this building.
That email this morning was pretty nice.
Well, I went through it last night.
It was a good dry run.
Yeah. And I was on the 16th floor trying to figure out how I got on the wrong elevator.
I always heard about merchandise marketing from the future. Yeah, I didn't know this was like a huge retail complex. It's odd walking around, not just buildings.
And there's all kinds of like ad agencies and startups.
There's a really cool storage space upstairs.
Oh yeah, that's the
Yeah, it's a co-working space. Yeah, there's like art galleries and there's so much stuff where we're just like kind of hitting such a huge.
What did you guys do last night?
For some drinks, just for a little bit. For around like 6:30 or so. Yeah, Brian.
Start to sit over.
No worries.
So what's your background?
Yeah, so right now I work as community manager for and yeah, so we're similar to
Hey guys, we're gonna start in about 15 minutes. I know we're
so
technically scheduled to start around now, but we have some time buffers built in to keep it back on track, just giving everybody time to trickle in. So we'll probably kick off at about 9. I'll keep my intro short and then we'll keep it moving and bring it back on track.
Project or a reporter project across the nation. It's like 700 acres. Yeah. So 18 months ago, my cousin DC also got a lot of crisscross on the but the absence of unified data set, the absence of a way that we could get down to credit specifically is troublesome. That's where we spent a lot of our first 6-8 months of lobbying the DOE to go to the federal use space. Oh, absolutely.
I'm just thinking about what we were talking about as baby boomers, so I'm like,
Right.
Yeah.
It's not so much that we say There's a website that just collects looking at all the talking about the younger generation from all periods of human history. Beneficial action, whether it's like avoiding traffic congestion, talks about the fast pace of modern life, bringing up family, how you verify TV right And if it's something inside of you, that's something every campaign is exactly because that's something users have to buy credits, also installations, what it will bring power. So there's demand for certain classes of credits, the energy world now, don't have enough systems. All them have voluntary based.
Oh my goodness.
There's a lot of research there. We're on a contract, and we're trying to do a smart contract, we're still trying to finish that contract up, but trying to show them smart contract enabled, like, credit lines, like, if you, lost a back, and you put back on the city or town. And then hopefully serve our neighborhood now.
What's EMR?
Medical investment.
So funny. Nothing's really changed.
So with the Trump election, the fake news thing is somewhat hypocritical. Lincoln almost lost the election even with fake news. So they're apparently spread the story. He favored mixed marriages in order to create a stronger, more powerful marriage, and was going to try to purge the races as part of his master plan to create American superman.
All power individual.
That's crazy.
Requesting payment, we're sending authorizations back and forth. A lot of authorizations are back and forth right now, authorizations. So they're looking at it,
We just have to go back to the words to rotate.
Right.
So you go to politics and then they're different.
Right. Nobody wants to touch it, it's super sensitive.
Right.
Only a few companies that can really useful.
Yeah.
I don't think it's
It's pretty pioneering work though. Both those use cases are important. Like I've thought a lot about self-driving cars for this work we did.
Well, I mean, telemetry is exciting because for the energy side of me, because electric car is bi-directional gives power to the consumer. So if you've got your car plugged into the office, you're going to charge it and it knows that your car is accessible and knows that you're willing to have your car battery complete for X dollars per kilowatt hour. Don't backbill 70 cents or whatever ridiculous price. And you're going to be small enough to call up the cheapest resources. It's got enough of that called prices. So connections between car and right now there's all the regular deals with utility companies. Trying to figure out how to avoid utility is device play, that's indicator of companies that are willing to use a common data set. And that's sort of what the future of everything's interconnected.
It's definitely pioneering work for so many years.
Somebody else.
On the block, yeah, three.
I have the link up. That's it, right? Or is it live streaming now, or is it?
It is. It should be lost to me.
Yeah, I'm not kidding.
And are you?
Yeah. I'm definitely connected because I loaded the link up on here.
And then this is what I sent you.
Yep.
Well, but
Yeah.
it's just working on his phone, so
Okay.
it should be.
Let me see if we can. Everybody 5, 2 chairs there. Just put on the chair. Well, I think the moderator can use that. It was like 4 people and then. Are you going to get a bit more space now? Oh, sorry.
No worries.
Alright. The other 2 mics are stuck. Looks like you have a...
Yeah, they were the one with this consumer but our annual race in
All right, if you guys want to make your way towards the front, we're going to go ahead and get started with our program. So first of all, while you guys are settling in, I'll tell you a little bit about what we're up to. So thanks for being here and finding your way across this labyrinth of a building to the far west corner. I got lost here yesterday, hence the detailed directions this morning. So what we're doing here is our first annual blockchain conference in Chicago, but this is our 10th one. I believe we can say that we ran the first blockchain conference because before everything we looked at was Bitcoin and crypto conferences, and we started focusing on enterprise, DLT, and alternative use cases, but also including finance several years ago in 2015. And since then we ran it in New York, Hong Kong, Dublin, Amsterdam, DC, and we also run London FinTech Week, which has been going on for a while. So part of what we do that's slightly different is we take a ground-up approach. We work with communities and people on the ground in order to make the events happen. So they tend to be a bit more focused on the ecosystem and meeting each other. So it's less the buyer-vendor relationship that you see at some of the conferences. So hopefully you guys have experienced some of that and met with each other, because what we like to hear is that the number one feedback is that I met good people. So if you're not meeting each other, then we're not doing our job. We're running a few minutes late, but we'll bring it back on track. I'm just going to give you a brief of an overview. So if you look at your name tags, we run lots of other things as well. We're going to be doing a FinTech Week in Tel Aviv and then also in New York. And we're looking to bring the FinTech Week concept to Chicago in April. We're exploring that right now. The guys are running the FinTech exchange. So in April, we're looking to be back running a multi-day event here, because we like Chicago, and it's one of the areas that it's one of the cities in the States that we want to focus on. So my background is, I'm based in London. I grew up in the States, I'm American. But in 2003 I moved to Richmond and picked up a weird southern accent, and then in 2008 I moved to England and picked up an even weirder English accent. My wife is English, I have 2 boys there, so I couldn't leave there if I wanted now. So if you guys could, while you're here, use the hashtag #BlockchainChicago, because she will be checking to make sure that I am in fact doing the conference in Chicago. But yeah, so I love the States. I am excited about when we first did it. I was really excited because the World Series was coming to a head, and you saw the Cubs making history. So it's good to be here. I think a lot of that is still in the air. So, and the weather is cooperating. So it's been really good. So looking forward to being back. But I don't want to take up any more of your time. But what I do want to say is that the way that the formats work is we keep the talk short. So I'll get off soon, and we try to make sure that there's plenty of time to meet each other. So there's breaks built in. Because we want you to meet each other, but we also want you to participate. So the sessions are short talks. I think even the longest keynote is 20 minutes. The panels are 25 to 30, and then the intros to startups are 10 minutes each. Some of them are moderated, and then some of them are Q&A. So what we're asking is for you to participate. There's plenty of time to ask questions, engage, both during the panels and then afterwards. So please feel free to get engaged and involved, because it's really about you guys getting as much from the day and learning and asking questions from the people that are changing the game. So that's my time. Let's move on to our first panelist, Rumi Morales, who is a local, in England, as I say, legend in the space. So, Rumi, if you want to come up and introduce yourself and tell us a bit about what's happening with blockchain.
Thank you, Luis. It's great to be here with all of you. I've got a question, though. I'm wondering for people here in the audience, for whom is this the first blockchain conference you've ever attended? Wow. Okay, that's fantastic. Who's actually never even heard of the word blockchain until this year? Anyone? That's even better. Although I totally feel like a ancient history right now. I've been involved in this for almost 4 years, which I think is kind of a long time. Certainly enough to make me a digital fossil. But I think what's so exciting is, this is still really fertile ground, for sure, and full of opportunity, especially for those of us in Chicago for whom, we're just getting exposed to this for the first time. So for those whom I've not yet had the pleasure to meet, my name is Rumi. And Rumi Morales, sometimes I forget that, sorry. And I have the lucky privilege of heading up CME Ventures, which is the venture capital arm of the CME Group. And one of our core investment areas since starting a little over 3 years ago has been in digital currency and blockchain or distributed ledger technologies. Some of our investments may be familiar to you. They include Ripple, Digital Asset Holdings, and Digital Currency Group, which in and of itself has investments in around 90 different companies at this point in this space, including some other names you may recognize like Coinbase and Circle and Abra and Align and so on and so forth. So, through these investments, CME has been one of the most prolific backers of blockchain companies amongst all financial institutions, and certainly the leading investor amongst exchanges across the world. I've also had the pleasure of being on the core internal team at the CME, and there are a few other of us here as well. During networking, I hope you have the chance to ask them some questions about our own commercial efforts as it relates to distributed ledger technologies and digital assets. Some of you may have heard, recently we launched a Bitcoin real-time index and reference rate. And just yesterday, for those who read the press release or the news articles, we announced that we are partnering with Britain's Royal Mint, which is part of Her Majesty's Treasury in the UK, to build and launch a digital gold offering, where users will have the ability to execute, settle, and trade gold using a blockchain-based system. And I'm happy to talk about that in more detail, but first, especially given a lot of the new faces here, I thought it might be just a little bit more helpful to speak about why I'm here talking, why I'm even here, right? And why I think it's probably the best thing in the entire world for you to be here too. And maybe even more importantly, what we can do together, or even our industries, but our community, here in the city of Chicago and Illinois, and all the opportunities before us going forward. So let me step back and just talk a little bit about Chicago, and for those of you familiar with the CME, and why is it that we're involved in this space, right? We've been around for a while. We've been around before the Civil War, actually. Just 15 years after Chicago was created, the Board of Trade was launched. And then in 1898, so that was an egg board of all things, which became in time the Chicago Mercantile Exchange. So for 170 years now, right, we've been innovating and innovating and innovating to become the largest exchange group in the world. And although, CME may not be a household name to everyone, certainly I think people know our products, right? Gold, oil, interest rates, and pork bellies once upon a time, and all the other types of futures and options contracts that are traded on one of our exchanges. And if you can think even most immediately, I loved this when this happened. I did and did not love it, but when around midnight when we realized that it was not going to be Hillary Clinton, who's the president-elect, but Donald Trump, what happened to the markets? Right? Remember that big precipitous drop? But whose markets were those? The stock exchanges closed. This is the futures markets, right? There's no opening bell for us. We are open all the time, most significant. There are reasons for this, most significantly because of technology, right? So because back in the day of open outcry or pit trading, this would not have been possible. You cannot be I don't think you can possibly be screaming at each other for 24 hours a day, 365 days a year. But the rise of new technologies has swiftly and ubiquitously made electronic trading possible, which quickly transformed our world. So from 1848 to say around 10, 15 years ago, we pretty much traded by shouting and flashing hand gestures to each other. But now today, the trading floor at the Merc is actually our electronic trading global command center. You won't find any flashing of the hands there. So my question is for all of you guys currently sitting and holding phones in your hands right now, right? Were you holding that same phone in your hand 10 to 15 years ago? Of course not, right? Probably even some of you weren't holding the same phone even a year ago. Technology is moving at such a blistering rate. And at CME, like any organization or any individual, we know that what is today will not be tomorrow. And if anything, tomorrow will arrive quicker than it did yesterday. Which is a weird thing to say. I wrote that line, and I hope it makes sense to you. It kind of made sense to me. So, we're looking to the future, from pit trading to electronic trading to digital trading, perhaps. So, as we think then, digital assets and blockchain and distributed ledger technologies. And, I'm not going to go right now into the details or the arguments of blockchain or DLT or private chains and so on and so forth. There'll be a number of panels talking about more that, going into detail about what this stuff is. But I just wanted to speak at a more higher level of why CME is choosing to focus on these, and then I think the relevance for the future at a general level of digital assets and the infrastructure upon which they can travel. So I mentioned before some of our products like gold and oil, and what's important to understand is that unlike a stock exchange, which is dependent on companies to issue their shares for their products, for futures exchanges we create our own contracts. Right? Gold is gold anywhere, like oil is oil anywhere. Why do they come to CME to trade it? Because our contracts, are the benchmarks to gain exposure, manage risks of these commodities, and provide the greatest liquidity. So if contracts are our lifeblood, you can understand why the creation of digital assets and so-called smart contracts, and there will be a panel on this, is of innate importance to us. And just as similarly, when you talk about the fact that blockchain or distributed ledgers claim to do away for the need of a trusted central counterparty, I think about our clearinghouse. Right? CME Clearing is today the trusted central counterparty, acting as a buyer to every seller and a seller to every buyer to ensure the financial security of the marketplace, handling $1 quadrillion of notional value every year. Right? 1 quadrillion is a word. Apparently, it's on our website, so I'll believe it. Are we thinking that blockchain is going to disrupt that? Or will it provide opportunities, more than that, to reach more buyers and sellers, provide greater certainty for new participants to manage their risk? And this is, for me, it's not a time will tell thing. Time is telling now. And I will say this, for everyone who asks, right, is blockchain an opportunity or a threat? My answer is, well, that question is kind of beside the point. Because if it's a threat and you do nothing, you're gone. But if it's an opportunity and you do nothing, you're gone, right? You just have to be in a position to execute, and you have to be able to act. So, and I apologize about speaking so specifically about the CME for the past few minutes here. But what I want to emphasize is whether you're a 107-year-old institution like us, or even a 1,000-year-old institution like the Royal Mint, or any number of established institutions that are incredibly aggressive in this space right now, like IBM, or Accenture, or JP Morgan, or Hitachi, the time is now. This isn't just a newfangled technology for startups. This is for everyone and for all the established institutions right now, I'm specifically talking with you. And I would also say about those established institutions, there are many here in Illinois who have long-lasting and established businesses. So be in a position to act, right? Be ready. Now, I'm sure you're wondering, and I even wonder myself sometimes, well, ready for what exactly? I think we all get the general theory behind the value of digital currency and distributed ledgers, but how is it so obviously better than what we have today? I could take my phone and pay for my Starbucks coffee, right, or do all my online banking on my iPhone. So, what is Bitcoin? What is Bitcoin really changing? Or what is the value of blockchain to me? So this kind of goes to the second point of why I think the best thing in the world is for you to be here today. Although you are seeing some emerging use cases and proofs of concept with much of blockchain, a lot of the world is still experimenting and exploring the protocols that are out there. So is it the Bitcoin blockchain, right? Is it Ethereum? Or Ripple's ledger, or Chain's chain, or Bank chain, or any hybrid chain, and so on and so forth. We are still in the world, I believe, of the P, right? The protocol. And what we are trying to seek on a massive scale now is how that P will have applicability for all of us. As you think of TCP/IP, right, which became the Internet's communications protocol, or HTTP for the web browser, SMTP for email, right? The blockchain's P, that big reveal will hopefully be something created by you, maybe, right? We hear this often at blockchain conferences. What is the killer app? What is the killer app for this? Is it here yet? For those of you who remember Napster, you remember Napster maybe, right? Some college kid named Sean Fanning basically used a P, right? A file transfer protocol to create a platform that forever altered the recording industry and eventually paved the way for the transfer of digital media by the masses in the form of iTunes, right? So who among you, for example, will pave the way to transfer digital value, not digital media anymore, but a sort of value, in the easiest, most obvious way, right? Who among you will make it easy for grandma to use Bitcoin, right? In a way that'll make sense for her. For your dad to record ownership of his house on the blockchain. For you to make sure that every photo you post on Facebook is owned by you. And anytime anyone shares that photo, you get a digital micropayment because that is your intellectual property. You took that photo, it's your face, right? Who will ensure that a drone delivering an Amazon package will receive a settled payment the minute it is delivered to your blinged out drone pad on your multi-million-dollar mansion in Bel Air, right? Because we're dreaming big here, right? So for all the wish that is blockchain and how fast this all could change, the truth is this is still nascent. There is a lot of opportunity to be discovered. And you have the opportunity to make something revolutionary on a smaller scale right now, much more revelatory on a large scale. Just like the internet in the 1990s, there is unforeseeable opportunity here. Facebook was launched when, right? Uber was launched when? Not in the 1990s, when there was the boom of .com and so on and so forth. So the development of blockchain will take time. So just be thoughtful in where it can be most useful and most applicable. But just like my comment about institutions, put yourself in a position to act. Be ready to act. Which then kind of leads me to my third final message for you all, which is, from the traditional institutions to the big dreaming individuals, we have the opportunity to work together, corporations and entrepreneurs, to have blockchain transform our communities. As the internet created untold millions of companies and jobs, where will blockchain lead us? And how will we best get there? If you think about Chicago, this city has touched just about every financial innovation imaginable. How we transact and trade has many of its roots just within a few blocks from here. The first IPO, volatility indices, electronic trading, algorithmic trading, these are just a few of the things that either started or grew substantially here in Chicago. Virtually every financial innovation of the last 150 years has had some connection to this city. So that being the case, why on earth doesn't Chicago have more blockchain and Bitcoin startups that are based here? Let's be honest with ourselves. Now, obviously, there are some great people and companies here trying great things in this space, and you're going to hear from a number of them today. But with Chicago's place as a financial center, and with our city's history as a financial technology innovator, it makes perfect sense that we should be the hub for blockchain companies and not an outlier. Now, the good news is that there is a great opportunity to work together to play a larger role, and we can establish an infrastructure for Bitcoin and blockchain firms to thrive here. There's an opportunity for Illinois to say to blockchain firms, we welcome you here, because we have everything going for us. The financial history of the city created a natural ecosystem of firms that operate in different areas. There's an established industry here that could support blockchain technologies if more of us started them. If more of us started these companies and if more firms invested in the blockchain. Now, it makes sense at this time when states are staking their positions on blockchain that Illinois sees this opportunity to be a leader in welcoming more firms. Because, what are examples of what other states have done? And some of you may be familiar with New York and their bit license regulation that actually drove tens of Bitcoin exchanges out of the state, right? More than 20 digital currency companies are still waiting for this approval, more than a year after the regulation was finalized. And this is a state itself that has a proud financial history. one that has welcomed financial innovation in the past. And yet today, their regulatory framework is making news for the wrong reasons. But for a different example, like look to Delaware. Delaware. Earlier this year, the state's governor announced a blockchain initiative that would recognize distributed ledgers, shares, and embrace smart contracts. Companies in the state can work with blockchain firms to store records on the blockchain. And part of the plan even has the state partnering with a blockchain startup to archive some state records. But like I said, Delaware? I mean, seriously? They've got a bridge, right? If you remember from Wayne's World, it was like, there's a bridge, basically. But we are the 5th most populous state in the nation, right? With a legacy of financial innovation, as I've been harping upon, right? And we've got the Cubs now, which is a good thing, right? I mean, we have the right to win, and we just have to play ball. So, encourage blockchain firms to bring their businesses to Illinois or start them up here, right? Nurture the entrepreneurs who will bring the next great advancements here. All the would-be Sean Fannings who can make those killer blockchain apps, right? Campaign for sensible, welcoming policies and regulations so that Chicago can reassume its historic mantle as a financial technology capital of the world, right? So go out, build the jobs, bring the Bitcoin, realize the opportunity here together, block by block, and chain by chain. I had to say that. Okay, so I'm really looking forward to our panels today and learning from all of you. We're really very excited about all the possibilities here before us. Be in a position to act, be inspired. We're only just getting started. Thank you very much.
Thank you.
Now, while we get our panel set up, if I could have a show of hands, how many of you are in finance? Quite a few. How many of you work in government? Quite a few. How many of you work, let's say, in large enterprise firms or tech companies? Good. How many of you are students, academics? We all are. But how many of you have startups in the space that are generating revenue? Okay, yeah. So you kind of get a feel for who's in the room. It's a pretty good mix. So Susan, if you want to come up and introduce yourself, and then if you want to let the panelists introduce themselves, I think you probably do the moderating here, and then we have space for them there.
Good morning, everyone. Great to be back in my hometown of Chicago. Thanks, everyone, for attending. I'm going to be that annoying person who says, there's seats in front, but if you guys want to just, everyone kind of pause, and people in the back, there's seats near the front, in the middle. We'd love to have you sit down and enjoy the event if you'd like to. So if our panelists could make their way to the front, which I see is happening. While they're doing that, welcome everyone. My name is Susan Poole, and I've been in this space of initially Bitcoin and blockchain for 2.5 years, or actually longer than that, which is kind of crazy, it seems like. I got into this space with Bitcoin, been in the technology industry forever, and I kind of missed the internet, kind of snuck by me. Facebook kept going, all these apps came out, and here I was in the traditional software industry. So when I found out about Bitcoin, I just got into it to help change the world and get the unbanked banked. And boy, I thought that was just going to happen so quickly and be easy, and now I had a personal passion with my work life, and that was going to be great. And it's a little bit harder than that, although the adoption now is just fantastic. Then I kind of morphed into blockchain, which is tied a bit more, I guess, to my traditional background. Last thing I'll say is currently I'm founder of a company called Blockbridge Advisory, and I work with consulting and advisory for startups launching into this space. So I'd like to introduce our panelists, and what we're going to talk about today, it's really a state of the industry panel. So we have a really great group of panelists with very different backgrounds. I'm going to ask each of them to introduce themselves, and then we'll get started. Bobby, do you want to start?
Sure. My name is Bobby Cho. I'm a digital currency trader at DRW/Cumberland Mining. Cumberland Mining is a subsidiary of DRW Trading, obviously a well-known principal trading firm here in Chicago. We're the leading liquidity provider in the Bitcoin space. And what that means is we work with exchanges, wallet providers, brokers, ATM companies by providing liquidity to them. Our bread and butter is really OTC, large block, institutional size trading. So anybody that's looking to trade a large amount of Bitcoin is coming to us to trade.
Hi everyone, my name is Brad. I run a company called Muti, which I'll present later, and we're focusing on digital identities in the blockchain space. My background's in tech and finance before moving into blockchain, so I have some unique insights to those industries.
Hi everyone, my name is Stone Vase. I'm actually taking the place of Mark Grins, who's I guess running a little bit late. And I come from traditional finance industry. I was working at Bear Stearns as my first job on finance. I was there during the collapse, moved on to JP Morgan, was a VP there. Worked at a few other financial firms on Wall Street. And I kind of got involved in the Bitcoin space in early 2013. I quit my job about 2 years ago, and now I just independently trade traditional finance and travel and consult and do blogs and try to explain this technology and where the innovation is.
Hey everybody, I'm Hudson Jameson. I've been working with blockchain since 2011 and then spent 2 years, I guess, between 2014 and 2016 jump-starting USAA's blockchain initiative. Now I work for the Ethereum Foundation as DevOps, communications, smart contract developer, kind of a lot of hats because it's a nonprofit. So yeah, I'm really enjoying my time there, and the Ethereum Foundation, if you guys aren't aware, is a nonprofit in Switzerland who helps with advocacy and education and some of the development around the Ethereum protocol. We have some of the main Ethereum clients kind of under our name, and we do our best to kind of spread the word about distributed ledger technologies and help people understand how they can better integrate Ethereum.
Thank you, everyone. So basically, the state of the industry, well, we've got Bitcoin, which runs on a public blockchain. We've got private and permissioned blockchains. We have Ethereum as well, and we have things called altcoins and colored coins and all kinds of different things going on. We have the excitement of new conferences like this one in Chicago, and then we have a couple large naysayers who are saying, oh, blockchain's kind of peaked, but you know, that's what they said about the internet, so who cares? That's not actually true at all. So I'd like to start out, I'm just going to start off with Bobby. So Bobby, you're trading digital currency, and you know, I have people say to me all the time, you know, Bitcoin got hacked, which is never true, but some exchanges, banking type exchanges of Bitcoin have been hacked. There's a lot of misinformation, but basically with what you're doing, Bobby, every day, what is the state of the industry in digital currency, trading, volumes, etc.?
Yeah, I think it's important to note exactly what you had said, Susan. Bitcoin did not get hacked, right? It was an exchange or exchanges in the past that have gotten hacked, or custodians of Bitcoins that have gotten hacked. I think there's a number of reasons for that. I think mostly around uniformity of regulatory policies and also best practices that the exchanges implement or have not implemented. But in terms of what we're seeing on the trading side of things, right, I think that you have two very separate things that are happening, right? One, you have macro events in both the financial and the overall global kind of economies that are happening, such as currency devaluations, people moving money out of China, things like that. Then you have events in very specific Bitcoin side of things, such as the halving that happened this summer, and other types of items that are happening. All of that is essentially colliding, and what you're seeing is a rise in market cap. So just this year alone, the market cap is up somewhere between 85 to 90% year over year. So things are definitely happening, and it's reflecting in the price. Whether you are seeing more money flowing from traditional capital markets into Bitcoin, it's being reflected right into the price. People are starting to take notice. Institutions in particular, traditional institutions in particular, are taking notice of, well, one, the significant rise in price, but also the value in Bitcoin. And I think what's gotten lost over the past year, let's call it 12 to 24 months, is the idea that people are still developing in Bitcoin. A lot of the conversation has gone into the underlying technology of Bitcoin, but essentially we see kind of a lot of movement happening in Bitcoin, and the price is obviously the main reflecting point.
Thanks, Bobby. And before we get into a little heavier on the blockchain side, I want to go over to Tone Vase. Tone, you're very well known in the industry and in the financial industry for your strong views and opinions.
Thank you.
And
Yes.
based upon facts, according to your blog, so about the other types of digital currencies out there. What can you tell us about the state of digital currencies?
I just want to pick up exactly where Bobby left off when he mentioned the underlying technology of Bitcoin being a blockchain. To me, the underlying technology of Bitcoin is a database. The innovation came with Satoshi's, the use of proof of work. And to me, that is the actual innovation. So when, anytime I hear, even on Wall Street, when people say, well, it's the underlying technology of Bitcoin, blockchain, that's going to be important, that's going to be useful. I take the other side of that and I'm saying, well, no, that's just a database. The innovation came with the proof of work, and that happens to be Bitcoin, and it created a way to give you cash on the internet, a better digital instrument for the digital age. And that is the innovation, and I think some of the most successful companies in this entire space in the last 5 to 7 years have been the companies that are utilizing it as such, as cash for the internet. And meanwhile, the actual underlying technology is just a database, and it's great that like the banks maybe are now talking to each other, and people are finding out what DTCC is and how trades are being cleared, and people are finally questioning, well, how come it takes a bank, 3 days or 7 days to clear a check? Why does that take so much time? And meanwhile, your email got to you in seconds in 1997. Why didn't your money get to you in seconds? Because the technology has always been the same. So that's the focus I take. As to briefly comment on other chains and other coins, this is where I guess people call me a Bitcoin maximalist, because I take that view one step further. And I say, well, if the mining algorithm of proof of work is the innovation, that needs to be secured by this burning of electricity. That's why it's able to do its job. And anyone competing with that will literally have to take over all of that investment that has gone into the Bitcoin mining system and then take it onto their coin. And it's hard for me to envision that happening, which is why a lot of these other proof of work initiatives are just can't really get very far, and they're switching to proof of stake, and I don't see much innovation there. I see that as older technology, and that's one of the reasons why I think there will only be one public blockchain, which is Bitcoin, just like we currently have only one internet.
Okay, thanks, Tone. Hudson, I see you over there nodding a bit. I don't know if you nodded with all of that or not, but what's happening with Ethereum?
Ethereum is trying to not necessarily be the public blockchain, as he was kind of referring to other coins are trying to compete with Ethereum. We see Ethereum as a complementary technology that expands upon some of the things that digital currency pioneered and some of the use cases that are harder to be accomplished by the smart contracts in Bitcoin. Like, if you want to do a smart contract in Bitcoin, it's possible, but it limits severely your use cases and it limits what you can do with it. Whereas systems like Ethereum, which have their own virtual, like globally distributed virtual machine, where everyone's running, these contracts, it really expands your use cases into things like much more easily trading assets at the bottom level, and then at the very top, having these advanced tracking and proof of existence systems and things like that. So, in my opinion, I think it's too early to declare that Bitcoin is going to be the main chain. I mean, it's only been around for about 5-6 years, something like that. And in that time, there's been so many innovations that have been overlooked. And just because something isn't perfected the first time doesn't mean that it's not an innovation, doesn't mean that it's not the root of something. So currently one of the biggest initiatives within Ethereum is research into proof of stake. Specifically, a lot of the driving reasons behind that is for efficiency and also to decrease the amount of electricity used for proof of work mining algorithms. So proof of stake isn't for everyone, and it's definitely not something that a lot of public chains are going to pick up on immediately just because it's so early. But I do see a lot of proof of stake being used in consortium chains, or even kind of offshoots of proof of stake, some round-robin formulas. So basically, you have a consortium chain of different companies. They all get together. They want to have a blockchain. They trust each other, but they're competitors, right? Like, you need to be able to exchange information, but and you want transparency, but you don't want to give everything away. So that's where alternatives to proof of work come in when you take away that level of needing to actually have proof of work on the system. You can have these alternative underlying protocols that help secure the network.
So Hudson, can I jump in and ask you, before I go to Brad, ask you just kind of a high-level statement question? You're with the Ethereum Foundation. So what is the position just in general regarding Ethereum ready for development, ready for production, the hard forks that are going on? A lot of people are not experts in those areas. What's the view of the Ethereum Foundation? Is it still being developed and so it's okay on the hard forks, or is it production ready, let's go build your business?
I would say that it is not necessarily production ready depending on your level of expertise. I would say that the recent hard forks actually showed a really, really excellent side to the Ethereum ecosystem. To kind of reiterate where Ethereum's at, the Ethereum Foundation itself is not the leader of Ethereum. We're not like, going in and calling the shots. It's a completely decentralized, group of developers who really just care about the technology. So for instance, the unintentional hard fork that happened last week that some of you might have read about, that happened because of just, one protocol implemented a network upgrade differently than another protocol. And it was something that, like, no one did it incorrectly. They just took different ways of doing the upgrade. And so when that happened, that caused the fork. But when that was occurring, the problem was identified within minutes. I was in the war room during that. It was identified, implemented across both clients. Multiple client teams were all in a chat room together fixing it. And it was coded, tested thoroughly on a test net and multiple other private implementations, and deployed with a blog post and multiple social media posts in 10 hours on Thanksgiving Day. So I think that shows that, even in a system like Ethereum where the development is decentralized across multiple people all around the world, every time zone, we have the systems in place to be able to quickly fix these problems on the public chain.
Okay, so last comment, because we have to move on, is what's your recommendation for people using Ethereum? Be prepared for that things will change?
Absolutely. We are going 100 miles an hour. Be prepared for things to change. Get used to the technology. Get accustomed to it, but be on top of the innovations that we're putting in, because this isn't something that's going to be more slow-moving and completely the same like Bitcoin over a number of years.
Okay, thank you. Now we're going to go to Brad. Brad, so you've had a company that's worked in the blockchain space, down in the trenches with the technology, and then also you've developed a company for digital identity. What's happening with digital identity related to blockchain technology?
Okay, good question. Thanks I'll pay you later. I think, so, what other panelists had discussed was talking about Bitcoin and cryptocurrencies, one from a financial and investment perspective, where there's a lot of opportunity and value there for investing, and then talking about the technology itself related to consensus. And this is, going back to like the creation of Bitcoin, like in 2009, 2010, and looking at how proof of work consensus allows us to do peer-to-peer clearance and clearing without going through a central counterparty, right? And In the financial world, that makes a ton of sense, to disrupt centralized clearing entities like the Federal Reserve or, the check clearinghouses, to make those processes faster. But we've been looking at, and I've been in the Bitcoin space from the beginning, and been looking at the technology. And one of the things that I identified that was missing in order for us to work within this framework and digital ecosystem is that digital identities that were compatible with blockchain technology were really missing from the picture. There's a lot of different efforts out there to develop a blockchain-based digital identity system that works, right? But currently in commercial production systems, most businesses take legacy identification and verification processes and kind of bootstrap them to make them digital. If you try to open a bank account online, it's very likely that they might ask you to fax over a copy of your driver's license or something. That's a very, very bad process from an OPSEC information security standpoint. And we can do a lot better than that with the kind of technology that's been available for years. It's essentially taking the cryptography aspects of the Bitcoin blockchain and applying those to a digital identification system and adding in the peer-to-peer component. So that's what we're focusing on. And I think it's very interesting. There's going to be a lot of other additional types of use cases for blockchain-based technology outside of currency. I think digital identity is a huge area for that. But I think in the next year or two, as this ecosystem starts to mature and people start to understand how the technology works, we're going to see a lot of other types of companies being built on top of this Bitcoin, Ethereum type of technology.
Thank you. So, Bobby, regarding state of the industry with trading in digital currencies, I guess I would say, what's happening? Is it institutional traders? Is it individuals? And what's it going to take for it to monumentally increase?
Yeah, I think that's a good question. I think what we've seen, and you mentioned this earlier, there's obviously a hack. Bitfinex was hacked this summer. What we've seen is a shift to OTC trading, right? So before, in order to trade a large amount of a Bitcoin or buy a large amount of Bitcoin or sell a large amount of Bitcoin, you need to actually hold your assets with, let's call them a custodian. So you'd have to send them dollars or you'd have to send them Bitcoin, and they'd have to hold that for you in an account. What we've seen is a shift to OTC trading in terms of a post-trade type of settlement. And that's obviously what we specialize at Cumberland Mining. And that has been kind of a leading thing that we've seen since that event and has only grown over the past few months. In terms of the profiles of the folks that are essentially trading, I'd say there's definitely a cross between large institutions that are looking to either build a position in Bitcoin or actively start to trade it. It's a highly competitive environment, and I think one of the reasons that Cumberland Mining and DRW decided to get into the business was, and this was back in, let's call it 2013, 2014, was that we wanted to set up shop prior to that inflection point, right? So sit in between the financial markets and the financial world, let's call it the traditional capital markets, and the Bitcoin or the crypto world, right? To be a trusted counterparty to every single trade. And so I'd say what we've noticed is a lot of folks have carved out an allocation, whether it's in a commodities type of form, to actually slice out a piece for Bitcoin. And as Rumi had mentioned earlier, if you are not paying attention to these types of innovations, in particular Bitcoin, and obviously for the savvy investor, then this thing is going to pass you by essentially. And so I'd say that's kind of what we've seen.
Okay, that's got everybody's attention there at the end. Do not let it pass you by. Tone, this is going to be an open question for you on state of the industry because you cover a lot of areas. You come from the financial industry. You have strong views on blockchains and Bitcoin, etc. So what's happening in your world?
No, that's actually great that you left it open-ended. I just want to try to quickly...
This is always the interesting panel.
Walk through, what happened was Bitcoin stirred something in people's heads, I guess. And one of the biggest reasons is because of the price appreciation, and they saw how people got rich for taking this crazy risk early on. But that is also what led, these are just some of the things that made Bitcoin succeed that were unpredictable because for the first year or two of Bitcoin's existence, it didn't really have any value. So it allowed people to just play around and develop and see how it goes. And yes, a few people accumulated Bitcoins, the famous ones like Roger Ver and then like Charlie Shrem. So a few people were in it early and held on to them, but the majority of it got to spread around the world as the inflation was fairly high in the first 3 to 4 years. By the time the world caught on to Bitcoin, half of it was already in existence and somewhat spread around the world. And many other, in that particular industry, tried to replicate this, and I didn't think anybody was successful. I mean, Litecoin might have been successful for like a few months when it hit 50 and then it fell. So then Ethereum came in, and Ethereum did something very, very different, and I was very, very critical. Ethereum was the first successful ICO. They sold their digital token.
ICO?
Initial coin offering, which was like the digital version of an IPO. And to me, they sold a digital token that didn't even exist. They sold it 1 year before the platform was built because they needed money. And I saw this as, again, I come from a financial space, and I immediately saw this, wait a minute, you can't do this. Like, I hate regulation as much as the next guy. I speak at anarchist conferences, but this is when I realized, well, wait a minute, I'm really against KYC AML regulation because I want people to be treated, I want people's money to be treated like property. But I want companies to be accountable. You can't just raise a bunch of money and disappear. And Ethereum did take in a bunch of money. They didn't even have a token. They created it a year later. Then it went to market. So to me, Ethereum was like the exception to the rule because they actually launched. And like 6 months to a year later, it actually went up in price and people ended up getting rich on Ethereum. And now that opened up the door for all these other companies like, well, we can do the same as Ethereum. And no one has been able to replicate that. I think you would agree with that. And a lot of them are people just taking in money and everyone leaves the project, which was another criticism I had of Ethereum. Out of the 8 co-founders, only 1 remained, and that was Vitalik. Everybody else immediately kind of left and started other projects.
Okay, so
can you wrap that kind of morphed, and so this is kind of where I see it. I'm going to just finish up real quick.
Okay.
I don't know where that's going to lead next, but I don't see ICOs as continuing. I think the regulation will be coming down because Satoshi did something else that was smart. No one knows who he is. While in these ICOs, in order for you to promote it, you have to be now visible. You can't do what he did. It's very hard to replicate. But the financial technology is using the database aspect of it to just try to get people together. So that's kind of my general view of the state of the crypto industry.
Okay, and before I go to Hudson, I'm going to pop over to Brad. Brad, so again, you talked a little bit about digital identity, but you've worked in multiple blockchain projects in the world. What's the state of the industry from a digital currency? And let me just interrupt myself for a moment. We're talking quite a bit about, in the opening panel, about digital currency and blockchain. It's great to get that base foundation. So we will be talking more about smart contracts and assets and all that. So just to let you know, the focus will be very diverse today. Brad.
Yeah, sure. Actually, Bob, I had a question for you. What do you guys actually trade at Cumberland? Is it just the Bitcoin and Ethereum, or you guys trade all the altcoins?
We mainly trade Bitcoin. That's where we've seen most of the activity. That's where I would say large institutional size trading is occurring. And that's kind of feedback.
Okay, cool. So, I've been in the space for a while. Actually, I left banking in 2010. I worked at Deutsche Bank. I traded a global emerging market portfolio through the crash until 2008, for which we got a text from our CEO saying to close the books. And then I moved to private equity for a couple of years. I left in 2010. I got into Bitcoin then. So I really do have some unique insights on the financial side. It's very interesting. I think, we talked about market cap. These guys alluded to the fact that Bitcoin as a whole from a financial perspective has gone up maybe, 80% this year in terms of valuation. And that, at this point in time, like 75% of all the Bitcoins have been mined that are ever going to be created. And so we're kind of tailing off into so diminishing marginal returns on the mining side. So in order for that equation to sort of, be in equilibrium with itself, the price naturally has to go up on the Bitcoin side. It's a very interesting type of supply and demand dynamic there. But what I'm also seeing at the very low levels, and Tone mentioned ICOs for like Ethereum, there's a ton of other stuff happening in this ecosystem that's not Bitcoin and Ethereum, or that there's sub-projects of Bitcoin and Ethereum running on similar or offshoots of the technology, and we can't ignore those. In fact, if you were to open an investment portfolio and just put your money in Bitcoin, sure, nobody's going to scoff at 80% returns, but if you looked at some of the other types of investments you could have made in the altcoin space or alternative new assets using either Ethereum smart contract technology or developing their own technology, I mean, you're looking at 1,000% returns this year in probably 10, maybe at least 10 different assets that you could have been in. So when you compare the growth of the industry in general, we always think about Bitcoin and Ethereum from a trading and liquidity perspective, but the innovation is really, really happening in the trenches at a lower level, and there's a lot of things that you need to be aware of. Now, that's pretty deep into the rabbit hole, so I'm not sure how far you guys want to go there.
Good,
But, yeah.
So,
I would disagree with that, but we don't have time to debate the topic.
Okay.
I'd love to debate you.
I'm sure people will grab you guys up after this event. So Hudson, I'd like to just wrap up with a final question to you. Ethereum has major companies such as Microsoft working to develop and making major commitments to the Ethereum platform. You've got Consensus spinning off a bunch of companies. So where do you see Ethereum going, and where it is today, and where's it going, and what would you recommend to people that want to develop on Ethereum? And we'll leave it with that last question.
Sure, thank you. So where I see Ethereum right now, it's in a very formative stage still. We launched our blockchain a year ago. As he mentioned, we did have a type of money-raising event to pre-distribute the tokens before the network fully launched, and we still have a mining algorithm, but that was more of we had to put it on there because we didn't have proof of stake fully fleshed out yet. So aside from all that, aside from all the stuff about the price, the thing that strikes me the most about Ethereum and the people in the trenches, as was mentioned, developing Ethereum, is price isn't the biggest motivating factor. It's really a lot of the ideals behind this open, distributed, transparent world. A lot of it's censorship resistant, and Ethereum's not really being developed to be any kind of mass moneymaker or mass asset transfer system. What it's there for and is for the innovation behind it, and eventually there's going to be this culmination of different blockchains all interacting with each other, and I think Ethereum is going to be on the forefront of that. Right now, if you want to interact with Ethereum, there are multiple ways to get involved as far as learning some of the smart contract programming languages, building a few dApps or distributed apps just internally. I know a lot of banks and financial institutions are doing that, but there's also supply chain tracking, healthcare, government, voting. There's just so many applications that it's just really valuable if you just jump in now and start playing with it. Some of you with the less strenuous use cases, the less regulatory wrapped use cases, can really get things going immediately, especially if it's a consortium chain. Thinking back to the internet, not every company was connected to the internet when it first started. It was a lot of intranets, and then eventually there was a bridge, and there was technology for the intranets to connect to the internet. So to me, it's like we're just kind of waiting for that technology to come about. There's actually been a lot of positive things I've seen in the Ethereum ecosystem, and a lot of the stuff that he mentioned that seemed more, negative, there's going to be that in any company and any organization.
Okay, so we'll probably have to wrap up. We're out of time.
One quick comment on smart contracts.
We'll be doing a whole smart contracts panel as well, but yeah.
Just one quick comment. The only issue that I have with smart contracts is I don't understand the need for them to be decentralized, because I don't see contracts as being generally censored.
Okay, so let's have that question for the panel.
I'll remember that.
We'll leave it out there. Yeah, please. That's a great question. Well, thank you, everyone. Let's thank our panelists, and we'll get ready for the next panel now.
And up next, we're going to be looking at tokenization of assets, because obviously with Bitcoin it is digital, but when you take things like gold, you need to digitize it, and then you also need to have rules in place for it to move and for it to be bound by those movements. So we're going to look at the tokenization of assets, which is something that you need in order to get to that next level. First, Lawrence from Morningstar is going to share some insights, and then we'll get the panel up. I'm just going to load up his slides up for a second. But if you want to grab the microphone and do a quick intro, and then I'll have you up in about 45 seconds. Yeah, I'm just moving it over now. If you want to start saying who you are by the time you're done, I will have it.
We definitely have seats up in the front, so you're welcome to go back and get a pastry or something, but please come up and enjoy the event from closer to the front of the room if you'd like.
Yes, that was a Kung Fu Panda.
Good morning. My name is Lawrence Johnson. I am head of retirement plan intelligence at Morningstar. I joined Morningstar 6 months ago. I was heading a company called Right Pond that was acquired by Morningstar. And I've been charged with leading all fintech and blockchain initiatives. My career ranges from working for IBM, practicing law in the area of securities law. So the notion of assets in the financial markets is something very exciting for me. The progress of blockchain in the financial markets and capital markets is quite remarkable. In a very short period of time, financial institutions, major financial players in multiple jurisdictions around the world have been able to go from learning how to spell cryptography to building out initiatives that are quite impressive. They, just a few months ago, they were coming out with lofty statements like these, which were tentative, inspirational statements, to building out a series of, where am I going? Oh, there we go. Sorry about all these flags. They're not right. So they went from tinkering with these new technologies to building out a series of very exciting applications and products. And we're going to be going through all this. I know I only have about 4 minutes, so I decided to summarize everything in 4 to 5 slides. And I walk through that, and I also know that I need to share this panel with other players here. So the basic lessons here is that we went from thinking that there was a lot of opportunity inside of blockchain to actually building programs and making it happen. When you look at the capital markets, the focus has been essentially at solving some basic problems. This is not a tale of disruption, it's a tale of solving problems that they have, not creating new products, not creating new business models. These problems were specific, and they looked to address mostly back office issues relating to settlement, as well as preparing the foundation to address new regulations that were being announced by different regulators that were deemed to cut into their margins. So blockchain was seen as a proper platform to be able to deliver on these new programs. So when we look at the extent of the benefits associated with blockchain, the most important focus for capital institutions is the notion of saving costs and efficiency. It's not about transparency necessarily or speed, it is about saving money. When you look at all of these programs that were built together, we could see that a number of these financial institutions got together and saw an opportunity of applying the best lessons gleaned from the cryptocurrency experiences. They saw also an opportunity for them to come in influence certain standards that we're going to be used in industry, protocols, favorite technologies, and in essence, a lot of would say that they were really keen on making sure that they could protect their monopolies. And that's one of the reasons why sometimes it's going to be a struggle for non-incumbent startups to come in and emerge into this sector. The other important part about this is that they've also learned to collaborate. They've learned to sit at a table, a number of competitors sit at a table and learn how to work together, and also develop programs and products, and learn how to share the cost of developing and maintaining large, expensive platforms. The challenges that are ahead are still monumental, both in regard to technology, the legal, regulatory, but now we're starting to see a number of very interesting responses and solutions emerge and bubble up. For instance, just a few days ago, the FCA in the UK announced the first cohort of companies that will be participating in their sandbox. The sandbox is a special arrangement pursuant to which smaller companies can basically go and test certain assumptions relating to products in a relaxed regulatory environment. What's also fascinating is that the FCA was able to create this schema and also enter into agreements with a number of jurisdictions, including Australia, Singapore, Hong Kong, Israel, Japan, and a number of other countries, I should say. And once these companies are cleared in any one of these jurisdictions, they will automatically be fast-tracked to be accepted in the other jurisdictions. So out of this cohort of 24 companies that were received in the sandbox, 9 of them were focused on blockchain. So that's very impressive. We will remember that regulators are quite excited about blockchain because for the first time they are being afforded a chance to be a participant in a network and be afforded a view in real time of what's happening in specific markets and with different products. I should also mention here, the responses also include a number of very strong and robust platforms that are being announced by a number of players, including Chain, IBM, Hyperledger, that we all need to take into account. And they are basically systematically addressing in private networks a number of the issues that had been exposed through in the cryptocurrency space. Finally, when we're looking to apply blockchain, it's really a question of trade-offs. We all know that blockchain is really, there's nothing really new about the technologies associated with blockchain. The beauty and the cleverness of blockchain is the manner in which all of these components or these building blocks are stacked one on top of the other. So it's always a question of trade-offs. And these trade-offs are basically bringing about new types of opportunities and new types of challenges. And when you work in a private setting where you can basically invite a limited number of people at the table to organize these solutions, it is much faster to come to a resolution. And I think we can talk about next opportunities later on this afternoon. So I just want to speak to what's happening in the capital markets.
Let's do a round of applause. Well, don't be
If we can get our other panelists in the tokenization of assets panel. Now, this one we'd like a bit more audience interaction, so I'll sit up here and do some moderating, but the questions will come from you. So if you guys want to, so the topic is the tokenization of assets, and obviously what we mean by that is how do you make things digital in order to fit through that digital funnel, and then how do you get the regulatory backing to make these things legit? If you buy digital gold, is it in fact digital gold? Is it held somewhere? How do you digitize that asset? Same thing with land titles and that sort of thing, because that's the next step. You need to digitize these things in order to speed them up, but you need the legal framework. So we're looking at how the tokenization of assets, where it is, where it's coming, if it's even a thing. So if you guys want to introduce yourself briefly and maybe just say, you know, 1 or 2 sentence thing on what you think is happening, because obviously we could take a number of different directions, and then we'll take it from there. We can ask questions amongst ourselves as well to keep the conversation going, as well as from the audience. So, do you want to start?
Yeah, so hi, I'm Peter Bora. My background is in web development and that sort of thing. 2 years ago, I read the Ethereum white paper and got excited about possibilities for programmable money. So I've been working full-time in the Ethereum space as a smart contract programmer for about 2 years. I work for a company right now called Onage. We're doing digital game assets on the blockchain. So the simplest use case is licenses for games, but then also interested in magic swords and all of the other things that players of games might be interested in owning in some meaningful sense. I think what blockchain gives you is the capability to deal with ownership of digital property in a way that is actually like tangible and real, and has real security, real ability for the user to actually own it. And I think we're seeing the platform that I'm building, that other people, the other things other people are building, are really starting to push that technology forward, and I think there's a long way to go. I think it'll be exciting.
Oh, hi, I'm Jamie Smith, and I do not make digital swords. So I am the global head of communications and marketing for a company called the Bitfury Group. We're the largest leading blockchain technology company in the world. We do mining, hardware, software, consulting, and analytics. And I am a strange, different kind of being in this space. I started a year ago. I'm formerly Deputy White House Press Secretary. I've worked in the government and in politics for over 20 years, or about 20 years. And all of a sudden, this captured my attention. And when I first heard about it, I thought it was criminal money, and that it should, and that it was bad. And then over about a 3-4 month period, which I can clock because I was on maternity leave, I focused entirely on reading about this and really was blown away. And I think I sort of went through the arc that a lot of people go through, of first having a lot of misinformation, then having a little bit of an aha moment, and then having like a, whoa, this is actually way bigger than just finance. And the asset tokenization piece is what really blew my mind. You know, I will always come from a mental space of wanting to see how technology can make the world a better place, and I think in this particular instance, the finance piece already is going to change the world. But the beyond finance piece is just totally captivating. And if I may just take 20 seconds, I have gone to a number of conferences over the years, or the year, and I'm assuming that if you're sitting in this building at, on a Wednesday, you probably understand how this works. But for the one person in the room who may not, the way that I like to understand it is that I see the blockchain as like the train track between you and me. The car on top of it is the Bitcoin, and people are putting money inside that Bitcoin and sending it to each other, but you can really, why does it have to just be money? It can be anything, and that's the beyond finance piece. So part of our company has actually created what we call the Blockchain Trust Accelerator, and we're exploring various pilot projects to test the potential of the beyond finance piece for global good. And so we have the land titling project with Hernando de Soto and others in the Republic of Georgia. And in the next month, we're going to announce a number of other projects that we're launching.
Hi, John Merkovic, Deputy Recorder of Communications and IT for the Cook County Recorder of Deeds. I've been at that office for about 4 years. Before that, I worked in Springfield for the Speaker of the House as a communications and committee staffer. So I've been in government also for about 15 years. And the Recorder of Deeds is a land office, so my interest in this came from learning about, not just the blockchain and Bitcoin, but, smart contracts. And, Tone mentioned earlier the technological innovation is proof of work, and that, I think that is true. I'm interested in sort of the social innovation also, because government is about humans working together. And, so my approach is working towards, human-centered transactions, not the singularity, not AI and all that. And, I think that the real social innovation is non-repudiation. It's the idea that we can enter into agreements and we can reduce a lot of friction by just simply agreeing that we're going to do something and then having the technology assure that that gets done, and where we can get to as as an economy and as a country when we start to strip away litigation and due diligence and things like that. Our goal of our office has always been to make real estate more simple to understand. And when you look at a property transfer, there may be 25 steps, 5 different offices you need to check to. So you think about your deed as a token for your house, right? If you want to trade a house, we had to create something that allows us to give that right to somebody else. That's based in the government, and it's based on the government saying that the legal description of the property is really fundamental. And where I'm looking at it is with tokenization, Bitcoin and blockchain works perfectly for numbers and mathematical logic. It's great to say I have 1 and then I give it to you, and now I have 0 and you have 1. It works perfect for that. But there are limitations in just the amount of information that can be transmitted in a Bitcoin or blockchain transaction. So I'm looking at it from both ways. Do we strip down the real estate transaction to a bunch of numbers? Maybe that would make it easier, but it would probably make it less understandable to the regular people. And then it would allow more middlemen to proliferate, because now you're more dependent on lawyers. You're dependent on people to help you access your own public records to see if a property is conveyable. So, what we're talking about, tokenization is a language, and we all have to agree on the translation of the token. It's a metaphor. You can't do a one-to-one, transmission through tokens. It's just, it's against the definition of a token. So, that's the way that we're looking at it, and we're excited about smart contracts, the ability to lock, the transfer of real estate behind a public key infrastructure. Right now, I could mail in a deed and not even identify who I am, and I could steal your house on paper. I could dump strip your equity out and fly to Mexico, and then by the time you found out, it's too late. So, once you start to understand that and how important, real estate is, and that there is a lot of information that needs to be transmitted. Legal description of a property could be 3 pages long. How do you get that data into a token? So that's the way we're looking at it at the recorder's office from the the taxpayer customer standpoint. How do we make this easier and empower people?
I did my bit.
We thought you were the moderator.
So, how many of you have heard of a tally stick? The original immutable distributed ledger. It was basically 1,000-year-old technology. You take a stick, you cut some notches in it. Let's say it represents debt or ownership. You cut it in half. One party keeps a bit, the other party keeps the other bit. And if somebody forges it, you'd need to actually be really good at stick carving, and you need to be able to get the other stick as well in order to make it a perfect transaction. So that was the first interaction. Then you had it go to paper, which we're still in paper with some technology. Now, I'll ask the question to John. Now, do you see this the next iteration of it being blockchain, or do you think this is a preliminary step into something else?
I think the idea of the distributed record keeping for government, I think that is going to be the next thing, and I don't know I can't imagine what could be next after that. But the idea of just going from client server storage model of land records to one that for example, imagine every county in Illinois, 102 of them as a node, and if one office burned down, you wouldn't lose those records. It's sort of a dirty secret in the land records industry how unprotected most offices are. The most rural offices sometimes have the most valuable property. So some of your least technologically advanced offices in the country, might be surrounded by $20 million farms. So you imagine a farmer that has 1,000 acres with legal descriptions and all sorts of parcels. All that data being lost. That's a travesty. So I think the distributed nature of the block, of a blockchain is a better way of doing it, and especially with smart contracts being able to start to consolidate some of these functions like escrow into the government offices. That's going to be better for banks. They're going to, the transaction's not going to happen unless the previous lien gets paid off and the new lien gets added on in an atomic smart contract. So I think it's the future of, I hope it's the future of doing business everywhere in every way.
And from the audience, any questions for the team? Yep.
So it's interesting we have two government kind of folks on this panel. So a lot of the discussion at the previous panel and even the notion of asset tokenization that could move digitally, there are a lot of players, not just attorneys, that benefit from the imperfect nature of transaction settlement or the trading of assets. Big industries, I mean multi-billion-dollar industries, and do you think these folks are going to just sort of like roll over and say, I'll no longer write title insurance, or I'll no longer provide coverage on an open transaction? So I'm interested in sort of the public policy.
It's a really good question. I mean, I think as somebody who spent a lot of time working with the news industry, I saw a lot of outlets over the last 15 years figure out what they were going to do, probably 10 years, about this crazy social media thing, right? Some tried to ignore it, some tried to kill it, and then others decided that they were going to create entirely new outlets to maximize on it. I see a lot of similarities with this technology. I think that there are a number of industries that, whatever they're publicly saying, they know that their business models are antiquated, and they know that they need to update them, and they know this exists and it's not going away. So whether they fight it or not and how they fight it totally remains to be seen. I do think there is a really powerful force also moving, which is that John McCain often says that the approval ratings of politicians are somewhere between margin of error and blood relatives, right? So you are looking at just an entire industry of policymakers, politicians, government workers who have terrible approval ratings, so they're in a position to try new things. And even if their approval ratings are a little higher, a lot of governments around the world are just really interested in being an innovative, productive government that wants to try new things. I know that people probably don't spend a lot of time on their daily basis thinking about Estonia, but if you're familiar with that country, they have, last I checked, about a 23% extra average of approval over the EU average, because they're using innovative technological approaches. And in fact, the outgoing president of Estonia and I are chairing the World Economic Forum's Future Council on blockchain, and he was picked for that very reason, is because there are so many things that governments can be doing. And the last thing I'll say is that the Republic of Georgia probably sounds pretty random to all of you too, but you have an innovative government. They've made a lot of changes over the years to try and be extremely productive in the world. And the World Bank ranks them number 3 in the world for land title records. It's probably something that people don't know, but putting bad information in a blockchain system is not a good idea. So you want to go to parts of the world where there is political will, there's an innovative sort of general philosophy of the government in place, whether it's in a small town in South Carolina or the Republic of Georgia or wherever, and you need good records.
Yeah, I think this is a better way of doing things, not just a different way. And I think you can only fight that for so long. And yeah, sure, there will be people that fight it, but the Goldman Sachs blockchain report has a really great section on land titles, showing just title insurance is just very labor intensive. That's where a lot of the expenses are. It shows a path forward for reducing the cost of title insurance by $870 per policy, while still allowing title companies to preserve their profit margins. Title insurance is pretty rare in the world. Will it be necessary if a property is locked with public key infrastructure? Maybe still, just to protect on human error to a small percentage, but that will shift title insurance to actually being based on actuarial data rather than just recouping expenses. So I think it is a better way, and to what Jamie said, this is the ultimate good government here. This is government saying, I'm willing to build a system that even I can't corrupt. So I think that...
It's a good message. We're message people. It's a good message.
Yeah, and that's sort of what I like. We get attacked by nation-state hackers every day in my office. Our data is worth millions of dollars, and right now, if you kidnapped me and or kidnapped my family and told me that I had to make your mortgage go away or you kill my family, guess what? I'm going to make your mortgage go away. But under a blockchain, I would just be able to say, you know what, you're going to have to kill my family and you're going to have to kill me because I can't delete your mortgage. So
We don't encourage that, by the way. So.
Please don't anyone kidnap my family after this.
I would like, I'd like to just say one other thing, which is when you hear you talk about the system, we're all proud Americans, those of us who are American in this room, and we think our country runs sort of well, I think, but really there's a lot of things that don't work very well. And if you talk to people from the rest of the world, it's a mess. And I think that it's fair to say, and I'm just making the statistic up, though no one has challenged me on it, that 60 to 70% of the world's population lives under pretty broken, if not friction-filled systems. Doing stuff is just hard. And there are certain levels of frustration that we're seeing all over the world. There are people who are unemployed, who are just generally annoyed. And I think that this system is not, I worry about the people who offer kind of this panacea about this technology. I think we all need to be careful of that. But it is a very new, very exciting tool in the toolbox that I think a lot of people have been waiting for, and I sort of think of it sometimes as like the missing piece of the internet, the part that we really needed, and I think it'll answer a lot of the challenges that people are facing.
Now, Peter and Lawrence, you guys understand the tech implications behind it. What are the risks of digitizing, and what do we need to worry about here?
I mean, anytime you change a technology, you're changing the attack surface, right? You're changing the sorts of problems that can happen, and in many ways we're reducing the attack surface in that now everything's public, now everything's digital, we no longer have these rural offices with piles of paper or whatever it is. But on the other hand, we have new problems. You have hackers, you have infrastructure problems. I think the key is to build systems that are built for the real world, that are built for the possibility of failure, the possibility of hackers. With sort of these new flexible systems that are being built, I'm an Ethereum advocate, but all of these programmable blockchains of various sorts, you can build whatever checks and balances you want, you can build whatever systems you want, and so yeah, I think the key is to not think of any technology as being perfect, but to think of it being as a useful tool that will help you in the normal case, and then build with the assumption that sometimes there will be problems, and have a path for recovering from that. Have a person, a group of people, a committee, a process that can step in when things are going badly, and I think you can mitigate a lot of the risk that way.
I would say that I think the immutability of the Bitcoin blockchain is an important piece for everybody to understand, and it is just an invaluable part of why this is so fascinating. And the security of it, I think, also gets lost on people. To my knowledge, there is no other system as secure as the system today. Doesn't mean it's unhackable, I would never say that, but it's pretty darn hard. So what I would say is that's all great, but I've now read the third article about how China is thinking about creating a database for people and their good actions, and whether they're good people, and how they should be classified by their actions, right? So there can be some real negative impacts to an immutable record that lists whether you're a good person or a bad person and how that works. So again, technology doesn't solve everything. We all, I'm sure there's not a single person in this room who doesn't have a Facebook account. And Facebook is great. You can definitely see like awesome pictures of everything, and we all share our thoughts. But we're also now living in a world where Facebook is moving a lot of fake news around the world and shifting geopolitics in some cases as a result. So every technology can be used as like a knife, right? It can be used to cut bread or to kill somebody, kind of thing. I mean, I won't kill somebody, just FYI. But you got to use these tools. It's up to us as human beings to take this technology and hopefully make really smart decisions as an ecosystem. And one of the things I think is so exciting about this technology is that when I talk to people, and I'm sure there's some of you in this room who are part of the original internet wave, I have yet to find anybody who says we're any further than like 1991, maybe. But it's moving a lot faster. So whether you realize it or not, the fact that you're in this room and having these conversations makes you ultimately the new wave of decision makers. You are the people who are going to start who are going to solve some of these challenges and set a direction, and hopefully it's a positive one that actually makes the world a better place.
Yeah, on that point, I think that everybody in this room underestimates the amount of information that's being collected on all of our actions on a daily basis. And when you look at new technologies, the Internet of Things, and the amount of information that's being garnered and shared by financial institutions, I think it behooves us to make sure that these technologies provide better security and protection for all individuals in regard to privacy and security of their assets.
I think we have time for one more question, and if you could make it one that can be answered in 1 or 2 sentences by each of the panelists. So, who would like to give that a try?
Yeah. So, my question is, if money was no object, I mean, we all, many of us here have jobs, we're kind of doing this on the side, we're learning about this disruptive technology, but if money was no object in your lives, you could do anything you wanted in your own business, in blockchain, what would it be?
And keep it 1 to 2 sentences.
Identity. I think identity is a gigantic, it's like the big white whale of this world is sort of, what do we do about the amount of people who are born in the world and they're never accounted for? We don't even know that they existed. Human trafficking is a gigantic problem as a result, and it's almost impossible to prove that you are somebody if you were stolen. We have massive security challenges, and to your point, I'm not saying this is going to solve all of that, but it would be nice to know that if somebody was moving around the world and saying, hey, I'm Bob, and they've got like a piece of paper, and you're like, okay, Bob, I mean, that's a big problem, right? And generally, I think that there has to be just a better way of accounting for the amount of people in the world and where they live and all of that. But it is insanely challenging, just insanely challenging, and it's not all good. You know, I mean, there are, if you pull this thread long enough, there are lots of concerns that come up. So, but I think it's a big issue. If I had like a magic wand, that's what I would wish we could find an answer to.
I would replace the corporation. We have the majority of our economy runs in these sort of top-down command-style economies, which we know as good American capitalists is not really the most efficient way to organize things. And I think blockchain gives us a layer on which we can build technologies for coordination and cooperation that are more complex and interesting than the sort of 100-year-old technologies that run most of the world right now. And so yeah, replace the corp. And we see the beginnings of this with stuff like Uber and the sharing economy with Kickstarter and Patreon, and I think blockchain will jumpstart that. So that's what I would work on.
How about smart, risk-tolerant, goal-oriented wealth management platforms, personalized for everyone's needs?
Mine's probably a little more boring. Just I just vision, my vision is digital infrastructure that is interoperable, that industry can plug into, and government as far as record keeping, and sort of getting to a paperless system as far as land transactions, all the way from the handshake to having your name added as the next one on the deed. I think that would be my goal.
I'm for that.
And a round of applause for our audience, who also happen to have the most murder references in any panel we've had in a while. Thank you. Thank you, guys. So up next, so we're going to have a quick break after the next panel on smart contracts. So if we could have, thank you. So if we could have Carol, Hudson, and Bhavin come up, please. And the format is going to be similar. If you guys want to have a seat, introduce yourselves. We'll try to get some more audience engagement. But how many of you actually know what smart contracts are?
A few.
A few? Okay. So I think, is Bhavin up there? So the first thing is, if you could introduce yourself and then tell us what is a smart contract and why should we care? Let me see, I'm trying to gauge, I think.
I don't see him. I think because we're trying to keep on schedule, let's get started, and if he shows up, we'll...
Peter can take it.
Peter? Yeah.
Yeah, get up here.
Let's do it.
Dude's awesome at smart contract building.
Yeah, he's a smart contract builder, so it's good to have the guy who actually does this for a living. So again, smart contracts, who you are, and what is a smart contract, and why should we give it a shit?
Yeah, so I'm still Peter Bohr, I still work for Ownage. Smart contracts, I think it's actually not a great name. I think that I prefer to talk about things like programmable money because I think that's a clearer analogy. Essentially, a smart contract is a bit of code that lives on a blockchain that can control information and money, which a good analogy here is like a vending machine where you put some money in and a Coke comes out, and it's all automated, it's all mechanized. And a smart contract basically lets you do that with anything that is in this sphere of digital money, digital assets, anything that lives on a blockchain. You can have this sort of automated interaction with this bit of code. So that's what a smart contract is, and it gives you programmable money, which I think is really cool. So that's why you should care.
Cool. Yeah, I'm Hudson. Met y'all earlier. So I'd say a smart contract is, yeah, pretty much Peter's definition, and I'd expand on that just a little bit by saying that it really opens the possibility to a greater set of automation and a greater usability behind cryptocurrency in ways that you couldn't always do with Bitcoin and its derivatives.
So I'm the odd man, woman out here. My name is Carol Van Cleef, and I'm a lawyer. I'm not a technologist, so I will caveat my answer with that. But in my mind, and I should say that I've been into this concept of electronic money since about the early 80s. I wrote a law school paper on electronic money. I've forgotten I'd written it. But I also been doing digital currencies before Bitcoin ever came along. So I have a little bit of a different frame of reference, but when we get into the world of smart contracting, what it is to me is taking a code, whether it's the algorithm, and being able to build into that certain steps, usually repetitive steps, that we would typically have to get done in some way or another, and allowing those steps to happen again and again without the human intervention. I find it interesting that you use the term money. I would probably say the transfer of value. It also helps facilitate that transfer of value. I will also add that my husband is an IT guy. Has been for almost the entire time I've known him, which has been a long time. And he's always told me that I expect way too much of the technology. Well, for the first time ever, I feel like the technology is catching up to my expectations. Not there yet by a long shot, but it's catching up.
Okay, so we have smart and we have contracts. We have technology and we have legal, which is the two sort of things. Obviously, you know technology as well as law, but how do you think smart contracts are going to affect law firms and technology firms? Because you know it's coming, but is it going to automate things, or do you see, are contracts now hackable? What are the implications of smart contracts in law?
Am I the one who gets to answer that one?
Well, both of you, but you'll probably have
the... I'll take on some of the tech side. So as far as them being hackable, the code is as good as the developer codes it, really. I mean, there isn't a system out there where the code is going to be unhackable unless you're talking about the simplest Turing machine, in existence. So what a lot of people are trying to do with smart contracts to help them better be, I guess, unhackable, as most people say, is to have best practices. With these smart contracting languages, it's a big component of most of them is that you can't have things like random numbers. You can't have things that are just pulled externally or things that are going to do an infinite loop forever. So because of that, there's a lot of rules around writing smart contracts, and if people don't do it the right way, there's vulnerabilities that pop up. Secondly, and this is the even bigger thing, there's something called formal verification. It's a computer science field of study, And what it does is it takes computer code and it runs it, and it automatically says, here's every input and output that happens, here's all the possible scenarios, and if you write rules on top of the formal verification, you can actually prove that your smart contract is going to behave how you want it to and provide that extra layer of unhackability relatively to your smart contract. So that research is coming along at a blazing speed, and I expect that to be a big growing field and something that a lot of companies are going to be interested in implementing within their smart contract infrastructure.
I spent 2 days, I think 2.5 days at MIT back in the spring dealing with a bunch of lawyers and the issue of smart contracts and how is that going to impact what lawyers do. And I see it on several different levels. One of which is that those lawyers who are going to work with these smart contracts are going to have to come to the table with a different set of skills than they have previously, that they're going to have to be more tech savvy. Now the good thing is I think more of the kids coming out of school today are coming out with at least some basic background in coding, which I think is a huge step in starting to understand the process by which you need to deal with this. At the same time, you're still going to need subject matter experts because for every smart contract that there is to be written, there is a subject matter expertise that underlies that contract, even if it's just a basic sale of goods situation. So you can't dismiss that piece of it, and sometimes there's a race to go hire the lawyer that can speak the tech the quickest, but that lawyer may not have the other skills that are necessary to make sure that contract functions the way the code as contract functions the way it's intended to.
I think let's go to an audience question.
Yeah, so I'm interested in a lot of the commercial aspects here. So a lot of our contracts and transactions today are governed by things like the Uniform Commercial Code, and so what was Party A's intent and Party B's actions, and those disputes get sort of resolved by a third party that sort of weighs the actions and what the underlying document was. How does this evolve, into, I don't want to call it a digital UCC, but what's next?
The blockchain is the ultimate disintermediator. So these third parties that are checking for this and checking for intent, that's going to still be needed because computers can't yet tell exactly what you're meaning to write when you write it. But there are going to be these building blocks set up, especially within the legal contracting and other sections of technology where you'll have these building blocks. So a lot of the legalese that you have to put in there in order to say Party A did this, and like a one-word difference in a contract, I've learned, can make all the difference in the world to what that contract is doing. So there's going to be cool tools coming out. One of the coolest that does smart contract building but can probably be applied to this is have a drag and drop interface so that every legal term, so Party A advises on, and you just drag and drop them, and then when you're done doing that, it just outputs the contract for you. So it's kind of like what takes lawyers probably hours to do based on templates and kind of guessing and using all that can be programmatically set in there with precedences, with other automated tools to check for your contract being really legal.
Couple points. One is that we're going to go through a transition. There are going to be things that are going to happen, and whether they end up in arbitration or in the courts to be resolved. But I've been participating for the last, I guess, almost 2 years now in the Uniform Law Commission's efforts to write a virtual currency conversation underway of getting a group going together within the Uniform Law Commission setting to focus on blockchain issues, to start to figure out, and my personal feeling is that I think it's going to be a process. I'm not sure we're going to need a whole new blockchain code like the Uniform Commercial Code or all the other different types of uniform codes that we have. I think we need an orderly process to go and look at all of the codes that are out there right now and start to figure out what kinds of changes we're going to need to make in order to see that this becomes, that the law will evolve in an orderly fashion here. I will tell you that one of the issues that's been front and center at the Uniform Law Commission efforts on the virtual currency bill has been the role of multi-sig. You know, getting people to understand how that's different and what kinds of, how it differs from traditional concepts of control that we have under money transmitter statutes and so on. So those are the kinds of things that we're going to, it's going to be a process of education and slogging through a lot of existing laws.
One quick follow-up, if I could. So every commercial transaction typically requires a third party to either validate, settle, or interpret, or assist. But a lot of these sort of, Hudson described drop and drag paragraphs that yield an electronic or a digital contract. Is this the beginning of not needing third parties anymore? And so, you know, we all sort of agreed that I just sold you this very large company.
So, Bruno Latour, philosopher, anthropologist, has a great paper where he talks about the ways that technology sometimes replaces human action. And so one of his examples is a speed bump. You can hire more cops or you can put in speed bumps, and they're both going to reduce the overall speed of people driving. But a speed bump doesn't mean you don't need cops. It just maybe you need fewer cops. I mean, you need cops to do things that are more difficult and important than just stopping people who are speeding. And I see that this is very much the same way, that I think smart contracts will let you automate a lot of the easy stuff. It'll let you handle the things that really don't need the courts to step in, that really don't need more than just, you know, drag and drop templates and doing things the way you've always done it. And that, you know, maybe we can get 90% of what is currently done through the legal system to be done automatically. Then the lawyers and the courts can focus on some of the more rote, systematic stuff. But there's always going to be a need for someone to handle the exceptional cases. Yeah, when I was talking about my example, I was kind of being a futurist there for a second. Like, that's 10 years down the road at least, but it is something where, yeah, it's going to eliminate that, you know, the intermediaries, because what you're doing is you're replacing trust between humans that has to be legally binding, but that can also be, you know, forged, it can also be broken, it can also be manipulated by the courts into something that is immutable, something that you can go in there and you can say, no, you did put this language in there, we agreed to it using our keys to sign this transaction, so you can't go back on your word, you can't manipulate the wording, you can't, I mean, you can say to an extent that maybe you had a different intent, but at that point, especially for the easy stuff, like...
I'm also certain systems will evolve. That we need. And we already are seeing some of those early steps. Even if it's something as simple as using local bitcoins and having the buyer and the seller, you know, put whatever needs to be placed into an escrow that, you know, a third party controls. The institutions we need around that will evolve.
So real quick, if we can get an example, or one sentence example of a use case that's ready for smart contracts now.
So I think a pretty simple one is you and your roommates want to pool money for each person to only be able to withdraw a certain amount per day or week or month, and you can set that up on the Ethereum blockchain. The Mist browser has it automatically, and you can just have this pool of money and have controls about who can withdraw it, and it all works today. Yeah, so I guess a previous panel was talking about ownership, and where that used to be a really difficult thing with doing it in Bitcoin, you can actually code that up in Ethereum in about 30 lines. I've done a similar smart contract, took 30 lines. Now, I didn't go through and formally verify it. That's going to take some work, and there's a lot of different testing and a lot of different, you know, fail-safes that need to be implemented in there at this early stage of the technology, but it actually is really simple, and within a consortium, actually a few groups who are looking to do that.
And don't dismiss the projects that are going on around in the securities area. We've seen the issuance of both privately issued securities and publicly issued securities using the technology, and I think certainly Overstock has taken a lead in that area, but you've got Symbiot and some other companies as well.
Tom, let's see what we got here.
I want to get back to my question from earlier, because I'm going to take on many of machine example and the recent one of pulling money together. Where is the efficiency in decentralizing this so that, because it's being blocked and it needs to be stored on 100,000 computers, and who's paying and providing the security for that? I mean, why, where is the efficiency brought up? Expand that further. Where is the efficiency of making that entire platform Turing complete? I mean, these are just like, it's just attack vectors on top of attack vectors, where at the end of the day, at the end of, in the jurisdiction where it executes, other than method of payment, which Bitcoin kind of solved, but we don't know yet, because it's only been 10 years.
So yeah, I mean, and the reason you want to decentralize it is so that you can have coordination that would have been harder and impossible in the past. So the roommate example is actually not a great one because, of course, you probably trust your roommates and you can just put it in a pot. But if you want to do a similar sort of organization with people you met online, you want to set up the rules for who can withdraw money from these group of people that met online, maybe you do need that coordination mechanism, you need that trust, and you need something like a blockchain. You need a distributed ledger that can work as sort of the oracle of truth for those rules that you set up. Now, there's the separate question of efficiency and okay, so those are cool benefits, but can we actually do it? And I think it's fair to say that blockchains are currently not scalable. Bitcoin blockchain, Ethereum blockchain, there are very worthwhile and interesting the Ethereum fans of making it so that this code doesn't have to run on every single computer that is on the network. And obviously that will be important for moving forward. But I think it can be done. There are the Ethereum Foundation is where you split up the computation so that it's only running on the machines where it needs to be running, but you have cryptoeconomic protocols that make sure that it's as secure as it would be if it was running on every computer. And to answer the third question, why should this be Turing complete? Really, so Turing complete is just a buzzword, meaning that if you would like to do on it using programming that's valuable is because of the innovation that it allows. That people like me have some weird idea for a way to change the way people organize online or whatever. Whatever it is, I can go in and write a script and put it on the blockchain and start using it, and I don't have to build a new blockchain. I don't have to start from scratch. And if you don't have the programs in brief.
Yeah, so Peter actually touched on a lot of good points. I'm not even going to have to answer this that long, but for some of the questions, we are at the Ethereum Foundation and outside of the Ethereum Foundation just to enhance the technology. So he's absolutely right. The audience member asked a question. We can't right now scale blockchains on Bitcoin's blockchain. I'd say it is impossible or highly inefficient. Looking at using a blockchain system, you have to look at these trade-offs. Would this be more efficient in a database? Is how much trust do I have with the people I'm doing this database with? So for, like a soda machine he was talking about, or like pooling money with a small group of people, the inefficiencies outweigh the trust that you think you need with that. But maybe for, selling your home and you just have it on a document that can be forged, send in fax. There's people who still require faxing, these forms or documents for house. To me, it's like, yeah, there's inefficiencies and it's not going to scale like Visa yet. 2,000 to 3,000 of transactions per second. You have it so that it doesn't have to run on every computer. That's called sharding, if anyone's interested in looking into that, which also is just a general database term, but we're applying it to the blockchain. So in short, yeah, there's some stuff you can do right now, but you got to weigh the inefficiencies of the blockchain currently with how valuable the assets you're trading on.
The last words.
I'm not going near that one.
If you want to remark.
It's an exciting world we're in. We come along the way. as we get there. See the innovation in all sorts of areas for smart contracts, and I think one of the things is so everyone so that it can reach out and try to transform that idea into something that is programmable or make it programmable. And as I said, it doesn't mean we're not going to have bumps along the way. It's going to take some time to figure out, much like the technology itself, the legal pieces, regulatory aspects of it. Seat belts, and we'll take an interesting ride.
Yeah, be open about collaboration with people. Like, really, the blockchain has a really, everybody, seems to get along. It's a lot of shy tech people, but it's just a mindset that these businesses that, get in there and they're like, we're going to be innovative, and they do talk and no action. Look for those projects that actually have the kind of GitHub to the people up here. Personally, I think people hate lawyers is the general, cliche, but she's actually bringing these communities together and pushing forward so that being up, dealt with sooner than later.
A round of applause for our panelists. So feel free to chat amongst yourselves, and then in about 10 minutes I'll see if I can round you guys up again, and we'll finish up, and then about an hour later we'll have lunch. So you're doing well, hang in there.
Well, no, I still have. This is my New York. Need a policy? Rosenthal. New York.
So, I mean, there's a ton of, it's everywhere.
Hey, what's going
That would be established. So the lighting is kind of working. Like a conversation. So I'll sort of moderate it. What I'm trying to do is make sure that it's not that much a gap. It is fun. I want to make sure that the is a real I don't want to make it like
All right, so we're going to get started again. So now we're going to be hearing about some blockchain use cases from companies that are actually building in the space. So if you want to come and make your way back, let's get the show on the road. Watch this. It gradually works. Not with the guys in the back, I don't think they can hear me. Can you guys hear me in the back? Because I can definitely hear you. All right, we're gonna get started again. So if you could please take your seats. We're running about 10 minutes late, but we'll make that up by taking it away from your lunchtime. Thank you.
Thanks, Luis. For a quick introduction, my name is Dave Ripley. I am founder and CEO of Glidera, a company in this space, blockchain business. We are here in Chicago, and I'll kind of cut to the finish line on what our business does. It's at one point was kind of a newer entrant in this space, but we've been around for a couple of years now, actually. We basically provide a service that allows digital currency wallet and app developers to add digital currency buying and selling into their apps. So effectively a digital currency exchange with a little bit of a twist. So for many of you, that's probably fairly well understood what that business is. So I'm not going to actually dive too much into the kind of the basics of that, but rather talk about one particular piece of our service that we have available to these various different app developer partners and end users. That, as far as I know out in the industry, we're one of the very few businesses providing this type of security authentication. And so we see a world out there today, of course, where this is a typical headline, almost on a daily basis, right? Dropbox loses your compromised, password stolen. You get these emails in your inbox that say your password may have been compromised, please change it, or maybe they reset it for you. And like I said, this goes on and on a daily basis. Here we go. Adobe was actually fined for this particular type of breach as well. And so there's definitely issues across the board. Facebook is out there, and they're on the dark web actually trying to buy some of these compromised passwords so that they can go back to their users and say, hey, look, we actually identified that your password has been compromised out there. You need to change it. And so users are, of course, somewhat at a loss right now, right? What do we do? Every site, one site has a particular set of requirements where it has to be a certain length and includes these special characters. The other site, a different length, and those same special characters are prohibited in your password. And so you end up with many different passwords across all different sites, go through constant compromises, and there's very real security implications. These are technology companies that ideally would be at the forefront, but they still are subject to these issues, right? And so this is kind of a challenge in the authentication space. And so, as I said, what are users to do? Well, this is kind of the result that we see. I mean, so Adobe was hacked, and here are the top 20 passwords on Adobe. Like how 1, 2, 3, 4, 5, 6 beat out 1, 2, 3, 4, 5, 6, 8, 9. It's interesting. I think 18 on the list kind of gives me a little faith in the human population. I love you. I thought was kind of interesting that it made it that high on the list. But this is, of course, a challenge. And as far as probably most, except for many of the folks that are actually developers in this new blockchain space, most people don't really know that there's any other option. I mean, this is how you secure an account, right? A username and password. And so these are all these technology companies that have suffered this, but surely we have financial institutions that must have a much more secure way to actually secure users' funds and accounts, right? So when you log into a bank, you don't use this like ridiculous username and password that the bank then stores and is subject to breach. Well, of course, anyone that has done any online banking is these institutions have no different solution out there. So what is the path? So I'm actually going to dive into a bunch of a little bit of technical detail here on an actual alternative to passwords. So you can actually authenticate with an account, whether it be a bank, whether it be Facebook or what have you, without the use of a server-side password whatsoever. And for many of the folks that are on the technical side, this is going to be incredibly boring and dull because it's a quite basic component of what's called cryptography or private public key cryptography. And for others, it might actually make your head spin a bit at the same time. So the way private public key cryptography works is that a user, sender and receiver, that could be a user in a service or company, or a client and a server or what have you, will create what's called a private and public key pair. And these, the private key and the public key, big long string of numbers is basically what defines each key. And they're inextricably tied together. The user can then take that public key, share it with anyone in the world. It's public, it's okay to go ahead and share that with other individuals. And then the magic comes in where it comes time for the user to prove to any of the recipients of that particular public key, who he or she shared that public key with, that yes, I actually was the one who provided this in the first place and I was the one who kind of created this pair. And the way that's done is simply the owner of the private key, which of course would be the user, can create a digital signature, a unique digital signature, that for each individual signing of the using the private key, provide it to whoever has the public key, and then there's a way with cryptography where that recipient can take the unique digital signature and effectively match it up to the public key to ensure that yes, these two are a match and the user hasn't. The user never has to divulge the private key to do this, right? Never divulges the private key. So again, fairly basic for the techie folks, but probably for many of the others out there looking at this that maybe deal with customers frequently, they're looking at me and saying, hey, clearly, Dave, this is, of course, absurd. You just described this absolute mess of technology. Absolutely no way a user or customer is going to be able to deal with all of this. This is clearly why we don't use this type of authentication, even if there were benefits to this that we need to get to in a minute. And the truth is, from a user perspective, the way it looks today, right, you have a username and password. Well, with this new mechanism, this is what it looks like for the user interface. You have a username. There, of course, needs to be the appropriate software underneath in order to make this happen, but this is the user experience you get. So quite simple. And as we'll see in a minute, certainly many benefits, and this is, of course, where our company is. And to my knowledge, there's not really any businesses out there, certainly in the legacy space, that are using this as an authentication mechanism for their consumers. In many ways, we are kind of a legacy financial services company in that we interact with the existing financial system. And we provide this as an authentication mechanism. Here's an example of one of those app developer wallet partners that I mentioned before. This is simply how those users sign up for and then authenticate with an account. It's as simple as this, and all that cryptography happens underneath. And so this leads to all kinds of different benefits. So no vulnerable information is transmitted. There are no server-side passwords that are out there. No need for the periodic updates and multiple passwords. It's a much stronger authentication mechanism versus to protect against various forms of social engineering and phishing attacks, and non-repudiation becomes possible. What does that mean? That's effectively, as the company or the service or the server, you can actually have quite a high degree of certainty that your user or customer actually did authenticate and take whatever actions that you see on your side. And so if you happen to get kind of incoming inquiries from in your customer support group and what have you, where individuals say, well, I didn't do that. Well, this is actually a place where it becomes much less possible to do that. And so kind of the question comes down to why are we all talking about this now? This cryptography stuff has been out there for quite some time. Well, the truth is, in decentralized networks, we have to use this form of authentication. And so this is effectively more or less what the Bitcoin blockchain and Ethereum and all these open networks use. And even in the permission blockchain space, this will, in fact, for the most part, be the authentication mechanism as well. But it can certainly be applied everywhere. It can be applied to Facebook and Google and all these various different areas. The other piece where I think we're going to start seeing this a lot are machines, right? So machines actually don't do that well with entering in a password, but they actually can handle all this cryptography quite easily. So we talk about the Internet of Things out there. And just, this is, of course, it's supposed to be a little bit focused on our company, but we're, out there doing this. It's a fraction of our users that authenticate this way. We still do support the old method, but we have a bunch of users that are authenticating this way as well. I think, Luis, maybe time for one question? Yeah. If there are any. Great. Thank you. Thank you.
I'm sure you'll stick around because there will be questions. Okay, and then up next we're going to look at two more use cases. So, oh, that's fine. No slides, which is why I couldn't find them. Oh, you're going to... There you go.
Hi, everybody. My name is Jason Dispenza. I don't have a slide deck prepared, and if anything, I might be an example of spreading yourself too thin. We've experienced or explored, rather, blockchain, distributed ledger technology in a handful of different industries. So I'm going to try and do a deeper dive onto some of the energy-related things. A quick note about my background. I spent 11 years running an energy services company in DC, and it became quickly apparent that in order to compute an energy efficiency credit, which is the proven amount of energy that you didn't consume due to having undertaken some project in a building, which is by and large today estimated and rebated by the government or the utilities based off of your estimated savings. And so then measurement and verification happens, and tons of money gets poured into third-party consulting firms in order to check this. This is PwC and large, Deloitte-sized companies checking the math of a lot of these regulators and rebate agencies. But furthermore, we didn't have a collaborative data set, and in fact, a lot of energy audits that were being completed on a building were basically being crunched, and then you produce a PDF-style report and give that to a building owner. But the underlying data set would sort of come and go with the initial auditor who started that. However, that audit is important, that data is important in order to compute the snapshots that a building goes through as it gets improved. So if you're trying to remove a building off of the grid and make it fully energy efficient, again, a building that is 100% of its energy is now accomplished through passive means or renewable means. You need to be able to track the people that made the investments in that building through time. So small little increments like Samsung, in theory, giving you a dishwasher where they give it to you for free, but they retain the environmental credit attributes from that dishwasher. It's a $300 improvement, but it is nonetheless, a slice of the 100% of efficiency that's out there. Versus much larger things like state or federal governments who are paying large chunks of money to rehabilitate a home to hack away 30, 40% of the energy picture. And then the homeowner makes improvements, et cetera, and a building over time gets improved. But you need to know who owns those different slices of credits, and you need to be able to compete that home against its prior states, in addition to competing that home against other homes or other buildings that are in that utility district or that participated in that demand response event or in that weather event. So it becomes a big data problem, sort of backwards and forwards and side to side. And again, there was no central data repository where we could collaborate and then build upon that data set together. And then furthermore, to try and connect other industries. So this is really where I think research got interesting was, what kind of work was being done in buildings that made them healthier? And actually energy efficiency and health go very much hand in hand. If you're going to reduce the air leakage of a building, you're reducing the amount of pollen and dust and pollution in that building, and you start thinking about the number of occupants that are living there for 25, 50, 75 years, and suddenly, if you're taking pollen counts down from thousands or tens of thousands of parts per million to dozens of parts per million, what is the intrinsic public health value to that home having been improved? And so, it was in our search to try and connect the healthcare industry through preventative healthcare to bring capital and to bring money into retrofit business for energy projects. That led me to start foundation E2F2.US, Energy Efficient Futures Foundation. And as in 2014, we started out with this sort of general hope of pioneering some data, some citizen data rights. How do you put either homeowners or building owners back in charge of the data that's seemingly getting lost all the time? And it blossomed out, and suddenly we started getting involved with automotive and healthcare, in their bureaucratic layers. And I think that use case wise, for the healthcare industry is quite pronounced. Right now, there is a Nashville conference for healthcare, the first annual one a few months ago, and a figure that sticks out in my mind is the keynote presentation was by the CEO of HCA, one of the largest syndicated or conglomerate of healthcare insurers out there. One of his first slides was the fact that 300 people on average touch the average insurance claim. And that number astounded me. The fact that 7 or 8 people alone are involved in just transmitting an authenticated fax and approval for someone to actually look at someone's data. So there are a few firms out there right now that are trying to tackle payment systems or check-in and authentication of your allowance for someone to check your data, within the healthcare industry. And no one's even really talked about the medical data itself, which is this monstrous thing that, again, should belong more to a citizen than it should necessarily to an insurer, And then furthermore, I think that the general theme that a lot of data is you should be rather considered a toxic asset. Toxic in the sense that if you get caught holding it, and it's supposed to be private, like passwords or like medical data, and you get hacked and it gets out there, what's the most likely thing that's going to happen to you as soon as you're hacked? A small doctor's office or a private practice that has a network of 10 or 12 machines, they spend 100 to 400 grand setting up an EMR system on it. If that gets hacked and all of that data gets compromised, that doctor's office is not likely to survive the resulting lawsuits from that. So in this new blockchain world, blockchain's a collaborative data set. It's an area where you can collaborate, and it allows you to begin trusting the network of data versus necessarily the old model. And so in the new model, you might get to have access to someone's data for a certain amount of time. And someone mentioned earlier, how does the grandma, come into blockchain? Well, grandma already checks into her flight with a boarding pass. It's got a barcode on it. She gives it to someone to get scanned. The same thing's going to start happening in doctors' offices. So not that she needs to know how blockchain works, but that small nuance, the fact that she is going to produce on her phone app, a 7-day approval to have her doctor have access to her data, which will then expire. And after that 7 days, that doctor could not necessarily download and decrypt her section of a public EMR any longer, and it's up to that doctor to purge their records, right? So that at that point, the data toxicity is reduced, and you don't have to store this sensitive data anymore because you can trust the blockchain network that it exists upon. So coming back to some of our specific research and some of the things that we've been doing, E2F2 began within the energy sector a distributed ledger technology where we could collaborate again on energy audit data sets with the aim of having multi-signature program that would allow for us to basically map in the existing industry. And in my view, blockchain is not necessarily displacing anybody at first. Blockchain or the distributed ledger data sets is very much a complementary data set at first. This is something where people can mirror or copy data into and begin collaborating within that area. But as far as multi-signature goes, there's the healthcare industry and the energy industry is surprisingly a very similar implementation, but you can replace the word homeowner with patient and the word contractor with doctor and the word rebate with health insurer, and et cetera, and they start lining up carefully. But each of those entities needs their own type of key, and each of those entities would have their own role or their own ability to edit certain types of data or modify certain types of data within that data set. So we're really looking at how do you map in existing industry into a zone of blockchains or a distributed ledger system where blockchain might be enabling one small part of it. And blockchain is unfortunately too big of a word for us. No one has asked the question of a panel yet, what is blockchain? But you will get many different, some very heady, some very technical answers to that. But I do believe that with the ability for us to share and collaborate with data, that the word blockchain itself is this buzzword that shows that you might be looking at blockchain to enable part of your idea. And those of us ask the question frequently, why do you think you need a blockchain? Well, the blockchain in our system was more to track the answers to smart contracts. So distributed ledger technology is a collaborative work environment, and then smart contracts, where algorithms can be set up that would compute when things happen, and maybe that results in a credit. Maybe that's a healthy homes credit, maybe that's an energy efficiency credit, maybe that's a traffic congestion credit when you've avoided traffic, maybe that's a veganism credit when you go and eat a vegan meal at a restaurant. But a blockchain might be used in that case to track the actual credits, or to track the tokens that result from that, or to track the answers. And if those tokens or those answers are tradable, or if those are considered have some sort of monetary value in the sense that you're willing to trade that token or that value that you created by having solved that problem, that's where I think that industries themselves will start becoming merged. So again, a lot of our research was trying to connect the healthcare industry to the energy retrofit industry, or to connect New York financial markets into emerging energy efficiency credit markets. And you can't really connect big money to things unless big money can have a portfolio at the end that they can look at and audit and transparently show the proof of work that went into calculating the credit that's in there. And proof of work, proof of stake, these are two very technical terms, which I don't want to go over the semantics of, but I think in this new world that if you have data and if you can prove that you did an algorithm or a computation upon that data, that blockchain is a good place to store your answers. But you have to be very careful of when that becomes a security or when that becomes tradable, and consult lawyers if you're going to be creating blockchains, basically. Any questions? Cool.
And we have one more use case. You've already met Brad earlier. Probably one of the most insightful people I've met in a while in the space. This should still work.
Okay, I'll speak from here. Hi everyone, my name is Brad again, and I've been in the technology and finance space before moving into Bitcoin. For the last 3 years I did Bitcoin consulting as a business, and we encountered a lot of issues. One of the largest issues that we encountered was that there were no real robust identity solutions that were compatible with blockchain. Thank you to the two prior other speakers, David and Jason. They mentioned a lot of things around public and private key cryptography and a lot of the needs within the space. Currently, identity verification relies upon information that's very easy to fake. It's reliant upon static data, right? So things like social security number or driver's license number. Those are things that in the legacy system of in-person validation weren't that bad. It was sort of difficult without the internet to copy and distribute everyone's social security number. Once we sort of moved into the internet realm, we realized that it's a terrible model, and David alluded to the fact that there's dark net markets now where you can go and you can literally put your somebody's social security number, their name, and you can buy all of this information on them, maybe like $10 or $15. I mean, it's really not much money. All of your static data, all the credit bureaus have been hacked. All the LexisNexis data they ask you to do identity verification, all of that stuff has been hacked. So it feels a little secure when they ask you these questions like where'd you live and everything, but if a hacker wanted to target you, they can just go buy that information for a few bucks online, and then now they spoof your identity. So that's the problem. This is part of the problem that we're trying to address, right? In 2015, it was estimated that there's over $15 billion stolen due to identity theft. And then, the amount of capital that's out there in cybercrime damage and secondary and tertiary amounts of money that are stolen are in the hundreds of billions of dollars. So this is, it's a very significant and quantifiable problem. We mentioned some other vendors who have been hacked earlier. I know David put some on his slides. I'll mention a couple more. Target and Yahoo. We know the Yahoo one was really interesting because they were going to get acquired, right, by Verizon at one point. And then it was revealed that their entire user database was hacked, and this multi-billion-dollar acquisition didn't go through because of identity theft, right? And so that's a huge problem. So what's the solution? Our solution, our company is called Muti, and our solution is to give everyone a portable digital identity. And so we take a lot of the aspects of public and private key cryptography, and we consolidate them into a mobile application that you would hold on your, on your mobile device, your iPhone or your Android phone. And you would use this mobile phone to then log into services and identify yourself. The solution is actually built around four particular aspects of identification that are not fully unique to us. A couple of these are unique to us. But basically, we came from a perspective of giving users privacy from the very beginning, and not focusing on business identification and everything from the start, but literally focusing on having a self-sovereign ability to control your identity. Right? Bitcoin is having self-sovereign money. It's the ability to have a bank account in your pocket. Right? We're taking the same types of technology, but applying it to things that aren't currency. We're applying it to identity. you should have full control over your identity the way you have over your money, okay? And so we allow users and businesses to interface in 4 distinct ways using our platform. Fully anonymous login, you go to a website, it's a blog, there's no reason they need to know who you are. You can log in cryptographically, authenticate a unique session with them, they have no idea who you are. Completely unlinkable to your ID using cryptography. The second is anonymous but guaranteed unique. So we can issue a unique identifier to your ID, but it has no personally identifiable information on it except that we can guarantee that this is a unique ID. So certain sites that you log into might not want you to create multiple accounts, but they still don't need to know much information about you. So we can provide guaranteed uniqueness. The one that you guys are probably most interested in is full KYC, know your customer validation. Banks, healthcare providers, businesses will need to do some type of KYC in a regulatory environment. Banks need to do anti-money laundering checks, they need to know prior addresses, a lot of stuff about you to make sure that they know who they're doing business with and you're not going to be laundering money. And if you do, they can go and say, well, this is the person who did it. And they need to have high confidence about that. So we allow selective KYC verification over our platform. And this also allows any aspect, we say selective, but the business really drives the request for the types of identification that they want to use. So it could be anything from as lightweight as I'm a retailer selling alcohol, I need to verify that you're of legal age to buy alcohol. So I ask for this type of verification. All the way up to I'm a bank and you're opening a business bank account and I need to know everything about you and I'm going to request that information from you. The user can push that data through an authenticated session to the business, and that's what our identity, our technology allows and provides. And the one other unique thing that's unique to our platform is we provide unlinkability. So we use advanced cryptography specifically around ring signatures to allow unlinkability. Unlinkability and verification don't really go hand in hand today. A lot of businesses like to track users. But there are certain use cases for unlinkable data around identification that are really, really important. Let's take voting as a quick example, and I know we don't have too much time, but if, for instance, we wanted a fully auditable voting system to know that your vote counted after you voted. I don't know how many of you voted in the actual general election. I did. I was very surprised at how crappy the process was. I voted, went into a booth, I pushed some buttons, they're like, you're done. I'm like, how do I know, where's my receipt? Like, how do I know you're counting my vote? Like, somebody didn't just do something in the back, and change my vote. In a cryptographic system, we can do that. So we can issue, you can have a Democrat or Republican party issue you a voucher that says you are a registered Democrat, registered Independent, registered Republican, and allow you to vote in their primary. Right? Because you can now self-identify with a unique identifier that says you're Republican. It has nothing else about you except for the fact that you're registered to vote in this particular primary election. You can have your town issue you a one-time use identity voucher to use for voting, and once you spend it and use it, it's done. And you can have your votes fully transparent on a blockchain and fully audited by anyone, but yet unlinkable to yourself. This is also very important because now you have things where, like, let's say there was somebody running for president and you're a Republican, but you didn't want to vote for that person, okay, as a hypothetical situation. And it just so happened that, using this digital identification system, we can provide unlinkability into your actual general election vote, even though you're a registered Republican. That would be very powerful to you because you don't want backlash. Let's just say you were a former president and you and your wife didn't want people to know that you voted for the president, so you just said, I'm going to abstain from voting altogether, as another hypothetical situation. So we think that our technology that we built on the identification and verification side can be used everywhere in every industry. We've built the technology, we're currently exploring commercial relationships and partnerships with governments as well as businesses to deploy the platform in different ways, in interesting ways. So we'd like for you guys to bring your use cases to us, and then we can figure out how to integrate our technology and framework to power the things that you need to do. So these are some examples of different industries that we're looking at. within professional certificates and micro certifications and education, we can certify doctors, we can certify that you're a radiologist and you can work with radioactive materials, right? We can certify that you're an emergency, medical responder. We can also provide a platform for governments to attest to identity of citizenships. Our technology doesn't work just from an attested, trusted identity provider source. It also works for a self-attested identity, and you can build reputation around your cryptographic identity that's in your phone. And so we can do self-attested identity over social media networks. We can do, like I mentioned before, one-time vouchers, so being able to identify yourself for one-time use cases, going to concerts, coming into an airport, for access control in a corporate environment where you want to give a guest certain access, but it's limited 1 or 2 times access to a certain area. So we're looking at all of these types of use cases. Market opportunity within identity is growing very rapidly. Basically, it's in the billions of dollars. We all understand the risks around cybersecurity. I don't really have to go into too much of that. And this is our core team. We're just a bunch of crypto anarchist, cypherpunk guys that are interested in improving personal privacy and security, but also wanting to build a system around digital identities that my kids can use when they're out in college and in business. And so we're building a platform not for today, but we'd like to use it today, but realistically, I'm building a platform for the next 20 or 30 years when everything is going to be digital. We're going to be interfacing not in a public conference like this in person, but we're all going to be online. Maybe we're going to be using Microsoft Holodeck or something really cool like that, and we'll have cool avatars. And knowing who you're interfacing with from a digital identity perspective becomes that much more important, right? So that's pretty much it. I'd love to take any questions if you have any. Sure.
How do you connect biology to cryptography?
Biology to cryptography. So are you talking about biometric authentication?
How do you prevent yourself from losing your cryptographic identity?
Okay, so you're talking about like key recovery around your identity. Yeah, I don't want to get into that too much. There's multiple different authentication methods that you can use for backup. Either multi-signature, you can use an Apple model around multiple types of challenge response questions that you can store and then cryptographically hash those so you don't have control of them. You could use an independent third party to custody control over certain aspects of your identity. I mean, it's really going to be up to the business and what their needs are. And I think we might have not just one global identity system, but you might have microcosms of deployment. So like in a corporate environment, my requirements for employee identity could be slightly different than it would be on a national scale or something like that. Our system allows fully interoperability between those different systems. Oh, one other cool thing about our platform, we are blockchain compatible and we store data on a blockchain. And we're blockchain agnostic as to, it doesn't matter which blockchain, we built for all of them. And we can combine identity claims from different blockchains at the same time. So if my employer ran a private blockchain and it's IBM, they're using Hyperledger, and they issued me an employee ID, I can combine that identity claim to verify myself as an employee of IBM with a public verification of myself that I have some reputation as like a Reddit, blogger with social identity, and I can combine those aspects of identity together in a single validation. So those allows you to do a lot of really cool and interesting things that we haven't been able to, we're just, researching them now, but cool, thank you.
All right, guys. So now we have a special announcement from the state of Illinois, and they have the hardest job of the day because they are the only thing standing between you and lunch. So if we could have you come up here, and I think we're running close to on time, about 5 minutes off. So let's.
Well, no, I don't care. You guys can stand up. So, well, right, my name is Brian Schneider. I am the Secretary of the Illinois Department of Financial and Professional Regulation, and I am pleased to be here to announce the Illinois Blockchain Initiative. And I am joined by a number of distinguished colleagues in government. Ann Melissa Dowling is the Director of the Illinois Department of Insurance. Jennifer O'Rourke is a Deputy Director in the Department of Commerce and Economic Opportunity. Mike Wands is the Chief Technology Officer for the state of Illinois in the Illinois Department of Innovation and Technology. And John Rakovic works in the Cook County Recorder of Deeds office, and Karen Yarbrough is the Cook County Recorder of Deeds. And I believe Hardik Bhatt, who is the head of the Illinois Department and really a leader in Illinois' technology efforts, has joined us as well. And I have to give a special call out to Cab Morris in my office, who really was instrumental in pulling this initiative together for us. What's so impressive to me, I'm relatively new to government. I come from the private sector myself. And so often government seems to be disjointed. One department doesn't talk to another. And the ability to pull together multiple state departments, not to mention multiple units of government, to try to coalesce around a new technology is noteworthy, at least to me. The purpose in pulling this initiative together and giving it a name was threefold. We would like to educate ourselves on the technology as well as its economic, societal, and legal implications. Your mother reminded you often that you have 2 ears and 1 mouth, so we think it's important for us to learn about this technology before we start figuring out how to regulate it. We'd like to analyze areas where Illinois could engage and contribute to industry conversations about blockchain and distributed ledger technology. And finally, to organize our efforts into a coherent strategy and kickstart a comprehensive blockchain plan of action. As Governor Rauner himself noted, the creation of this blockchain initiative shows how serious Illinois is about becoming a welcoming place for innovation and technology. Instead of losing jobs and potential investment to places like California or New York, we're actively embracing innovation. So our initiative, at least at the beginning, will have 3 areas of focus. First of all, we'd like to create a regulatory environment that is friendly for digital currency and all other blockchain businesses. Second, we'll be inviting blockchain businesses to utilize the significant resources of Illinois to grow and innovate here in our state. And finally, we'll be putting blockchain and distributed ledger technology to use in state and local government wherever possible. So with respect, putting a little flesh on the bones then, with respect to our first initiative, one concrete thing that we can do is, my department understands that uncertainty around licensing and regulation is on the mind of every digital currency and blockchain business in operation. It's vital that we provide a succinct framework that gives businesses operating in this space the regulatory clarity necessary to attract investment and scale. So to demonstrate our commitment to making Illinois a welcoming place for digital currency and blockchain businesses, I'm pleased to announce the release of a comment on my department's proposed digital currency regulatory guidance. This guidance is intended to provide clarity to DFPR, that's the acronym for my department, treatment of digital currencies in relations to our Money Transmission Act. So again, we've put it out for comment. We're trying to listen. We think we figured out what makes sense given our legal structure, but before we start decreeing how things have to be, we'd like to hear from you, who presumably can educate us in that effort. We've also modeled what we're doing on what other states have done. For example, Texas, Kansas, Tennessee, and North Carolina. I hear repeatedly from financial services companies that one thing that drives them insane is the patchwork quilt of state regulation. And while we're all sovereign states, we have an obligation to try to be as uniform as possible to the greatest extent possible. So we kept that in mind as we developed this guidance. My department, working with Ann Melissa's at the Department of Insurance, is thinking on how we can use blockchain to bolster our capacity as regulators, ensuring the safety and soundness and solvency of institutions through blockchain products and tools, as well as to ensure ongoing consumer compliance. We've thought in the mortgage space, for example, an area that my department regulates. What if we had a blockchain record of every mortgage transaction?
That would be easier for the mortgage bankers, I think, and it would certainly be easier for us as a regulator to go in and have one place to look for a record of what actually happened. We're going to continue to encourage exploration of blockchain and look forward to engaging our companies that we regulate as they explore blockchain technology for their business uses. We think the earlier we collaborate together on this, the better the result will be. We won't be having to regulate after the fact or trying to change your business practices that make sense to you through after the fact regulation. So our second area is intends to focus on inviting blockchain and distributed ledger businesses to build their enterprises and innovate here in Illinois. Sean McCarthy is our Director of the Department of Commerce and Economic Development. He couldn't be with us today because of other state business, but he has told me that he is convinced there's no better place for blockchain and digital currency companies to do business than in Illinois. Chicago's place as a global financial services hub and its history in derivatives and commodities training makes Illinois a strong pipeline for financial engineering talent. In addition, we have a thriving technology ecosystem and access to a world-class university research and talent pool that makes Illinois a great place for blockchain businesses to grow and collaborate. Our technology ecosystem includes over 200 technology incubators. An average of over 270 startups per year have been launched in recent years. Over $3 billion in venture capital has been invested in the last 4 or 5 years, and we're the home to modern technology framework, Django and Ruby on Rails. You also have access here to not only startup businesses, but very large enterprises that can deploy this new and emerging technology. 40 of the Fortune 500, top of the Fortune 500 companies call Illinois their home. And of course, we're a worldwide transportation hub and an alpha-rated global city here in Chicago. So the Department of Commerce and Economic Opportunity believes with a renewed emphasis on innovation, Illinois can become the home of blockchain technology. And to help make that reality and not just talk, that department has named Jennifer O'Rourke, our Assistant Deputy Director of Entrepreneurship and Innovation Technology, to serve as Illinois' first blockchain business liaison. Jennifer is going to be a resource for anybody that has any questions on what can Illinois do to help encourage blockchain. You've got a one-stop shop. You can go there, and she will help you understand how easy it is actually to do business in Illinois. And she can help connect you to your potential prudential regulator if you're engaging in a type of business that is regulated, so that you can get answers to questions early and then form your business strategies accordingly. And then finally, our third area of strategic focus is how do we create a public-private collaborative platform for developing specific blockchain and distributed ledger applications for use in Illinois government at the state and local level. It seems as though, that the ability to use blockchain to deliver service to our citizens will redefine the relationship between government and citizens in terms of data sharing, transparency, and trust. The concept of a distributed, cryptographically secured, and verifiable government record is profound. Blockchain has the potential to provide unprecedented efficiencies and interoperability for businesses and citizens, which is why our Department of Innovation and Technology is incorporating it as a key lever in their Illinois First technology transformation strategy. We've just tried to think on our own of all the government services that could benefit from an immutable, trusted digital ledger, anything from birth and death records to professional licenses, blockchain tax ledgers, vehicle registration, voting systems, or government grants. The list seems to go on and on. To jumpstart these efforts and to help target the most beneficial initial use cases, the Department of Innovation and Technology released a request for information soliciting input and feedback from the blockchain technology community on how to develop strong applications for blockchain government and how state and local governments should develop an implementation roadmap for these efforts. And as I mentioned before, this is not just a state government exercise. Showing a similar eagerness to pioneer blockchain adoption in government, the Cook County Recorder of Deeds is poised to become the first land records office in the United States to recognize a property conveyance using the blockchain. an irreversible and distributed public record with the ability to prevent unauthorized and fraudulent property transfers through public key cryptography is an idea that more than makes sense for protecting one of our most important public records. So we're pleased to announce this initiative today and to use your wonderful conference as a jumping off point for it. Again, we know that talk is cheap and action is where it counts. So you have, I know, the commitment of myself and the leaders up here with me to actually make things workable for technology companies and their customers that want to do business here in Illinois. We invite you to contact us, to bother, quite frankly, to bother us if you see things that don't make sense. Some of the best things that I've been able to do in the couple of years that I've had this job is come from people who deal with my agency and have pointed out how we have been doing things that don't make sense. And we are able to modify our processes and make them make a little bit more sense. And I know my colleagues are committed to the same. So again, I know we are your last stop before lunch, but I, and I'm sure my colleagues are willing to take any questions, and I think we'll be here also during lunch and after that break to chat with you all. So thank you very much. I saw the gentleman in the back there.
In addition to welcoming businesses into Illinois to pursue development of blockchain technologies, state-chartered banks today in Illinois, how would the IDFPR view their engagement in digital currencies today as under their charter that you sort of regulate?
Well, if they have if they think they've got a product or service, that can use Bitcoin, they should take full advantage of it. Again, the devil's always in the details. We have to know how, but there's certainly nothing inconsistent with their charter if they want to pursue a digital currency line of business. And more importantly, if they want to chat with us as their prudential regulator in advance of jumping off the ledge, we're happy to talk with them. And that way, we know what they're doing, and they know what they're doing, and it can be effectively monitored.
Very good.
Sorry, right in front here.
Sure. Wow, congratulations. This is huge. This is fantastic. So let's do a round of applause. So how specifically, is there going to be a mechanism like a monthly meeting or anything for the public or for businesses? What's the best way for people to get engaged?
Well, there are going to be a series of three press releases that will go out that will provide all sorts of links and email addresses for ways to connect, and the RFI process, of course, has its own communication methodology. Hopefully we can figure out what the right cadence and type of engagement would be. Government is notorious for having meetings and then declaring that they accomplished something just because they had a meeting. So I'd like to avoid that. I'm sure my colleagues would as well, but if we can actually find ways to share ideas and some actionable protocols, I'm sure that will flow from this. Yes, sir.
Are you planning any activities like hackathons where you do a call for entry on let's say, municipal or citizenship blockchain, where you invite people to use dummy data and come up with something that could potentially be usable? Is that on the roadmap?
That sounds scary to me with dummy data, but I'm sure Mike, with our chief technology officer, it's probably something we could do if it makes sense.
So absolutely, I think the ability to engage the folks who are really leading on this, and that's why it's so exciting to come to this conference and talk about where we are with blockchain and our commitment to it. But clearly the focus on hackathons is very important to us. One of the things that we really are driving is engagement between businesses and governments. Most of us standing up here haven't been in government our whole careers. We made the commitment to come in and help make a difference and help make a change. And a lot of that is by engaging, through the incubators and the different folks who are out there around the state in some of these key initiatives, right? And we want to have a sandbox where we're able to play around and try these things out and test these things out. And we do believe that we've come up with a bunch of use cases that are very practical. Now we just need some folks to help us solve those practical use cases.
Anything else on anyone's mind? Questions, comments? Yes, sir.
Is your team looking to develop your own blockchain solutions, or are you looking towards external existing solutions?
We're looking to work with the industry to engage, what is being done out there. We believe a lot of the big platform players have made commitments
We see some really good things out there. We see a lot of uncertainty still. And so what we want to do is work really hard to work with the platform players, but also the individual entrepreneurs who are trying to solve some of these very complex problems. I think, to answer that in a little more depth, the folks we just saw up here, the 3 vendors that came through and talked about some of the things they're doing, are all part of the overall solution, right? None of them are the solution, they're part of the overall solution. And that's what we look to do as a state, is to really enable that through using the industry platforms that are out there.
Anything else, or is the call of a sandwich too much? Yes, sir.
So, like, it's a big deal to do, properly transaction on blockchain that's, authorized at the state level. Do you see this potentially being the norm, and is that the goal, or is this a use case trial prototype?
Well, I think I have let my colleagues from Cook County talk. I think we hope that it works. Hope that we're leading the nation, actually. Yeah.
Yeah, I think we're past the point where we're a bit further than exploration. I think we all believe that this is just a better way of keeping records. As I said earlier, a better, safer, more efficient way to keep records. Probably the best that we've ever seen. So we're at least that far in that we believe that in 5 to 10 years this will be the new normal.
And I think that piece of it is really critical. Coming into government from the outside and realizing how many of the processes are still very archaic and paper-based, and just the process you go through. I recently went through and moved, and I'm a state employee, and I had to fill out basically an hour and a half worth of paperwork to be able to get my address changed just once. There's only one of me, right? But to get it changed through all the different systems. And so we sometimes take it for granted that the digitization is occurring, but it really isn't occurring in full swing. So we've got some of these use cases where we can actually make a difference and make a dent, remove the paper processes, really improve what needs to be done out there. I think it's something that can really fundamentally better bring business and the citizens and government together. I think that's really critical.
And let me just add my voice here. I'm a former legislator, spent 12 years in Springfield, and had an opportunity to work with many of these departments. And to your point about how the left hand not knowing what the right hand's doing, and there was certainly a way to do things better. So transitioning to the Cook County Recorder of Deeds office, the very first thing I saw when I hit that office was the probability and possibility and what was going on in terms of fraud. And while we've used some state laws to tighten up some things for us there, and we have a property fraud alert, this is, in my view, a much better way to try to prevent fraud, because there's some bad actors out there that are doing some things that affect your lives, and the bad thing about it is you don't even know it. That you really don't even know it. So I'm really looking forward to our launching this thing and getting a good result from it. And so, we're glad to be the first in the United States to do it too.
All right. Any of my colleagues have any final comments or thoughts?
Just to speak to every one of you out there, I know that we're incredibly fortunate today to have a room filled with a really diverse selection of industry representatives and folks that are doing a lot of different responsibilities within the blockchain space. This is a call to action to each and every single one of you, irrespective of how broadly different this room represents these different goals that we each have. I look forward to engaging with you. I look forward to building out the communication and the discussion and the dialogue that we will have that will end up shaping the way that Illinois leads the charge in the blockchain space. So please, I look forward to meeting you, and let's get this dialogue started.
Anna, any thoughts from an insurance perspective?
I just want to say that I know all of you are impacted by insurance. Whether it's your health care, your property, your business insurance, all of that. And we see this not only from the perspective of how it can help our agency, but probably more importantly, how it can help the insurance companies that we oversee to do more efficient work for you, cut down costs, and absolutely across every line, particularly in the healthcare area, reduce fraud, because that'll bring down costs for you, because so many of these costs are skyrocketing to places that make them unaffordable. So we have a lot of ways that we're looking at this, both internally and externally. So for our RFI, we really do want to encourage you to suggest things we may not have even thought of, and make sure we're aware of all the different creative ventures that you are undertaking. So thank you.
Well,
One last question.
sure.
Is there a budget for the project?
Can you be more specific?
You know, look, I certainly in my department, we have not, you know, we don't have a dedicated budget for it, but we have a group of people, you know, who the governor around here has brought into government that are not going to sit still. So we add it accretively to our jobs every day, and we just view it as part of our public service, is to keep abreast of these changes and make how we regulate in Illinois cutting edge.
Well, I think, let's do another round of applause.
Thank you very much.
We're back on time, I think even 3 minutes early. So I think lunch is in the back of these little boxes. So feel free to, if you haven't registered for the event, over there is the Ontario speakers, please do so. There's still some spaces left.
It's a rare opportunity to have all of you guys. You're on the start regulation, so we're excited about the announcement. That's great. Underlying
No, actually,
we won't really
we're all finding each other now. It's time to take
Well, you
Yeah, exactly.
In addition
addition to being the former CEO of I've worked with your two studies predecessors, Scott Wagner and I don't believe they're even here in Washington land records. I know your agent too. I actually have a lot of clients that regularly so that's why I asked that question. Stay in touch with Scott? I
They voted before they thought about it.
So, there's a couple of other things on the next has nothing to do with blockchain. It has to do with some of your email on the phone. Okay, good.
That's one of the things for a meetup.
I mentioned him.
I recommend it, but I used the button.
It's grown pretty large. Probably December last year it was 200 members. I only joined in May. It's growing exponentially. A lot of us believe that we're the first logical job because for so many reasons, you already keep land records in shape format already. They need to be joined together. Identify those. There's just few barriers to switch over as opposed to like the instinct is that instinct. Yeah, it already makes you don't have to explain that without most reporters in the country already understand the concept that keeping records in a chain. That's why I like this one because we already do this. We just don't do it in a distributed way. We do it on one server.
Well, now I'm going to go to the Recording of Deeds website and obsessively look up the real estate PIN number of my residence. But I'm completely frightened in terms of the state of the record keeping.
We have a proper fraud alert program also. Entering your PIN number for your house, we will notify you if any document affecting your property comes into our office. Whether it's a lien or if you get a new mortgage, you'll get an alert. If your neighbor's mortgage accidentally ends up on yours. Because they're trying to I've seen it, because these are numbers, right? It's 14-digit numbers, so if somebody gets the wrong number, 104 instead of 103, your neighbor's mortgage is now on your house. It may not be our error, it may be a lot of errors start out in the preparation of documents. But that's, you can start to cut that down by getting away from paper-based system. Credit score. Yeah.
Sounds really good.
CookCountyPropertyInfo.com. It's actually a government website that aggregates most of the property data into one place. So you'll find a lot more information on our site. Our website,
Yes, now I'm like going to call my wife.
There ought to be something there, yeah.
You're supposed to instill confidence in the system, man.
Well, it's an open system, and unfortunately, 99.99% of the time it works perfectly. The other time it's errors or fraud. See you again. I'll be back up.
Sorry, it's probably hungry. I just wanted to say hello. Okay. It's just, we shifted to, this whole topic is mortgages, it's been something that's been
And one issue is what you guys are solving today, and that is digitizing an asset starting at the other right, and then securities, the whole finance world is huge. You can't do it without.
Yeah, I want to distill as many of these processes down to one government office. I don't think government's going away. We can handle the identity problem for the private sector. We can build it, always rebuild that apparatus to solve identity. But you'll never be quite sure if the government come in, we make you these 3 forms of ID plus your biometric fingerprint, written scan, all that. We can be reasonably certain of who you are. It sounds kind of Orwellian, but going forward, it
Thank you.
always fill out
It's amazing.
every time that happens with one
You still can't find it.
Yeah.
It's so amazing. Like we still can't find medical records from my mom. She had some tests done, and no one has them. Literally, no one has the records. So it's just let's get that. Or how this stuff flows, and we're talking to different companies, just how it flows through the financial services. Beyond sort of just sort of managing your process, where you get your own.
I have my own ideas as far as saying I do what I want. I centralize everything in my office where it's all done by smart contract.
Yeah, sure.
Now the bank can, they can put their money right into my escrow bucket. And then, once everybody enters their private everything goes where it needs to go.
Which is kind of the next thing on top of it. Because that'll be then a mortgage application. And then that flows into something else.
If you're doing, $100 million of mortgages a month, some of those are going to be messed up. You're not going to pay off. Your old loan's not going to get paid off. Then you're going to pay your own attorney to find it maybe a couple months. There's $100,000 you didn't pay 3 months time. There's so many out there that invest in new money. $1 right, do all that. For no transition fees, no money, whatever makes sense. Blockchain. Right, the bank, maybe once a month they move $5 million into their account, and they don't have to pay writing all those checks. They just focus on the contract, and then the money goes where it needs to go, and then it's going to work like it now as well. Top
That's good. I did want to, because we're going to be heading soon. This is the topic of the street. It's recently actually I thought I described it.
I did.
Yeah, I'll be switching. So, it's not a technology company. It's about secondary market, or not secondary market stuff, financial services market. And this is actually. I was kind of laid out a strategy map for them in terms of how blockchain technology relates to the mortgage industry, primary mortgages, and then the secondary market. Right?
They built the whole nervous system to track trade and track. Because the technology wasn't there for my office in 1996.
Yeah, so you got your unique identifier that gives you license and that's yours is a good attempt at giving that identifier, right? Which is good. What it doesn't have is the ability, right, to do transactions, right, to actually use that process work a lot of initiating originating a mortgage, right, which is what you're doing, right? That'll help that process, double validation, but then the second so I was just going to want to pull that out securities, mortgages, security, they don't want to know you guys are looking at on that property, right? You can't track that.
Yeah, in the future, you will be able to once the property's been unloaded, you won't have to, you don't have to keep checking once you verify. And the government's going to stand behind that. Like Iowa, they can
RFIs on how it can respond to
You're
saying, hey,
it costs like $600 to $800 there as opposed to
It's a big set. It's a big set.
I'm for something, so find me on there.
Just to get the same from the market. It's not some specific use cases. That's what it is. I think we stayed on the part so we originally came up with 5, and then as we were going through, we cooked up the region. And obviously those guys were doing something ready, we brought it together, and we started sharing it out. And while they were doing something that was, had more progress, it wasn't scalable. It's a problem. So we're like, guys, okay, so the RFI will be published. It's publicly available. It's got all the instructions within the RFI. So we'll be able to send you the link to make sure you got it. But now that I'm going to see the two work together. Now, right, yeah, right. So what do you think? I think that I'm not sure what we put on the RFI response date, but I think it's pretty quick. It's kind of usually 30-day type things when it gets started. So that's why we want to take those use cases and find some specificity around those. Let's try some of the technology. What's the right solution? What's the right platform? Like, so we went through and we were looking at all that. Microsoft Service, I'm going to serve this, and I went back to Microsoft. Marley gave me a call. He's like, you guys have it. It's part of your statewide agreement. You have Azure. Azure includes blockchain as a service, so you can use this. And we were watching Microsoft too, because they're just, while they're talking about their platform, they're the masters of dog data. Right? So they're trying to use it for credit, statements, right? So, and Marley's a financial services guy. The two of us spend all the time in financial services and insurance. And so he's, former great guy, smart guy, but he's like, Mike, you guys can have it. Here you go. And the only problem is they didn't put it with blockchain and the G cloud, right? So they've got 2 clouds, right? The commercial cloud and the G cloud. So government cloud. Government cloud basically essentially means anybody in the data center has background checks. So anybody touching it, that's the difference. So we're going to use spin up a testing environment for us and let us use it in the commercial cloud. And before we go live, we can move it over.
I mean, the response is the last one with one change. Yeah. And now our partner, Microsoft. So, from a platform perspective.
But you said Marley's going to be here. I think he said, I thought he said, is there another event?
I looked at this event and he was, I saw his picture. That's why I know. Right. But I don't see him on this. I don't know, maybe he was swapped out. I don't know.
I thought I saw him going to another event, and I thought it was going to be private, because there another one tomorrow or something Monday. Okay, it's probably that's the type of stuff. We were peers. We were architect evangelists. So we were the ones who were focused on .NET. And we focused on obviously platform strategists, right? So we had cool titles, right? Platform evangelists. But it was all to go and do J2E versus .NET battles, right? So it gets that back to 2005 or 6. Yeah, thanks. Alright, so this is The first one I thought was good. Was kind of getting everybody together. I felt like the second one had like 3 pods. So I just trying to, she's trying to
So we put this matter which top innovation resource. So we funnel 3 Canadian, or the recruitment phase for the moment for to select the third cohort. So
Very nice to meet you. Perfect. So are you in Chicago?
Yeah, we're based here. Perfect. The office is based here.
So I'm here a couple days a week down in Springfield the rest of the time. Nice to meet you.
Great, thank you very much.
So I had a chance to go to the incubator in Springfield yesterday. So I don't know if you guys are spending time down here. So maybe I'll kind of talk together for Springfield guys. And so we're talking about, here's kind of the digital transformation Exactly. But they still have, after the pitch day, they had a
Hey, Eric, I'm in the office of the secretary. Nice job earlier.
Thank you. Well, it's a big step. I think we've got a lot of work to do. Obviously, Cam's done all the work, and once he started the whole concept, she came to us and said, I'm a college student, I just graduated, and we want to be Illinois the blockchain capital of the world. And all right, come on in. Come on in, let's talk.
It's ambitious.
It wouldn't have been possible without all their
I think between that and everyone else on this room, there's some good momentum. I've learned a lot.
It's interesting because to me, it's a platform play, right? I mean, it has to be about interoperability of data. And that's really what the focus is. And there's 4 or 5 issues, right? Known source of truth. What's the protocols? What's the validation mechanism? And you look at it, and it's not there. What was it, John was talking about? I'm not trying to make decisions yet. I see you're rolling on this way.
I completely agree with that. It's like, it seems so simple, but it's so difficult. Because it almost undermines like the societal foundation more than it's anything technology.
It's not a technology problem. The technology aspect of it, somebody was telling me, you're never going to find blockchain code, blah, blah, blah. I'm like, all right. So I went, stepped out of the phone and this job. That's not that hard. So we got the technology. I guess it's like,
It's funny though, how we had 4 or 5 of our slides.
How do you get it? You think everyone's the same?
It's funny though, because I think if anyone's going to be blockchain, it's going to be
you're right.
If you can basically, get a government-issued identity like that, that's verifiable in person, and then resell that to banks, KYC.
Exactly.
That's why fraud or something. Because the amount of fraudulent transactions and financial services fails in what's going on. Because everyone overlooks it just financial. It's the amount of fraudulent transactions and estimated. If we can really do what we need to do by just providing data, information, visualization of what's going on, looking at patterns, we can reduce fraud by 40%. It's going to be $320 a year for the states. By just giving people the information, because they don't know that this person is all these programs, and it's just basic.
National Medicaid, billion or something like that.
Medicaid and Medicare spend is kind of 50-50. It's the biggest expense of all government. It's going to be the biggest expense.
I think healthcare is
increasing faster than any of the other ones. The funny thing is, as it's increasing, the amount of funds are increasing faster than the growth of that spend. So there's more and more fraud. Even though, like I said, it's not how the issue with financial services is you actually owe financial market is as an individual, you know, if something happens to your credit or your financial records, there's another things to tell you. Healthcare gets finalized, right? So if a doctor files a claim on your behalf, and it gets processed, right? You know what services were told. It's just, it's amazing. And it's not just those doctors, right? It's the third-party administrators. They jump on it, and it's just, it's insane. Yeah, exactly. I know financial services are big things.
I actually think, I just pulled these yesterday to kind of help us like bolster what we're trying to say about Bitcoin.
You've seen a lot. You've seen a lot.
I went to, it was funny, I've never done it before, I went to the blockchain and all the transaction data for Bitcoin. Yesterday there were only 250,000 transactions. That's not that much. And then when you dig into it, about 60-80% of it, you can tell by the dollar amount statistically it's some sort of speculative. So people aren't really using it for money. They're trading it or some other kind of odd type of asset. Did you guys get something?
I stole a box and I took it back to this.
Any of you own any Bitcoin?
Okay, we can disclose that.
Here now, go ahead.
Go ahead. Now we can.
Tighten up that arm. Yeah. This is got the comments
I need to talk to you now. I'm like, all right. What? It was so funny. Just ran right into it. Right. Yeah, walking off the train.
Okay. But there's some of those things that where is it? Because I've been to the Innovation Center at the hospital, which is actually beautiful. This is the
Not super big. Okay, yeah, right. Smart people moving into the box. Yeah, okay. We need to go to Bitcoin, Center of Excellence, was in the Innovation Center. Okay. All they have to do is get students to start helping us. Okay. Yeah, I think okay. Yeah, no.
Oh, it's not a
so we will publish it on our community bulletin, but we'll also we just create a
oh, yeah, exactly. Yeah, we're looking at it. Government. Remind me, so I'll
go to our press release, you'll be able to access that.
I'll reach out to our not as if she doesn't have any place with for our you don't want to pay for absolutely.
It's a pretty easy process because it's products.
I'll give you my card in case you don't get it. They can't find it.
Wow. Okay, yeah. Yeah, yeah. Absolutely. No, that's really good. We're trying to
after that, so you can actually test something
Hi, how are you? Nice to meet you. Oh, Red Chalk.
Oh, you're heading back?
Thanks so much. You're gonna head back? Okay, that's fine. That's fine. All right.
Even if you do go all digital, you're still going to have black market trading. It's already happening now. No, the thing is, blockchain is just a database. It's just a database, and it means that you don't use the bank. It doesn't mean that you don't use the thing that adds value. You still need that value being held somewhere. But all it does is it takes the responsibility of security, validation, and the system against the yeah, and you can see all the things that you've ever bought with this IQ, but it gives you the responsibility of that ownership. Right now the bank has it. They're able to secure it, to prevent other people from getting it. But if it's your responsibility, and I take it forward and I find a way to data, it's yours. So right now you're paying for a bunch of features that the bank gives you, so you don't need them really. That doesn't happen now because that's what's happening with the diamonds. But let's just do that for diamonds. Because they track the diamond from yeah, well, this is it's called provenance. So if I gave you $2 million diamonds and conflict regions, they're not the worthless diamonds because they're not allowed to happen. It's the origin of diamonds. But if somebody can etch or take that identity as diamond
And you know what, let's get even on a micro level. I'd love to just sort of atomic level. This time absolutely, yeah. So if I change here, almost 40 years. The prominence of a diamond is right back when I was with ABS. So that's the way. And these are that prominence is my favorite collectibles art. Because let's say you're selling me a Monet, and I'm buying it. If it was on the blockchain, I can see that the registered owner of it's still a certificate, it's still a receipt, except I'll be able to know where that receipt was last placed. Whereas you could keep a fake receipt and a real receipt. I don't know where the actual owner is. So I can look on that database of owners and you are listed as an owner. I can still give you the product that you might it's still required to change the product to create a register. I had an idea to do something with golden bikes. People do it with serial numbers. What I was thinking is you can get a camera and welding. It'd be unique if I use fingerprints. And you don't have to scan all of them. You can scan well, you can pick front, left handlebar, rear, whatever, and you know that the bike has signatures. You also know where so if I want to validate the bike, I could take my scan check out fingerprints, bike. I don't need to know which one is the right one. Well, even now you're still good. If you steal a bike, you can take sandpaper and mess the whole thing up, but then you're almost guaranteeing that it's a stolen bike. Just like when you see a bike with a serial number scratched off, you know that it's a bike. Like with the welding, it's not something that typical bikes. All it does is makes so that when you find one, you know where it belongs. Not because you don't prevent it from being stolen. Just trace it back to the current that's something that's blockchain because they don't need a database. You still need a police come register your bike for that day in order to build that database because it's not a database. So you still need to have an effort to, or you could scan or you can make sure that all your bikes are legislated, all new bikes so after this date are entered into the database as well. It's not impossible. Like, it's something that I could do. Somebody that knows optics. I think somebody that knows the level of confidence that I need to capture you've done the thing is, like, it doesn't actually require a lot. It's really like somebody that knows the camera. And also, let's say you want to like if I was doing this, somebody would know so based on standing eye here, not there. So that's what happens. Somebody just needs to write a code that says, just recognize the yeah, so what we need is somebody to be able to figure out how to, what points to measure or a fingerprint. If you can do that, replicate anybody can do it. Like, it's not a complex thing. It's basic code.
light, use light for that. So you probably need a consistent amount of light. So you probably need a high beam on, consistent amount of light, or maybe there's a mid-level thing. And then you measure the depth. You can do is analyze depth. You're basically looking at data, analyzing depth of light, and putting that into a fingerprint. You're not actually scanning it. You're using an algorithm to say what's the depth profile of this thing in what is the possible angle. It's not complicated. It's just well, that's it. And every time the bike is sold, you have to register that it's sold. Kind of like a car. If I sell you a car, you need the title. There can be, if whoever provides the service does it, the blockchain doesn't have fees. But the person providing the service will not have value to it. Yeah, I need to get this show back on the road. Thank you.
All right. Hope you guys enjoyed your box lunch. Probably haven't had one of those since 5th or 6th grade, but we're bringing them back. So if I could have your attention in the back, we're going to go ahead and get the show going on the road again. So we'll have some of our Illinois folks back up again, and we're going to look at Chicago's position in the Fourth Industrial Revolution. And we're calling it that because it sounds cooler than just saying, you know, how's Chicago doing with blockchain? Because we feel that there is something happening with you know, with blockchain and the shared economy and distributed ledgers, and we're in the early days. I like to think of it as there's a certain percentage of people building tracks for the, you know, for things to happen, and then there's people building cars that run on those tracks. And right now we have tracks, different sizes, different gauges that aren't necessarily interconnected, and we have lots of little cars that run on those, but we don't have an ecosystem because they're not all connected. So I think the Fourth Industrial Revolution will come when we have an ecosystem and we have a protocol like, you know, HTTP or, you know, DLTP, you know, distributed ledger protocol. So I think the Fourth Industrial Revolution is coming, and I think what we heard from Rumi before was how Chicago is has been around for years. It's been innovating. You know, I hear the stories in London about them inventing the insurance industry with the shipping. They still use that to tell the story about how, you know, Canary Wharf and the financial district grew there, and the city grew because of somebody had the idea to insure ships that were likely to sink and help offset bets. So industries have been built. I think Chicago has a rich history, and I think now let's have a look at what's happening in a little bit more detail. So if we could have Michael Wands, we had up here earlier, Jennifer O'Rourke, who again was up here earlier, and Rumi Morales. And again, the type of session is going to be a little bit more Q&A. We'll see if we can maybe start with an audience questions to, one, get some engagement, and two, wake you guys up. So, I guess we've met you guys previously, but if you want to do a quick intro again to remind the guys who have forgotten who you are, and then what we'll do is we will start with an audience question.
Okay. And bear with me one moment. Hello. Okay. Well, thanks for having us. My name is Jennifer O'Rourke. I am the Assistant Deputy Director of the Department of Commerce's Office of Entrepreneurship, Innovation, and Technology. And within that responsibility, I lead a variety of tax credit programs, educational resources, and regulatory advocacy resources for small business owners and entrepreneurs throughout the state of Illinois. I also have the privilege of participating in what I would call a couple of special projects, and one of those special projects just got pretty big today. So I now have the privilege of carrying the title of Illinois' Blockchain Business Liaison, And as part of that announcement earlier this afternoon, I look forward to working and speaking with all of you to talk about how we can roll out the welcome mat for blockchain business in Illinois.
And I'm Remy Morales. I lead CME Ventures, which is the venture capital arm of the CME Group. We have been investing in blockchain or digital currency companies ever since we really started back in 2014. With investments in Ripple, Digital Asset Holdings, and Digital Currency Group. We have investment exposure to over 90 different startups in this space. I also am part of the CME's internal team, focusing on a number of our efforts related to the commercial application of digital assets and blockchain technology in the CME. I mentioned this earlier today. Some of you may have seen our Bitcoin real-time index and reference rate, which we launched last month, or just yesterday, the announcement of our digital gold offering together with UK's Royal Mint. Another note, I didn't mention this, but it's relevant to this panel. I also participate in a group called Chicago Next, and this is Chicago's public-private sector initiative. There are a number of different areas that it's focusing on depending on the committee. But for example, 2 floors down is 1871, which probably many of you are familiar with. That came out of Chicago Next web mobile group. Chicago Next also has a nascent fintech group. Some of you may have heard or have read of an initiative to create a fintech hub here in Chicago. That's something that I've been involved with as well.
Good afternoon. My name is Mike Wands. I'm Chief Technology Officer for the state of Illinois. I've been part of the state of Illinois for about 15, 16 months now. I spent 30 years on the commercial side, working in advanced technology companies from large Chicago leaders, Waste Management, Federal Signal. Spent a chunk of time at Microsoft, and then just before I joined the state, I ran a software company here in Schaumburg that was focused on healthcare technologies. And so Chief Technology Officer is a unique role. Each day is a little bit different in state government. I like to highlight that my day goes anywhere between being the curator at the museum all the way up to the mad scientist with a lab coat on and having access to the greatest, latest things. As you guys can imagine, technology and government, it just by nature ends up very siloed. And we, as Governor Rauner came in and formed the new Department of Innovation and Technology, we brought together the vast resources across the state into one Department of Innovation and Technology. Hardik Bhatt was mentioned earlier today. He is our secretary. I drive technology as part of his team. IT in the state is interesting. We have 40 plus years of technical solutions that are out there that many of you guys, the systems were developed before you were born and are still running in production. And the other day, I thought it was a good, kind of snapshot to see what we're dealing with when somebody came to me and said, we're not going to be able to go through the Windows 10 upgrade at our agency. And I said, well, why? What's going on? And they said, well, the system we have will not run on Windows 10. And I was like, all right, tell me more. And they said, well, it's a system that's used, we got 25 people use it, it manages billions of dollars of reimbursements with the federal government, and it was written in Lotus 123. Okay. So this is one of the mission critical systems that we have in the state, and so we're working really hard to bring forward not just the transformation of what we need to do to have a high performing technology organization, but we've got 4 digital disruption levers. Blockchain and smart contracts is another on really taking intelligence out of the systems and using them to actually have predictive aspects around cognitive learning and bots and things as such. So while we talk about a lot of the technical debt and the older systems that are out there, we have a lot of really important things going on, and we're very excited to be here as part of this blockchain event and fundamentally believe that blockchain is the future of how business should be transacted.
So the topic is the 4th Industrial Revolution and Chicago's place in it. Who would like to ask a question?
Because I'm shy and I don't like asking questions. Do I need that? Okay, so the announcement earlier was great, and I think this notion of either a 4th Industrial Revolution or some other excitement around what's going on here in the blockchain space is really good. Jennifer, you mentioned a little bit earlier in your role, you've used tax credit programs, and those have typically been used to stimulate and excite those participants, whether they're real estate developers or people moving businesses into our state. What particularly can we do for Illinois-based businesses, whether they're banks or insurance companies or exchange participants, software developers? This building's loaded with software companies. What specifically can the state or the county do to stimulate that same type of activity and growth around this notion of fourth industrial revolution?
Absolutely, great question. So some of the tax credits programs that currently fall under my purview, if we have any angel investors in the room, are the Angel Investment Tax Credit Program, the Small Business Job Creation Tax Credit Program that we're in the process of renewing. So to your point, what can we add to the tax credit portfolio to better enhance and support some of the blockchain technology that we hope to do? So right now, tax credits are not initially to make sure that they were a right fit for the state, to see what our neighbors were doing and how we wanted to incentivize business from not only a state perspective but also a regional perspective. So I know that there are some other states that are doing blockchain specific tax credits. I know New Jersey has one. And again, we're going to look at those models and see what works or doesn't work as we evaluate how we want to bring those into later parts of the Illinois Blockchain Initiative. I think something that we should really keep our eye on when we talk about incentives here are the different kind of incentives that aren't going to fall into the financial incentive purview. You know, obviously quite pertinent to the panel that we're on, Chicago is the epicenter of derivative trading. The infrastructure that we have in place right here, right now, is bar none. The amount of physical infrastructure that actually underlies the financial services infrastructure is bar none. The amount of miles of pipes, the fact that all those pipes run through this city, the fact that electricity is priced as low as it is, all of these contribute to create an incredible ecosystem for blockchain to thrive. So to answer your question not quite succinctly, but to really underline it, right now may not be the right time for those financial incentives, but now absolutely is the right time for all of the other incentives that the ecosystem as a whole provides this city.
Would that include easing of regulations?
Well, I think that the first part of the announcement, talking about the call for comments, is absolutely the first step in understanding what the appropriate amount of regulation should be. So we're walking down that path. I think we're walking down it by starting to have the conversation with the right people first.
Thank you.
Anyone else?
How's the state and industry working with education to ensure that there is that people coming out of Illinois universities and before that even have the skills that employers need for the future?
And so I think one of the things that's really important to highlight is when you look at technology in the state of Illinois, and then I'm going to kind of take that to more specificity around the answer to your question. Our investment in technology as a state is pretty big, right? I mean, we invest over $1 billion a year in technology. We have 1,700 employees, that are supporting, the 60,000 state workers, supporting the 13.2 million citizens across the state. And as part of that, as Brian mentioned at the beginning, we have a lot of incubators and innovation centers. By working with those incubation and innovation centers, we are making sure, or helping encourage, that the university systems are part of that. Yesterday, I spent my day out and had a chance to meet with Innovate Springfield, which is a facility that's in downtown Springfield. It's the innovation hub down there that's focused on trying to help bring innovation to Illinois and help bring things forward. It's based off of a joint effort with University of Illinois Springfield. It has a series of programs there that they run, including a Sangamon County CEO program that's there for high school seniors who get a chance to get involved and included in incubation type efforts in the innovation hubs. We believe that that's fundamentally a big part of it. We want to continue to work to hire and have more and more folks who can join us. The average age of an IT person in the state of Illinois government is about 51 years old. They've been around. About 40% of those people have the ability to retire in the next 18 months if they'd like. A lot of our systems are single-threaded with support because they're older technologies. So you can see that we've got a lot of challenges and we're working very hard to try and bring those folks in. So these innovation hubs that we have, I think the incubators are a big part of that, and a lot of the part that Department of Commerce and Economic Development have helped put together. And that gives us that ability to start creating some excitement. Now, Luis mentioned at the beginning, he asked one of the questions to us, which said, well, what are you guys doing with hackathons, right? Things like that where you're getting some excitement and the ability to bring things together. Next Monday, we, as you guys know, the state doesn't have a budget. We work really hard to try and do everything we can with the most effective, judicious, or best use of taxpayer dollars. And we are in the Thompson Center, so it's 3-4 blocks from here. On Monday, we're going to open our Innovation Center for the first time, which is an innovation center for the state of Illinois that was put together with all the surplus stuff that was found around the state to actually bring in incubation and innovation together. Governor Rauner's going to be there. It's going to be a big event for us on showing how we can bring technology and concepts and ideas and really as a state be an enabler. Right? We want folks to be excited about it, and we do believe that we have a good start there. I'm still really pleased with the amount of incubators that are out there. There's a lot of them that we work with very closely across the state, and I think those are really the heart of how we're going to be able to do what you brought up, which is how do we get more excitement around technology in the state of Illinois for high school and college folks.
Question though, I'm going to ask a question to you guys. Who here is the CEO or works in a blockchain startup based in Illinois? Okay. All right. And who here works in a corporation or venture capital firm that's investing in digital currency or blockchain companies? Okay. I would love in a year's time to see everyone's hand, or a lot more of you raise your hands, because I think what the state is doing is great. Right, and it's very, very important. But you can't build an ecosystem based on pro-state regulations and legislation alone. You need to have entrepreneurs who want to start blockchain companies, right, here in Chicago. You need to have investors willing to invest in them here. And it has surprised me, and I said this in my morning comments, given, right, our legacy of innovation and financial technology in Chicago, given the infrastructure that we have, why aren't more entrepreneurs interested in building these companies here? Why aren't more investors willing to take that risk to invest here? So it's strange, it meant not in most places does the government lead the way in terms of fostering an arena for innovation. Certainly Uber did not wait for regulations to make it possible for them to exist, right? So I'm very, very hopeful for what I'm seeing from the state. I can only encourage entrepreneurs and investors in Chicago to be bold too, right? Go ahead, don't wait for your addressable market to reveal itself. This is a nascent technology, yes. It's risky, yes. Is there opportunity? More than you can imagine. So go out and do it.
Absolutely. To just throw a couple more comments after Ramin and Mike's points, we do have such incredible infrastructure here in the state. To come back to education, the University of Illinois, both at UIUC and UIC, graduates more engineers every single year than the top 4 engineering schools combined. Let me say that again. What's that? They leave, and that is a problem. And let's look that problem dead in the eyes and try and figure out, how do we deal with retention? How do we deal with developing a more robust talent pipeline? Because we do have a very robust talent pipeline, but we also have one that leaks. So let's look at that. Let's also acknowledge the fact that we're starting to see a lot of boomerang talent coming back to the state, because this is such an incredible place to live, especially when we do, and let's candidly call out the reality here that we're competing with our coastal neighbors. And so when you try to make a life and raise a family in Silicon Valley or New York City, you're going to run into some lifestyle challenges. We don't have those same challenges here in Chicago. So we have a different type of talent and retention challenge and opportunity, which makes sense. But then you bolster that with all of the resources that the universities are providing us outside of just their graduate pipeline. So to Mike's point, with these incubators and accelerators, the Research Park in UIUC, the Coleman Entrepreneurial Center at DePaul, the Pulaski Center at University of Chicago, and if I had enough time, the list would go on and on and on. You know, to Brian's point, when we were making the announcement, there are over 200 various types of co-working facilities, incubators, accelerators, and academic resource institutions in this state. That means something. It means that they're supporting all of that talent development, all of those ideas. They're partnering these students with the appropriate corporates, and they're educating them on how to find funding. Now let's go full circle and let's come back to Rumi's point, that we are providing all of these resources, we're throwing the line's baited, we need our fish to nibble a little bit more. We need more people that are willing to take the risk to start these companies. We need more people that are willing to take the risk to invest in these companies. We could drill into, you know, a couple of the requirements about, you know, successful venturists, then taking that money that they exit with and reinvesting it, and there are all sorts of components to this life cycle. But we got to start somewhere, guys. And so here's where we start. You got an idea about blockchain? Do you feel energized about blockchain after this? Let's do it. Do you have some money that you want to invest? Let's make sure that you connect with some of these people in this room. And if you don't find the right person that you want to connect with, please connect with me, because I can help you with that.
Just a side comment, completely unrelated to blockchain. It's all about people, and if I'm working in California or if I'm working in New York, the non-compete agreements are either invalid or illegal. Here in Illinois, as soon as I get a new job, I get slapped with a non-compete agreement, and kind of prevents people from sharing ideas across companies. Is there any plan to change any of that?
This I am a bit more unfamiliar with. I don't know if anyone else.
Did you say non-compete agreements? Yeah, okay, so I think non-competes are not a state required type thing. I mean, the regulation does not have anything to do with it, but companies are asking for that because they've been able to get away with it. But most non-competes end up not being really valid anyway, but yeah.
Rudy, can you provide an update on the FinTech Hub, the status of where we are on that? Because that might provide a central place for some of these investors in developing the technology to find each other.
Sure, and there's a lady sitting in front of you named Lisa Curran who can talk about this a lot more than I can. I will just say that it is definitely something that a number of us, both large corporations and startups, have been working on, as well as with members of World Business Chicago. We are very close to approaching a fundraising stage now and finalizing the location of a possible center as well. So you will be seeing more details about that soon. But I think it's definitely something that we've committed to. There's been some initial funding for, and we will continue to build this as a space. But I will say again this, and the notion of co-working spaces and all that, you know, is great. We have never invested in any blockchain company that happens to be in a co-working space or that has ever needed a fintech hub. Although obviously you look at some place like Level 39 in London and what they've been able to do to energize the fintech community is terrific. But I'll go back to putting the onus on each of you as individuals just to go out and start your companies or invest in your companies. Don't necessarily rely on government, don't rely on a space, rely on yourself to make something happen. But Lisa, if you want to raise your hand, she's Miss FinHub, and she can talk to you with more details after this.
I mean, being from London and seeing the rise of, I was one of the people that helped launch Innovate Finance, the industry body for fintech in the UK. And one of the things that I found is that ecosystem is important, and not just, you know, putting something out there, but actively nurturing it on a regular basis over a consistent period of time. So Level 39 over a consistent period of time has done that, but it was a real estate play. It's the Canary Wharf Group was actively selling co-working space to nurture the next generation of banks, you know, 3 or 4 of whom might not be around in the next 10, 15 years. So part of it was nurturing those companies. the next generation of companies. So I think, I guess, sorry to steal the mic for a bit, but an active ecosystem is something that is required, and I think things like this on a regular basis, there should be 5 or 6 competing events like this on every year here in Chicago. And I'm glad there isn't, don't get me wrong. But it's that sort of thing that's needed, and I think you're starting to see, I'm starting to see the guys from fintechs pop up a lot more. The announcement here obviously helps, but it requires government to ease some of the regulation. It requires the
Get out of the way.
Yeah, basically get out of the way, but also announce that there's something happening, and then let people sort of find it. But it happens organically, but it has to be nurtured for a consistent period of time. And I see it happening here, which is why we're devoting a lot more time here. So it's coming. Let's make it happen faster.
And just to clarify, so you see this organization, FinTechs Chicago, which is very much kind of like an Innovate Finance, but it is a FinTech association based here in Chicago, which Lisa Curran is a co-founder. And they have been doing a lot in terms of programming and creating just that, right? Trying to assemble a cluster, as it were, a fintech ecosystem here in Chicago, connecting corporations and startups, and now hopefully joined together with a physical space.
Yep.
Does the state see any role in terms of education, be it training at something like the Q Center, or encouraging college level education on the topics, or potentially even high school level in computer science classes? Is there any role that the state sees themselves playing in that regard?
Okay. Great question. Thank you. So the state recognizes that there are a lot of shops that are doing this really well outside of the system, right? So where do you go right now if you wanted to go take a coding class? Are you signing up for that at College of DuPage or U of I? No, to be quite honest, if you go to U of I engineering, they expect you to come in with coding skills already. I'm not sure, if I would look at any level of academic institution first, I'm going to look at General Assembly. I'm going to look at Corsica. I'm going to look at all of these private institutions that are doing concise, immediate access courses. So if that's the solution that has been successful thus far, I think the question really becomes, how do we incorporate that solution into the current academic structure? Good news is there are people who are looking at this. We have an incredible Secretary of Education named Beth Purvis who has her eye on this with laser focus. The reality of the situation is that there's a lot going on. So like anything, when you address the problem, you do your due diligence. And first, that's defining the current state. And that's defining a very, a large scope with a very wide variety of solutions within the current state. So she's in the process of doing that, identifying what's working well, and then supporting those players so that we can continue to do that, or we can broaden the scope of it. So the answer is we're a little midstream right now, mid-process, but we are trying to figure out what is the way that we can incorporate STEM education more fully into all levels of education, but also too, let's be clear, we need to start very early. If you do not engage young girls by 4th grade, you lose a girl's ability to be engaged and then actively participate to a career level with STEM educated content. So we got to get in there early, and we have to do it in a very smart way. So we're exploring what the right path forward is right now. Major component of that will be working in conjunction with the private sector or following the models that they've been successfully using thus far.
Cool. I think we have time for a closing statement. So my question to you, all of you, would be why Chicago? And talking to an external audience, why should we come to Chicago and take part and get involved?
It's a great place to live. I think it's a great question. I think when you think about what Chicago brings and the university system, the feeder systems that are out there, as Jennifer mentioned, a lot of the folks who are graduating with some of these advanced knowledge bases are moving into other states. There's no reason for that. So you have a workforce that's available and willing, you've got the infrastructure necessary. I think from the infrastructure of transportation, from the infrastructure of the assets itself, whether it's power or bandwidth or the incubation centers that are out there as we look at these innovation hubs throughout the state, I think those are very important. But most importantly, Chicago's the financial hub of the world. I mean, you got to think about that. Everybody thinks it's New York or San Francisco. You think about it in that way. What happens in Chicago and the aspect of what CME brings to the board and what the board brings to the board, what the financial institutions, insurance. You look at those different aspects, and it's a full platform. You've got the full platform opportunity here in the Chicago area.
I'd go 3 things. Ecosystem, which Mike clearly identified. Livability. If anyone in the room isn't from Chicago, you're missing out. This is an incredible, incredible place to live. And the third, and this is just my personal opinion, but the Au Cheval burger. Because if you haven't had that and you don't have immediate access to that thing, you are really missing out.
For me, I'm not from here. I've lived in 7 different countries, actually, in 15 plus cities. I will say, when it comes to blockchain and why build something here, or fintech for that matter, I think about New York City, where I've had the privilege of living, and everything just feels so impossible there. And so you're like, oh, I'm going to beat the system, we're going to do it. But you're kind of fueled by this anger. And you want to fight. And California, where I've also lived as well, everything is so possible there. It's like, oh, I can do this, I can do that, I can do this. And so you can't really, it's hard to focus, or you've got the fear of missing out thing, right? Chicago, it's just real. You can get it done here, right? So go do it. Now, I don't know why people are a little bit afraid of the moonshot here in Chicago. Maybe it's a Midwestern humble thing. But don't be. Obviously, you've got a very supportive government that's making it easier for you. And I think about outsiders, like I am an outsider here, not saying I'm like Obama, but Obama was like an outsider who found his home here in Chicago and made something wonderful. Oprah Winfrey is another, right? There's something about this city that it doesn't matter if it's possible or impossible, you can just do it here. So why not try?
Right, so Chicago, it's possible here. Okay, I like that. Round of applause for our we're going to be moving on to our next session shortly, but actually that was quite engaging. I'm tempted to come back sooner rather than later. Now we're going to be looking at blockchain for insurance. So we have Raymond, I'm going to pronounce this wrong, Zenkic? Perfect. Okay. I'm going to say Zenkic. Great, who's a managing partner at Red Chalk Group, and I think you're preloaded.
I am.
Which one is it?
I think I'm going to use the microphone. Can you hear me in the back? Yes? No?
Is it?
I didn't pass that test. Can you hear me now? Great.
Isn't it here?
It's an outlet.
Okay.
Good afternoon, everyone. My name is Raymond Zenkic. I'm a managing partner with Red Chalk Group here in Chicago. And just wanted to thank Louis for the opportunity to present today. From the earlier panel, Chicago is the place to be. And no one mentioned the World Series champions. So I think that's another testament to the fact that anything can happen here in Chicago. It's also exciting, I think, to be in the blockchain and technology space here. All the reasons you heard in the previous session and prior, the announcement from the state of Illinois, all the startups and the established firms here today. It's also an exciting time to be in insurance. And yes, I actually said insurance. And it's excitement driven by technologies like blockchain and the opportunities and the challenges that it represents. And for a lot of our clients, they are terrified, but they also see the promise that technologies like blockchain can bring. And these are large established firms trying to understand how to tame this beast called blockchain. So what I'm going to present to you today is we had an event in Chicago, early November, called the Blockchain Insurance Summit. And it was an industry-only event, and we covered insurance for an entire day. And I wanted to present to you a session that ended the day, and it was around use cases. And I recognize this is not an insurance sort of conference, so I'm going to try and stay at a high enough level for you, but I do want to try and convey why blockchain, and I would add why uniquely only blockchain can help solve a lot of problems in the insurance industry for the insurers and also for regular customers. And then I'll try and end with, I think, 2 key takeaways from that event that I wanted to share with all of you. So this was presented a couple weeks back. I do also want to recognize the other people on the panel with me. Mike Fitzgerald from Celent, Patrick Schmid from the Institute, Dave Urinak, he's also here, he's from my company, Red Chalk Group, and then myself. First, the business context. You all obviously have purchased some form of insurance over your life, whether it's for a car, perhaps life insurance, perhaps some more complex products if you have other assets you want to protect. But there's a couple of pain points that hopefully resonate with you. If you're the insured, that is the person getting the insurance, the policyholder, let's face it, it sucks. Right? Who here has enjoyed the insurance policy process? No one does. It's terrible. Premiums are at least always perceived at being too high. Weak product innovation. I mean, when's the last time you heard of innovation in insurance? Slow entry into emerging markets. This is something where blockchain is uniquely positioned. The example that we heard a lot a few weeks ago was, think of the farmer in Bangladesh wanting to get crop insurance, or think of another, perhaps third world country where someone wants to obtain some type of insurance for a home, for property. It's essentially impossible, mainly because no insurer is going to spend any amount of time trying to develop a product for those countries. Insurer pain. It is expensive to be an insurance company. There's a lot of regulatory issues they have to deal with from the state. That's part of it. But a lot of these systems, as Mike Wands mentioned before, Mike, if you think your systems are old, this is like before your parents were alive. I mean, some of these systems are absolutely archaic. And I spent a long time actually building some of these systems, or actually to rewrite them, and I can tell you, Lotus 123 was in some cases, advanced. And just so you know, I deployed AS400 to several insurance companies in my previous life, so I can, it's for aging myself a bit. Really costly intermediaries, fragmented data sources, and it's a ton of manual processes. So there's fraud, there's overly, sorry for the Illinois folks, a perception that there's overly stringent regulation. Okay, but there are some threads that come through. One is around automation, third-party integration, and I would add disintermediation, so desire to get rid of third parties where you can, trust, and then market reach and efficiency. And it's really market reach and efficiency where I would add that something like blockchain has a really unique opportunity in the insurance space. You can think about new types of insurance, peer-to-peer insurance, micro-insurance. These are all enabled by blockchain, and they're enabled by blockchain because it makes it cost-effective. So look at some use cases. And this really comes from Mike from Celent, so I should give him some credit. How do you identify a use case? And 90% of the use cases we see are terrible, so we tell our clients, no, that's not where you want to focus. And some of the reasons for that come down to what's the size of the opportunity. This is not technology looking for a problem. You really have to make sure the problem has a business case you can solve. How hard is it to implement? How complex is the design? Is there potential to disrupt an incumbent? Will there be industry cooperation? And what's the level of regulatory approval required? All of those come into the mix in thinking about a blockchain use case. Let's focus for a moment on design complexity. We talked about smart contracts before. If you're going to take away anything from this event around insurance, it's that it's really the combination of blockchain plus a smart contract that makes insurance, the opportunity for insurance with blockchain possible. Immutability, I think someone mentioned that in the earlier part of the day. That's simply the ability to have 100% confidence that the history being recorded is in fact been validated and agreed to. And by the way, 2 years ago, as I was getting into the blockchain space, I never heard of the word immutability before, I can tell you. But now it seems to just roll off the tongue. Consensus, right, that's the mechanism by which you're going to agree to things between parties who don't trust each other. And that's a huge design element. Should it be private or public? And permissioning. Is it permissioned or not? And then oracles. Oracles, there are some really unique opportunities using oracles in the blockchain world for insurance. For those of you who don't know what an oracle is, it is fundamentally an agreed-to data source, objective third-party data source. A good example of that would be global flight data that's maintained, it's intergovernmental set of data, it's publicly available. You can know, for example, if flights have been canceled or not. That's an oracle that can be used to trigger a contract and make it real for an insurance example. You can take a smart contract that says, I have flight insurance, and if at any time my flight gets canceled, within 24 hours you're going to cut me a check to reimburse my cost for that flight. I'm going through this right now for a trip that flight was canceled due to weather. It's been 5 months. And that's somewhat par for the course today. So coming back to that customer experience, which is being terrible, that's a good example of it. So what are some example use cases? This is very insurance specific. I'm going to go through this quickly and then go to some examples that are actually live in production today. So in the insurance world, there's the notion of a front office that's sort of customer facing, middle office, and then back office. Back office, think of all the ugly sort of systems that support the company. In the front office, a lot of the blockchain work is around trying to make unique products viable. So that's where the creativity is coming into play. I mentioned something like peer-to-peer insurance, where you or a group of people can insure yourselves. In the middle office, the area that a lot of insurance companies have been focusing on is claims processing, and the real simple story there is trying to reduce manual labor cost through use of blockchain. And the main aspect of that is being able to look at a single set of data between multiple parties that you know has been validated and verified, and you no longer have reconciliation issues. So in the insurance world, anytime you have parties who don't trust each other, you're always going to say, well, is that right? I'm not sure that's right. Is that right? And then there's a lot of back and forth that occurs, and it wastes time. Back to the middle office, I'll just mention parametric for a moment. That's probably the one area where I would say blockchain is the best natural fit for insurance, and parametric risk is a fancy way of saying black or white, did the event happen or not? Because if I can again rely on an oracle in the flight insurance example, that can be completely automated. You could do that out of your garage. You could literally, and some guys did actually a hackathon, they built a product that does this. But that being said, the real challenge is getting customers, which is a whole other story. Back office, there's a lot of processes that if you had blockchain in place, you could really simplify your life in the back office and save money. Provenance, which is like tracking of an asset and who owns it. And an example here is a company called Everledger, which is currently tracking the provenance of diamonds. And the customers for that are not retail, it's actually governments, insurance companies that want to make sure that what they are insuring is in fact, they can prove that you own it, number one. And if there's fraud, for example, let's say that you happen to have insured your diamond engagement ring with 3 companies, they can work together with other companies, insurance companies, to try and detect that kind of fraud. And there's some other risks that I'll just gloss over that are, not risks, but opportunities that are more systemic, that those are meant to be as sort of cross-industry. And I won't focus on those, but if you have any questions, feel free to reach me afterwards. So there have been some publicly announced blockchain initiatives in insurance. And the reason I mention this is in a lot of our client discussions, our clients will oftentimes say, well, tell me who's doing what. I don't believe there's people actually doing this. And so there are a couple of very unique ones. The first is in the world of reinsurance. And again, I recognize this is not an insurance group, but reinsurers insure insurance companies. And what they face is a lot of friction between themselves and their customers, the insurance companies. A lot of back and forth. These contracts are very complex. There's a lot of legal interpretation around them. And some companies, like Symbiont, for example, and I believe even consensus, they are putting into smart contracts these agreements, which means that a lot of the friction goes away. And believe it or not, reinsurance companies like that. You may ask yourself, well, why would an insurance company like the idea of accelerating payment? Normally people have this adversarial view that my insurance company is always trying to deny a claim or always trying to delay a claim. It's a little bit different for a reinsurance company, and I would argue even for an insurance company, that what they want to do is they just want to make sure that they've modeled the risk correctly, they've priced it correctly, and if they are certain that all the terms have been met for filing a claim, they should be willing to pay it out pretty quickly. Blockchain allows that to occur more quickly. And the example here from the reinsurance world is smart contract based, as I mentioned before, and it's a recently announced initiative by 6 of the world's largest reinsurers in the world. These are probably companies you've never heard of, but your insurance companies probably have arrangements with them. They're based in Europe, which is interesting. So from a regulatory perspective, that raises some questions. Was this easier perhaps to do in Europe versus the US? And this is real. They're doing this today. Catastrophic swaps and bonds. This is an area where blockchain can have a tremendous, I think, be a force for positive change in the world. Hurricanes, floods. There are companies who will insure these types of events so that people can get insurance for them, for example, for your home. A big issue, though, is if I, as a reinsurer, know I'm going to have a bunch of headaches in trying to work through a hurricane claims if it occurs, I'm probably not going to be very eager to participate in that from a product perspective. Blockchain provides an opportunity, again, to simplify a lot of these things. The way to think about it is this makes investment in these kind of products more attractive, which means there should be more capacity to provide insurance to people, which is sort of a net positive for society. So who's doing this? Again, smart contract based. This is Allianz, and this was done with Symbiont. So they have a live product, a catastrophic swap, hurricane, for example, that is live. Provenance, as I mentioned, this is tracking of assets to prevent fraud, or at least ensure that I'm insuring what you say you own. This uses the decentralized ledger aspect of blockchain and really could only be done using blockchain fundamentally. And I believe Everledger, is anyone here from IBM? I believe Everledger is using IBM's product to support this, to support what they're doing.
That's correct.
Is it? Oh, thank you. And then lastly, peer-to-peer. This is, again, just an interesting opportunity that blockchain affords, an ability to create new products that allow, I guess, more diverse type of products you wouldn't have thought of before. And the company doing this is called Lemonade. They recently had an announcement a couple of months ago. Somewhat secretive. They're slowly describing what they're doing more and more and more. It's believed to be blockchain-based. And it's allowing them to at least present themselves as an insurance company. I don't want to misrepresent what they're saying, but they're trying to be a peer-to-peer insurance company targeting renters insurance initially. So that's a bit of a summary of the event and the use cases. There are 2 things I wanted to leave you with that over our time over the last year and a half and working with companies in the space that seem to resonate pretty well with people. The first is to think of blockchain not as a noun, like blockchain as a thing, but think of blockchain as a verb. So in other words, blockchain enables a lot of new activities, new interactions that perhaps weren't possible previously. So you don't buy blockchain per se, you're buying a capability. And with that, there's a technology stack involved, a set of business processes involved. So you're not buying blockchain. It's important to keep that in mind, because we've actually talked to people who say, where do I buy blockchain? And you don't buy blockchain. You may buy services that some vendors offer in the space, offer solutions, but you're not buying blockchain per se. And then lastly, check my notes real quick. One of the comments that, I forget who had said it at the event, but they said the way to think about blockchain really changing the insurance world over the next 10 to 15 years is in that period of time, his sort of provocative thought was, think of insurance as being only software. Essentially no human, or very little human interaction. You're not going to talk to an agent, you're not going to talk to a broker, adjusters won't even be in the loop, back office, highly automated. So the provocative thought is, would blockchain lead to a case where insurance is literally a software product, and you have vendors essentially selling you at the edge of that software product a policy. You're online, you're just going to go online, buy even life insurance online, no agent, no broker, etc. A lot of issues in seeing that become a reality, but I just wanted to share that thought with you. And with that, any questions? Do we have time? Okay, great. Any question on the exciting world of insurance? No? Yes, here, yeah.
So, you were talking about the different use cases for insurance. Is there anything that they can do in combination with all the new ride-sharing stuff that's coming out to maybe disintermediate some of that along with the insurance policies behind it?
Great question. And that ties a bit to peer-to-peer to some extent. So the question was, is there a role for blockchain or insurance, or what is the impact on blockchain and insurance on things like ride-sharing, like Uber, for example? And I'll give you a very aggressive view. I mean, the first view is that blockchain can disintermediate Uber. I won't address that issue. But from an insurance perspective, if I'm an Uber driver, just insure me when I have a passenger in back that's an Uber passenger. That's all I want. So coming back to the insurance as a software product, I can begin to think around things like IoT or connected car to know, number one, that I have an Uber customer, I can verify via his GPS coordinates, he's in my car, I now know to turn the meter on for my metered insurance product, right, until that person leaves the car. That's one example. And what that does, ideally, and this is a bigger concern that insurance companies have, is does that grow the market or does it shrink the market? And it's still to be determined which way that goes. Another concern insurance companies have is that at a macro level, when you think you have autonomous vehicles, the view is now that's going to result in lower amount of accidents, and premiums will start going down. So if you're an insurance company, you're trying to understand the impact of that on your business as well. Well, someone else in the back who had a quick question. Yeah.
Yes, I actually, my day job, I sell life insurance, and I'm curious to know, are there any insurance companies that have actually taken into blockchain or are a blockchain startup in the insurance field in Chicago?
In Chicago, I don't know about insurance startups in Chicago. I'm assuming there are, and I apologize if they're here today. I can tell you that most of the insurance companies that you know of by brand name, as well as insurance brokers, are all looking very closely at blockchain. They have internal groups, strategy groups focusing on it, some of whom have proof of concepts going on underway. And the way to maybe tie the life insurance example to blockchain and the earlier conversation with the state of Illinois, or the panel of the state of Illinois, is that I can imagine a point in time, like 20 years from now, where my death certificate will be on the blockchain. And anybody will know that, unfortunately, I've passed away. What can you do with that? Well, there are actually a lot of policies in the world today where people have died and they have life insurance and there's no payout. It's not been paid out yet, right? They may have not had family members. And so insurance companies actually want to pay this out, believe it or not. There's a lot of reasons as to why they would want to. So that's an example where if you incorporate blockchain with death certificate sort of notification to a smart contract with an insurance policy, you could potentially automate the payout essentially of that policy. Are we done, Louis, or is it time for one more question? Or?
We'll probably do a quick one.
Yeah, one more question. Yes.
So you talked about between the insurer and the insured, but I imagine there's also kind of a third party of provider, right? In the case of either
Yes.
auto insurance, health insurance, home insurance. Is there any use cases
Yes.
in that way there? Is that something that's live right now?
Yes. I didn't focus on that here because it's another level of complexity. In the healthcare industry, the payer side of things, and we actually had a dedicated session on that at our event. I can give you one example, two quick examples. And just right now, well, auto. So one question would be, with your policy, you probably get some kind of a savings if you go to a garage that's sort of verified or certified by your insurance company. There's some belief that you can use blockchain to better enhance that verification process. So you're not just walking into some guy saying, yeah, I'm an Allstate certified shop. You can actually walk in there and actually verify that he is in fact an Allstate certified shop in real time and know that it's in fact accurate. When they replace your airbag in your car, to make sure it's an OEM product. This is it's an issue for insurance companies because they don't want to be in a situation where they're paying for an OEM airbag, like it's like $400, and the repair person says, yeah, I gave you an OEM, and the reality is they put in like a knockoff, like $50 Chinese airbag product. It happens, by the way. Not only has the insurance company is a fraud, but it's also put you in harm, because that product is probably not up to spec, it may not perform correctly. In healthcare, I was at a conference in Nashville a couple months back now, and I was shocked by this actually, is it never occurred to me to think about you or your loved ones or friends, I don't want to call it process, but experience, healthcare experience as a manufacturing process. So you walk into the hospital, and for the next, let's say, couple of days or weeks, think about all of the activities that occur to you, all the inventory of items that you consume. And if you begin thinking about it as almost like a manufacturing process, it becomes a supply chain activity. And so a lot of the more advanced thinking is trying to use blockchain to now provide an audit trail. So when you've gone through your malady or whatever your condition is, your insurance company will know that yes, you were given the right care at this point in time by this doctor, given this medication. What was amazing to me, however, is the person acknowledged that the value proposition is not to make sure you got the right care. It's not, for example, to make sure you lived longer or that you got the right care. It's actually to minimize the exposure to risk or malpractice. But I guess you could think that it's the greater good, but it's actually not. It's financial. With that, thank you very much again, everybody. Thank you.
So we had another speaker descend into death again, but I think there's actually quite an interesting use case for a product, because now that we have digital services for, like Facebook, who owns that data, you could actually bring that data to a death, file, and actually you can release your files and give ownership of your digital assets with that actually using blockchain. So that's actually a digital will is a use case for, releasing your digital content. But that's enough about death. Let's talk about other things that are more exciting, like regulation and compliance. So up next we have our panel on regulation and compliance. This one is moderated. Let me get mine. So if we could have Colleen Sullivan, who's managing member at Sullivan Wolf Claus, is going to be moderating. And then we have Manny Flores, John Markovic again, Jennifer O'Rourke, and Joe, I'm not going to pronounce it right, am I?
Take a chance.
Cucciolo.
Chicola.
Close enough. That'll do, from bit A and L. So if you guys want to come up, and I'll give the floor to you immediately so that you can do your intros.
Great, thank you. Hi, I'm Colleen Sullivan. I am a co-founder of Sullivan Wolf Kalis, which is a law firm here in the city. We specialize in private equity, hedge funds, proprietary trading, venture capital, blockchain technology, and digital assets. I'm also co-chair of the FinTech's Legal and Regulatory Committee. Thank you for joining us. This is the Compliance and Regulation panel. It's an honor to be included with that outstanding group of panelists who represent both the Illinois and Cook County governments as well as the private sector. These individuals are all thought leaders with respect to innovating the regulatory framework itself. I think you've seen some of that earlier today. But they use the following principles as guidelines as they think about regulation for the state of Illinois. The first is they view regulation through the lens of economic development and innovation while creating workable safeguards to protect the integrity of the marketplace. Second, a belief that government and private sector collaboration is critical. The third, belief that if the government itself is willing to innovate, which Illinois and Cook County have established here today, that will attract private sector innovation to our state because, one, the government will have an in-depth and informed understanding of the emerging technologies that it's governing because it itself is engaging in those. And number two, it will have already established relationships with the private sector through working with the private sector and carrying out its own initiatives. So with that said, let's get right to it. I believe you've all already met Jennifer and John. So Manny and Joe, could you please introduce yourselves briefly?
Colleen, thank you so much. So my name is Manny Flores. I'm an attorney at the law firm of Arnson & Lair, where I'm a partner in practice on financial services regulation. Prior to joining Arnson & Lair, I had the privilege and honor to serve as the head of the Department of Financial and Professional Regulation, where I was in charge of regulating all financial services companies and also licensed professionals. It was in that experience where, frankly, I was first exposed to Bitcoin and blockchain. So thank you for having me here today.
Thank you. And for those that I haven't met, my name is Joe Ciccolo. I'm the founder of BitAML, and I provide AML and KYC consulting to Bitcoin companies, Bitcoin startups. They could be engaged in any number of activities that intersect with the traditional marketplace. That could be a Bitcoin kiosk operator, Bitcoin ATM operator, Bitcoin exchange platform, trading, and other innovations. And ironically, after a decade of experience in bank compliance, my first interaction with Bitcoin at a Bitcoin event was actually standing behind, or I should say in front of Manny at a presentation here in Chicago with the CSBS talking about regulation. So I'm very pleased that there's that interaction between the private sector and government.
Great. All right. I'm going to start with you, Jennifer. We've seen different types of actual and proposed state regulation, ranging from New York's BIT license to the recent proposals in California. What Illinois is doing feels very different. You've talked about viewing Illinois' regulatory efforts as ambiguous by design. Can you please elaborate on that, and also how it could help attract business to the state?
Yeah, absolutely. So, first and foremost, I'm here as a representative of an office that does economic development for the state. So as a non-regulator, it's very important for me to support you and to think about regulation through your lens. So let's unpack this a little bit. Let's talk about what these regulations that have already been enacted in other states have meant to those states' constituents. So let's use the easiest low-hanging fruit, New York. With the BIT license, we now have an incredibly small amount of licensed entities in New York State. We have an incredibly long waiting list that are at some degree, through some degree of the process. We have seen a double-digit amount exodus of Bitcoin companies leaving the state. And we've also seen some of the ancillary states around New York be able to leverage tax credits as financial incentives to expedite that exodus as well. It's been incredibly problematic for New York. So we have a bit of a lessons learned opportunity here to see what has worked and what has not worked. So what do we do with all of that knowledge and information? Well, obviously, first and foremost, we need to make sure that the consumer is protected and that the financial systems are protected. But what can we do when we keep those things in mind to ensure that we do not remake the same mistakes that have already been made? Well, we basically want to recognize a few things. We want to recognize that this is new territory. And we want to recognize that we don't want to do anything that would be so prescriptive that it would have us fall into line with some of these other states that have made these mistakes before us. So again, going back to the announcement this afternoon, this really leaves us at a place where, what do? We start a dialogue instead of starting by enacting, prescriptive regulations. And that's what we've taken that first step down that road, so that, again, to use the words that I've already thrown out so many times today, that we can roll out that welcome mat to our blockchain businesses in the state of Illinois, because we've seen what happens when we don't elsewhere.
Great, thank you. Manny, you speak frequently about the importance of industry-led best practices and standards. Could you elaborate on that? And then Joe, after Manny, could you please speak to what you see with your clients in terms of they're already self-regulating to a certain extent? But Manny, let's start with you.
So when I served as the acting secretary of the Department of Financial Professional Regulation, I was a member of the Conference of State Bank Supervisors. And for those of you in the audience who don't know what that group is, that is the non-for-profit organization that basically represents all of the state banking regulators that are responsible for the licensure of banking institutions, the chartering of banking institutions, but also of organizations, companies that are transmitting money. These are agencies with a tremendous amount of regulatory authority and work with the various federal banking and financial services regulators. We were approached by a number of individuals who had been in the Bitcoin space, and there were just a lot of questions about what regulations applied to the various types of businesses. And I had to tell you, when the regulators were first approached with this whole notion of a crypto digital currency, there was just a lot of misunderstanding, a lot of concern for what the technology really meant. And I got to tell you, even today, even at this point as we speak right now, there's an ongoing debate about what is the proper way to regulate these emerging payment systems. Right now, as you probably are aware, the Uniform Law Commission is actually meeting. They've been convening working groups to help advise and create a standardized law. You also have the Conference of State Bank Supervisors who provided guidance on this and who are providing this information to the respective state members. And then you also have the federal government that is weighing in on the topic. I have to tell you, an observation that I made, even back then, and it's more relevant now that I'm in private practice and representing companies in this space, is that I'm concerned that there is this knee-jerk reaction on the regulatory side to immediately want to implement an existing law that frankly was never contemplated for this kind of use, or B, for the regulatory or the policy-making side to immediately say and assume we need to regulate or need to do something without even really fully understanding what it is that we're actually dealing with. So I've been a big advocate of reaching out, calling on the private sector, whether it be the insurance industry, the banking industry, or folks who are actually trading in Bitcoin, to come together, to have an open dialogue, and to think about setting guardrails, best practices, and really have it be industry-led, so that it's not just for the sake of, frankly, for trying to establish a more market-friendly environment, but really establishing an environment that's actually going to work in the marketplace and not end up with well-intended laws and regulations that in the end of the day do not allow for this new amazing technology to be fully commercialized and then to expand in terms of potential uses in a broad array of industries. So for those of you here, I highly encourage you to collaborate with organizations like Fintechs. I'm also a member of Fintechs. Fintechs is a local group here that is an advocate and promotes this type of innovation, working with private sector actors and then working with regulators and policymakers. But I can tell you that I just think a big concern that I have is, again, for that the government acting too hastily, frankly, and not having enough private sector engagement on the front end. So That's my take.
Yeah, I absolutely agree with Manny. I mean, having that, having that highway with two lanes, the private sector and government working together is crucial. I think, and Manny and I talked about this, if we had done that maybe 2 years ago and tried to reach out between the community, I don't think the Bitcoin community was very receptive to government. And unfortunately, the BitLicense became a self-fulfilling prophecy in that everybody said, see, I told you so. The government asked for comment, and this is what happens. That's not what happened. I don't agree with how that played out. But I think having those open conversations now, as the Bitcoin community has very much matured, a lot more players in that industry are individuals with entrepreneurial backgrounds, entrepreneurial mindsets. They're really focused on building a business, and they want to know, am I regulated, am I not? It's not so much, give me exactly what I need to do and that sort of thing, but it's really having that openness and that conversation. And I think the industry, quite frankly, is ready for that conversation, and I'm glad Illinois has taken that approach.
Great, thank you. John, you're leading an initiative where Chicago's Cook County will test use of the Bitcoin blockchain for transferring and tracking property titles and other public records. Can you tell us more about that, including specifically the potential impact on Illinois regulation eventually, what Illinois may learn through your program, and economic development?
Yes, thank you. It's important to know in land records, really the highest you'll go besides a judge as far as, you could consider the county recorder a regulator in that, there really is no higher place to appeal to. There's no state agency, at least in Illinois, that governs, what can be recorded, what can't be. We look to state law, obviously, and, we currently have a Conveyances Act that is extremely outdated. It only considers paper documents. So, when I learned about smart contracts and how, this idea could completely transform how real estate is purchased, I reached out to the International Blockchain Real Estate Association. So if any of you have never heard of that, you have now. I think back in December they had 200 members, and they've grown massively. They have over 1,200 members now since then. So. And that's because there's a natural fit between blockchain and real estate in that we already keep these records in what's called a chain of title format. So we're already naturally used to keeping these records in a chain. The problem is we do it on a client, just a single server, and there's no consensus or verification of records. So, so I reached out to them and started, just engaging in a dialogue with them, and it really wasn't until recently that I realized that I approached this thing as a regulator, and I think the situation played out as it should, across the state, really, in that, we had probably 6 weeks conversation where we were discussing, what could and could not be done under the current legal framework. And to be clear, what the pilot program is going to show, it's not going to show how to do blockchain real estate today, and this is the secret way to do it, and everything's great. It's going to more expose the weaknesses of state regulations. But what's important is that we engaged in this conversation, and the conversation quickly became not what we couldn't do, but more what we could do. So we latched onto a small sliver of daylight, and we're going for it. But what we're doing is really setting a framework forward, and we're going to release hopefully a robust findings, when we're going to hopefully use some of the momentum we've built to go to the state and say, here's the 5 things we need to change in order to make blockchain real estate possible. And there are way fewer regulations that need to be changed in Illinois for real estate than for financial regulations, because it's just it's keeping a record of a transaction. So I honestly think real estate will be the first full adopter of blockchain technology, but that's why we're a part of the Illinois Blockchain Initiative, is to to finish up the last part of your question, is economic development. I'm not just doing this for land records. I'm doing this for Chicago, for Illinois, and hoping to make all the great stuff we've heard about Chicago a reality here in Illinois.
Great, thank you. Manny, I've heard you say in the past that Chicago should not wait for the coast to grow and support the blockchain industry, and that if the regulatory environment in Illinois is reasonable, effective, known, and cost efficient, that will drive business to the city, and that, as we've spoken about earlier, we have the resources to support that. Can you just elaborate a little bit more on those thoughts?
So I just think we have a very unique opportunity here in the Midwest, and in particular in Illinois. If you take a look at what the other jurisdictions, the other states have historically done, at least in this space of blockchain, in particular cryptocurrency, there's this gravitation toward using money transmitter acts and focusing on that, and then trying to shoehorn an obsolete law, in my view, that didn't contemplate this kind of use in technology. And frankly, I don't know if it really covers all potential uses. So in speaking to members of some of the traders in our community here in the city, and banks and other private sector actors, my message has been to them: look, why not offer an alternative regulatory model, almost something along the lines of FINRA, where it is a regulatory model that is developed by the private sector and then ultimately engaging the regulator. But it is one, I think, the reason I'm a big proponent is that I think it would provide us a market advantage vis-a-vis what is going on in California, vis-a-vis what's going on in New York, where there they have much more prescriptive regimes, and are using, in my view, and this is, I'm not denigrating anybody, but I just think this is an older way of thinking and applying a regulatory model that does not fit in what's going on in today's economy. So I think here in Illinois we have a very unique chance to take advantage of the fact that we don't have those overly prescriptive laws, and to come up with a viable alternative that in many ways will attract new investment, entrepreneurs, and really capitalize. If you think about it's the evolution already of what we have here in the city of Chicago as being a destination for, being the derivative trading capital of the world, where there are blockchain uses that could be applicable to trading. So I think we have a unique history. I think there's an opportunity. I think you have a state government, in particular this administration, that is more open to working with the private sector. But I would say that the private sector has an opportunity to move a little faster and not to wait for the regulator or the well-intended legislator to come up with what they believe is best for the marketplace. I think we're still trying to figure that out. And so the danger is if you move too fast with a regulation or law, it may have a negative impact on really growing that economic opportunity that I think we have here in Chicago and in Illinois.
Thanks. Joe, in your dealings with regulators on behalf of your clients, how critical is education and communication? Where do you see that?
Yeah, it's absolutely critical. And my clients don't believe them when I say, hey, let's call up the state regulator together and get an answer. There seems to have been this sort of antagonistic type of approach, regulator over here and, Bitcoin participant over here. How are we going to talk? What are they saying? These types of things. And sometimes it's just that. It starts with a phone call. Let's call up the state regulator. Let's figure out what's going on. Let's research and see what has been put out there. And Manny was talking about sort of the round peg and the square hole. My clients have come to me with any type of sort of definition that they've drawn up of what they're doing. Well, this isn't money transmission because it's this, or this isn't that, and it just doesn't really fit. And it just begins with that conversation with state regulators and yeah.
Great. And we've all worked together a lot in this area, and you all have such great things to say. I just wanted you to sort of each add whatever you would like. I mean, there's so much that I'm sure we haven't covered. So, Jennifer and Manny.
Yeah, no, thank you, Colleen.
Yeah.
I think a common theme throughout this conference truly has been engagement and collaboration between government and industry, and thinking about the ways that there are different components of both the government and the industry. But we've got to figure out a way to convene and to create a forum where we can have that ongoing dialogue to think a little bit more deeply about the appropriate response to, again, themes like regulation, issues like regulation. And And the start to that, is going to be through the announcement today, and I'm very excited that I get to have a immediate and active role to play in convening all of us together. But and this has kind of been my consistent message whenever I've been lucky enough to have the mic in my hand. But I'm going to ask something of you guys. I'm going to ask you to come to the table. I'm going to ask you to start this dialogue with me, with my colleagues on this panel, to make sure that when we have this conversation, it is a fully informed and educated one, because we're at the beginning of this path and we've got a lot of work to do, but we need to do it with you guys. If we do it on our own, we will not be successful. So I look forward to working with you, but I ask you to come to the table so we can do that work together.
So I think this was announced. IDFPR just issued a request for comment, for instance, on the digital currency regulatory guidance that is posted on their website. This is idfpr.com. If you're here and blockchain and digital currency interests you and you want to have a role to play or are going to be impacted, I highly advise you to submit comments. But beyond just the comment, I've been an advocate and have been preaching as much as I can on the whole notion of really enhancing the mobilization of the market sector actors that are going to be impacted by any type of regulation. And I'm doing that because I really think that there's still a lot of questions about how even this just technology works and how it will impact the respective industries and the market. And I can tell you that just a concern I have is that we see a regulatory framework develop prior to fully engaging and even having the private side, the private sector really understanding the potential of this technology. I'm excited because, again, as I said, we have an open canvas in Illinois, and that's a real big deal. But in order to make sure that we come up with the right outcome, it's going to require a lot of participation, and a lot of participation from the private sector. So highly encourage you to get engaged. FinTechs is here. I know that and I'm not shilling for them, but it's a group that is focused on convening private industry for the purpose of not just advocacy, but for the purpose of really boiling down, what are the potential uses of the technology? What is the right kind of regulatory framework? I personally believe that TOMA is, it's just one tool, and I don't even know if it's really the right tool for this. I'd much rather have a broader discussion about, potential uses, come up with a more principle-based approach in regulation, adopting perhaps what the UK has done and what Australia is doing with regards to creating a more open, a sandbox they call it, where the regulator and the private sector is working together and testing technologies to see how they actually impact the market, and that's a much more collaborative approach. And I think the outcome of that approach is one where you really get to see how these technologies work and how they impact the marketplace and what really needs to be regulated. One big concern is, as I'm sure many of you hold, is where do we go beyond that line and now overreach and start regulating the actual technology? I don't think that's our role. It should be really thinking of, okay, how does it impact the market? How does it impact consumers? How do we make sure that we can grow the market and develop the right kinds of guardrails that help achieve those outcomes? And I think, frankly speaking, and look, I'm a former regulator, we need to continue to innovate the regulatory framework.
And I would say to my clients and friends in the Bitcoin space, and to my colleagues in the compliance and regulatory, the compliance side of the regulatory equation, I would say, you asked for this. You asked for the open invitation. You asked to have that dialogue. Well, here it is. Here's your opportunity to be heard. Here's your opportunity to help put that stamp on what regulation and compliance might look like. So step up, submit a comment, as Manny alluded to, and really participate in this process if you want your voice to be heard. There's so many entrepreneurs out there trying new things and wanting to get involved, and sometimes we don't quite need that finality of an exact regulation, that square peg in the round hole, but we need that opportunity to talk and have that dialogue, and it's something that has been on the minds of many, and I'm glad that that opportunity now exists. But it's up to us to take that advantage of that. And on the government side, hold up your word, right? And that's what's all eyes are on you in terms of the sector, the private sector, in terms of the Bitcoin community, wanting to hold you to that and making sure that this is a collaborative environment and there's no sort of trap door or a gotcha type of event. I'd also add that we talked about earlier about self-regulation. That's something the Bitcoin community is pretty good at. We've seen in the past with Mt. Gox, for example, the forums were lit up by people in the Bitcoin space saying, you probably want to avoid that, there's something going on there. And we've heard other instances of where there's some alleged Ponzi schemes and other bad actors that the Bitcoin community is just so frightened that that is going to be associated with them that they have been very vocal in sort of calling these things out. So I think there is a degree of sort of self-regulation, I guess, in sort of a very raw sense there. But generally speaking, keep it up for those that are in the Bitcoin community. As clients approach me more and more, they're very educated in AML KYC. They've been asking all the right questions, and that's a good sign to me, and that is going to lead to a very fruitful dialogue that Illinois has opened up for us.
And I think I'll finish off with a theme that I touched on earlier today: just the social innovation. I think we're all here not because this is only a technological innovation. It really is a social innovation as well. What could we accomplish if we could trust each other unequivocally? The idea of non-repudiation. Somebody earlier asked, how is it efficient to put a contract on a bunch of computers around the world? I would counter, how is it efficient for a small business to spend 3 months negotiating a price to buy an input and then have the other party back out because they're a conglomerate because the market price went down, and now that little company goes out of business because they didn't get what they wanted? Let's flip it around. Give that little company their product at the price, and then if you want to back out, you can go and hire a lawyer and go to a judge and tell him why you should back out. We should think about just the paradigm shift of what this really is, and what we can do with this idea of non-repudiation, and the idea that a lot of these regulations exist only because we can't trust each other, so we can start rebuilding a lot of these things that we waste time on, financialization, things like that, and re-securitizing, reinsuring, and reinsuring, and eventually where does this stop? So that's what I'm excited about, and excited to be a part of a group of people who are willing to take risks, frankly.
Thank you. And I know a lot of you here today are new to the industry, so you may not fully appreciate sort of the uniqueness of what you're witnessing here. But Mandy and I have been involved in the regulatory aspects of this for about 18 months, and what Illinois is doing is completely different. Mandy and I definitely think it's the right approach, but it's very different, and I think it's going to be very welcomed by the industry. Thank you. I don't know if we have time for questions.
Yeah, we could do one or two. See what the audience. Any questions?
I have one. Mandy, you mentioned what some other countries are doing around regulation. Fair warning, I work for Canada, but curious if you have any views on the Canadian market or anyone out there.
I'm sorry, I lost you at Canada. I love Canada. I was thinking of the beer. No, go ahead. What was
These are the 5 o'clock. Yeah.
Thoughts on Canadian market regulation or anyone else?
I can't, frankly, I can't speak to the Canadian market regulation. If someone else can.
It's colder.
But did you have like a particular, what about the Canadian regulatory model concerns you, or what's on your mind?
Well, I was just curious if you had a way of comparing it the way you had with others, but it's okay if you don't.
I'm not as. I've been focusing most of my attention on the UK model. So for some of you for those of you who are newer to this and don't know what's going on in the UK, one of their really a regulatory paradigm shift is focusing on creating basically a more collaborative platform between the private sector and the regulator, where through an eligibility set of eligibility criteria, a company can apply basically for permission to engage and work with the regulator in testing certain technologies and in a more open and an engagement kind of way. I mean, unfortunately, look, and it's just a system that's been in place for such a long time. In the U.S. model is just a lot more different. It's not that the regulator doesn't collaborate. It just there is a greater reticence on the regulator with regard to the kind of engagement that you would need if you are testing, if both parties are testing certain technologies or business processes. Now, I will say though, in the U.S., there's been an ongoing dialogue and discussion about how to reform our own system. We have a lot more different. We have a number of regulators, which that complicates the issue. But there is, one bright spot is that there is an interest in innovating within the regulatory agencies to better engage the marketplace. So I think that's a bright spot. I would say though that we have a ways to go.
I have a question. It's more Bitcoin related, but I'd like to know, since you guys are really involved with the regulatory aspect and all that, do you think Illinois is leaning more towards stringent regulation as far as money transmitter and MSB for personal trading purposes? I know you have to be one if you have an ATM and all that, but where are they leaning towards?
That's one of the reasons why. I could tell you when I was there was a lot of internal debate, even within staff, of how to address it. There were some who were, I'm going to use the word progressive in terms of just being more open-minded and embracing the technology, and then there were some who were just dead set against the whole notion of having something called digital currency and then using it in exchange to buy goods or services, and how to regulate that. I know that and if you take a look at the guidance that IDFPR has provided, I think you'll see that there's still that, I don't want to call it an internal debate, but I think we're still trying to figure it out. There is, as I mentioned, there's a request for comments. And so this is very important. I'm going to tell you, I highly encourage you to take a look at the guidance that has been provided, because that's going to set the stage. That's going to set the stage for something. As I said before, we have a very unique opportunity to do something different than what the other states have already done with regards to trying to, doing these bit licenses or other, prescriptive rules and regs. So I'm hopeful that we are more open-minded and that we will be more creative and forward-looking in really focusing on a more principles-based approach, and that we do not wed ourselves to convention and say, well, TOMA's the only thing on the book, so we have to use TOMA. Because I personally believe, and this is just Manny Flores speaking as a private citizen, I believe that TOMA is not the right tool. I think just purely looking at it as a money transmission issue is just completely missing all of the other risks, all the other issues and opportunities associated, ultimately really more so with the technology and the uses of it in the market.
So for 2020.
So a quick follow-up to that, Manny, with a question. How many folks here have ever responded to a request for comment? Can you raise your hands? Okay, more than I thought, which is great.
That's great.
A lot of hands did not go up. So Manny, can you just tell us what is the easiest way for anyone with an interest, anyone with a touch point to blockchain to respond to this request for comment, so these opinions, these thoughts that these folks have become part of the dialogue? What do they do?
So, I go to the IDFPR website. It's relatively easy. There's, the agency's already, they've announced that they're accepting comments. My understanding is that it's up until, I just pulled this down, up until January 18th. So you have up until January 18th, not a whole lot of time. Which, again, I'm hoping that those comments will result in more open dialogue and not like just some, okay, well, this is going to be it. I'm pretty optimistic that it's going to lead to more dialogue. Because look, people have been talking about this now in another jurisdiction for a period of time, and I got to tell you, I think, there's still a lot of room here for more engagement, particularly on the private side, to make sure that we get it right.
Just a follow on, what do they do with the comments afterwards?
Well, look, I don't want to speak on behalf of IDFPR because I'm no longer at IDFPR, but
what often happens?
well, this sets the stage for rules and regulations, and it also potentially sets the stage for laws. Right? The reality is someone in the legislature could be looking at this right now and say, okay, well, you know what? I have my own idea about how to regulate this stuff. I have my own concerns about, whether it be consumer protection issues or, anti-money laundering issues or other concerns. And that's not unique to Illinois. I'm speaking from a level of experience having, been the previous head of the agency and seen other states engage in this space, and then also seeing other jurisdictions currently right now. And as I mentioned in my opening remarks, you have the Uniform Law Commission debating and having a discussion around this. And I can tell you right now, sitting in some of those calls, there's not a whole lot of consensus, and it's very TOMA oriented, which I think you already know what my view on TOMA is. We're missing the boat. However, good thing for us is that it hasn't been etched in stone, and this is where the opportunity lies for us to be forward-looking and to come up with really policies, best practices, a self-governance model that collaborates with the regulator, that really focuses on innovation, focuses on principle-based regulation, and really creating an environment that drives investment and innovation. We're 1871 is. So we should look at it as glass half full, a lot of opportunity, but we know that the marker's been laid. People are definitely looking at this, so we have to engage.
All right. Thank you very much to our panel, and thank you all for being here. We really appreciate it.
Thank you very much. I think we're going to a well-deserved break, but I wanted to say thank you to Slides Live, who have been in the corner recording this thing and streaming it live for the world. So he's underappreciated there. The man is working harder than anybody in the room. So thank you.
Thank you.
And if you do need any recording or any of those services, I think he has some cards back there. They do provide a good service. Before we go to break, I just wanted to say one thing on the topic, that the interesting thing about what the UK is doing is they have their sandbox, but they also have these things called fintech bridges, and that is that the regulator from the UK has a fintech bridge to the regulator in Singapore. And together they're working on cross-pollinating and working together and sharing lessons and making it possible for startups to meet investors from each sector and vice versa. So I think fintech bridges would actually go a long way, whether it's between Chicago and New York, Chicago, San Francisco, Chicago and London. So it's another area of innovation that, it sounds odd to be, like you're self-cannibalizing, but it's actually working quite well. So anyways, thank you guys, and let's come back in 15 minutes. Yeah.
Videos.
Hey, everybody. Anybody who heard me talk earlier about the transferring a title use case, I actually coded that up in about 20 minutes. It's about 70 lines of code. I said 30, I got it wrong. But if you want to see it demonstrated, as far as what the code looks like, I'll be in the back.
Yeah. If you want to pop it into the desktop, and then when you go, just load it up. That way you know where it is.
Yeah, I saw you live streaming it. So after this, can I still watch it or it's gone?
Yes, sure.
So after this, it's still online on YouTube?
Yes, it will be online on YouTube and even on our site. If you have a card, I can send you a link directly to your email.
So as long as it's on YouTube, it's fine. I mean, I can see it on the website.
It is on YouTube. But the thing is, on YouTube is like less quality.
Oh, I see.
Yeah.
Okay. So maybe I can have your email address so
Sure.
that I can.
I mean, if you will go to this site, like in a 2 weeks, it's gonna be there. I mean, I think it's gonna be less than 2 weeks.
July. Yeah, we got some time. Yeah.
So E2CI conference too. About 5%. Oh yeah. I'm taking up I did I don't feel if
Some of the recommend a little bit more when we're starting to get it working up to it. So I think we're going to work with a partner to do like a pharma-led blockchain. Energy, I think, is something to look at as well. So those are looking for partners because the sector specifics require. We're all healthcare blockchain.
This is our first annual one, and I don't think
it's on the desktop.
They're getting themselves into. They're usually sponsored or they're trying to pioneer with keynote presentations by HCA, insurers, and so
Cool, and say there more.
Healthcare, insurance side, the healthcare data side. So they're represented. But they're going to have another one actually in Nashville, most likely. That industry is very, as far as most of them are just not aggressive, it's not
Yeah. That's why we're going to focus on that one first. I think we'll try to export that one through.
Energy is kind of weird. That's kind of where I came from, and the energy plays are all very different. So it's very broad.
Well, they do these huge like energy expos in like Asia or in like Central America or in the Middle East, and they tend to be big. I think there's room for like something small, 200-300, very focused on blockchain.
The blockchain is moving in great energy versus
Really quick question.
Yeah, so it should be on there for scenarios or you catch the name of the one?
Thank you. I slaughtered this out.
You catch the name of both the ones?
But I would like to bring
Scenario and
two or three minutes just to kind of have a bit more of a conversation about what this request for comment is and what it is, and just on the back of the way that this panel just concluded.
One thing we can do is we have a few minutes for a closing statement. And because we're running a little bit over, we're going to need, let's say, a 10-minute clock at the end can be focused on this is what the...
Sorry, so I don't, good.
Well, I guess we could make it work with an announcement as soon as we get out of the break.
Yeah, do you mind?
That's fine. Perfect, yeah, we can do that, yeah. We'll do that, and then we'll get the show back on the road, and then I'll probably cut the closing announcement.
Okay.
And on time.
Okay, that sounds good.
Hi, I just wanted to introduce myself. I'm Allison with the Australian Trade Commission. My colleague.
Yeah, no, great. Thank you. It's a lot of work.
Yeah.
It's a lot of work. It's about to be great. It's about to be.
Well, we just wanted to let you know that we're here. We're based in the consulate here. And give you our card.
And that is going to work out just perfectly with you.
I'm sure you're running around.
Okay.
No worries, I think what we do is shoot it as an announcement when we get back.
Yeah, I'll be right back.
That closing statement is kind of a buffer, so I have about 15, 20 minutes.
Yeah, this will be my 10 minutes.
That's why from doing these for so long, I hide these in my pockets to
Yeah, exactly.
So looking at
So, 3:03.
I think we're going to go about 10 minutes or so. We'll probably start at
exactly, but we also do
get everybody back in.
Okay, that's fine.
Around.
Oh, yeah, no, I'm not going. How are you?
The hard part is trying to keep it fast-paced.
Are you in like the
Yeah, like the
yeah.
I think you know what, this is actually as big as the DC
Zeus has done a really good job of bringing together industry and content space and new collaborations. By the way, I wanted to ask, so I also work with Bitcoins, and I was thinking like for the last panel about the 2017 predictions, I was thinking doing a write-up on that panel, but also, if that's okay. Like, I was thinking maybe doing separate, either doing like one summary article for that panel, and then maybe doing another one, it's really about
We're doing London Blockchain Week in January, so cool. That was we're going to have different people that aren't involved in BT.
Do you have cards? I'm sure I can get you.
Okay, getting your details. Excellent. Okay, because I first said
And if you guys ever do any media partnerships, that's what we do with like Brave New Morning. We listed them, right code, user base, and for us it's no big deal to talk people in from publications. And this is good for the readership. For us, free tickets and I think that one got, I just got an email saying because of the venue they're having to cancel it.
I'm so, I know,
The guys that are kind of like you guys are based in Australia. Okay. There's about 30, not this year, but for about delegation of about 35 Australians.
London?
Yeah, London.
In London, yeah.
This is more educational for us. I also know that
Yeah, and then so I think if there's ever anything that's engaged in maybe you are never any interest engaged. I mean, I know you were probably one of the partners who created investment. I'm sure you probably know Prue Ash. All over the place. I know Prue really well. So,
Every time we do stuff,
she was what I did 100. She's very excited. Anyway, we just say hello.
we explored it, but we're kind of like April. So it's going to be small. Yeah, alongside that. If you guys want to get involved in that as well, if you have any Australia coming, we're trying to talk to them to one day it's going to be fintech, no, I mean, I think they were from UKCI, so they worked with the local government. Great. Because Asia Pacific is what
Let's make it Australia.
You can't say that, but it's kind of the slogan.
I met a couple guys. I think one of the guys who runs the fintech hub. I forget what his name was, but he runs. It might be. He runs the like probably one of the accelerators there. It's for like 2 or 3. It's called. It's like the thing. So it's probably a while ago, but nothing happened. Now we're starting to talk to some firms and as soon as we do that, we'll focus a lot more on right now it's just me and the wife. Well, I know this stuff as well.
Yeah, no, I get it.
No, she came in the summer when we did DC in New York, and the summer when we did DC in New York and San Francisco, so we're in London. Yesterday was 57 people.
It's really good. It's actually been really good.
I'm going to get this show started again.
All right. Yeah, thank you.
Thank you. We're going to do a quick announcement before we get. Cool. Did you go first?
By the way, I was just going to use the mic and
All right, almost there. We're gonna upload them to YouTube. I'll probably put them on the website. All right, guys, we're gonna get the program started. We have 2 sessions left. One on use cases and the other on the future of blockchain. But before we do that, we do have one quick announcement. If you want to. Well, there you go. Good. Ooh. Sorry.
No, I just shocked a little bit. Hi, I am Brian Schneider. I got to meet you all a couple of hours ago. I've been here for the afternoon sessions, had to step out and take a phone call, and I guess there was some discussion at the last panel about one of our Illinois blockchain initiatives, and my colleagues came up to me and said, hey, can you, gave me the scoop and asked if I could provide a little bit of clarification. You know, I think from what I've heard, some of the commentary motivating this may be, you know, commenting without benefit of reading. You know, I think if you take a look at our guidance that we're providing, it's very, very sort of laissez-faire in its approach, and it's making sure that there's no misunderstanding that we're going to regulate in a method like other states have chosen to do so. That's part of the problem with the system, is it's a 50-state system. Some states are a little bit more detailed in their regulatory approach. We don't think that, generally speaking, that's healthy, and we like to, you know, get our position out there that it's not. You know, we do invite comment. I stand by what I said at the very beginning. God gave us 2 ears and 1 mouth, so it's incumbent upon us as regulators to listen to what folks have to say. I've been at this long enough to know that that runs the spectrum, from all sides of the political spectrum, all sides of the regulatory spectrum, and we listen. You know, I mean, that is an obligation that we owe to the people of Illinois to listen. But it's all the more reason why I think folks like you that know this technology, know how it works, know what its benefits are, you know, can offer your opinion, you know, can offer your views, so that Illinois is one of those states. We're a pretty big state. You know, if we can articulate a cogent position around regulation, you know, we can hopefully sell that a little bit. So that's what we're trying to accomplish, and if there's been any misunderstanding in that regard, hopefully we've got some of that cleared up, and look forward to being in communication with a lot of you going forward, and hope you have a great end of the conference. Thanks.
All right, so now we're going to look at a couple of use cases before we have our final panel.
Hey everyone. This works? Hello. Hi everyone, my name is Ryan Strauss, Community Manager at Scenario. Think back to 1995. The internet was new. Few could have imagined all of the applications that the web would spawn. However, the utopic world many envisioned in the early 90s has not yet arrived. As Jerome Larnier discusses in his tremendous work, Who Owns the Future, we still work 9 to 5 or longer. Income inequality is increasing in developed countries, and large companies profit off of our data through centralized server architectures, a phenomena that he calls siren servers. On top of this, we're being monitored all the time, essentially living in Orwell's 1984. The Bitcoin blockchain was the first breakthrough towards a truly decentralized paradigm. Unfortunately, it's already overcrowded and slow, and was not optimized to run distributed applications. Moreover, mining on the Bitcoin blockchain has become extremely resource intensive and leaves out the average person looking to participate in this network. Enter Scenario. At Scenario, we believe in creating an egalitarian, transparent, and inclusive world for everyone. In turn, we're creating a blockchain stack and social network that's completely open source to help realize this. The Scenario blockchain is anti-fragile and resistant, secure and encrypted, fully distributed, and designed to scale up to the levels and speed of Visa. Furthermore, through our special K layer, the Scenario blockchain will be optimized to host distributed applications running audio or video content. Scenario is a basis for so much, and we're positioning ourselves as the Linux of blockchain technology. Our native crypto token, the Scenario AMP, will be mined through anyone's computer, as we have a unique, innovative, pi calculus-backed mining algorithm that allows for anyone to run distributed applications or mine cryptocurrency with their own laptop. Our team of 15 is distributed worldwide with headquarters in Tel Aviv, and we just participated in the NFX Guild Accelerator in Mountain View just this past summer. The Scenario blockchain will be used for both industry-level applications as well as entrepreneurial ones, ranging from bank chains to ICOs or initial coin offerings through supply chain management solutions. There are 4 applications on the Scenario blockchain that I will be describing today. One application central to our vision is the Scenario social network. As the recent election demonstrated, over-reliance on centralized social media enables for censorship of content, promotion of certain forms of content over others, and continued profiting directly off of our data. Furthermore, the algorithms used by Facebook are non-transparent, and through using centralized social media, we're again being monitored all the time. Scenario Social Network represents a breakthrough towards putting the users back in control of their own data. On the Scenario Network, users will be able to make money in the form of Scenario AMPs through posting funny, awesome, or insightful content. So if you have some memes, be sure to post them, and you could get rich. In the developing world, we think this will be particularly impactful and put everyone on an even playing field. We recognize the societal level of responsibility in creating such a technology stack and social network, and continue to have ongoing conversations around immutability, distributed networks, and autonomously executing smart contracts. Scenario just completed a $4.7 million crowdfunding campaign through Bank to the Future, and dev grants for projects in the Scenario platform are ongoing through our Project 11 initiative. LivelyGig is the destination for the future of work. Today, it's extremely hard for freelancers to get paid in a timely manner and also to not incur high costs. If you're a freelancer working in Argentina on a software development project with a company in Germany, there are many obstacles along the way towards ensuring that the payment is delivered on time. Through using the native smart contracting functionality on the Scenario blockchain and the Rolang smart contracting programming language, LivelyGig is leveraging smart contracts in a new way to reinvent work. LivelyGig will also have a role in industry. Whether you're a professional services firm looking to increase staffing or a factory needing to add a few additional workers for a busy stretch, the immutability and transparency provided through blockchain-based reviews lends towards greater environments for trust between disparate parties around the world. We're excited to be recreating the future of work, and we look forward to welcoming further applications. We believes that blockchain technology can facilitate stronger communities both offline and online. There's a soccer social network based in China, and are looking towards the Scenario blockchain due to its global reach, immutability, and native in-app payments. If you're a nomadic soccer fan based in South Africa looking to attend the 2018 FIFA World Cup in Russia, having native in-app payments for things like tickets, travel, and accommodations proves immensely valuable. Furthermore, reputation screening, similarly to LivelyGig, enables for new forms of offline interaction such as meeting up to watch a game or play soccer in person. Just like Scenario Social, users in WeWellWe will be able to monetize content directly and re-own their data. Nobex Radio feels that artists aren't compensated fairly in terms of loyalty rewards for their content. They're a radio distribution network already serving over 25 million listeners in 110 countries and are looking towards the Scenario blockchain due to its unique functionality to host audio and video content through the special K layer and also assist artists in monetizing their content. If you're a struggling artist and you want to work with Nobex Radio, through the transparency and auditability provided by the Scenario blockchain, content will be ensured that royalties are delivered in a timely manner. Furthermore, the anti-fragile nature of the backend network allows for massive amounts of audio content to be stored in new ways that are secure and lower overhead costs. In conclusion, when it comes to Scenario, there's 3 questions that we need to be asking. Is Scenario an improvement on Ethereum? What role will Scenario play in government, in industry, and on Wall Street? And is Scenario Social the next Facebook? We're a completely open source blockchain using proof of stake, pi calculus backed mining algorithm that allows for anyone to run distributed applications and mine cryptocurrency using their own computer. Through our open source stack, we invite anyone who wants to participate to run applications on our network. LiveTheGig, WeWellWe, Scenario Social, and Nobex Radio are already building our platform. We invite you to join us in this journey. Thank you for your time today. Time for a question? Yeah, one question if anyone has one.
You mentioned making money sharing memes. What happens when you use somebody else's meme? Will they come after you for like copyright or you know what I'm trying to say? How does that work?
That's a really good question. I think use cases like that where you have IP being propagated or copied is just one example of a real world problem that we'll run into once we're grown and launched. So I think with all these blockchain-based applications, theory is different than practice. And once you start to get into the realm of practice, you're inevitably going to run to completely new use cases and problems that emerge through this technology. I would imagine through private key or moderators, there's potential to help manage the sort of problem you're describing, but it's something worth discussing further. Thank you.
All right, one more use case.
Hello, I'm Dick Dixon. That is a given name. I'm looking forward to identification tools from blockchain that help me reinforce that. It's been a long 30 years. I'm happy to be here. I'm from San Francisco and came to Chicago after just having a great experience with meeting some investors here, meeting some VCs, meeting some other entrepreneurs in the space. And I think, I was saying this earlier, like culturally the Midwest it's great for entrepreneurship. And I'm talking specifically about how low the rent is compared to San Francisco. My background, I've been a chef actually since I was about 16. So kind of atypical from other people in this room, I think. I sort of fell into coding and developing software after working with a chef in San Francisco, my first time in a Michelin restaurant, who sort of introduced me to the idea of the community that's involved with making Michelin quality food and all the human beings who connect the dots of ingredients going from a farm to a table, and the role of the chef being sort of a curator. I was pretty young when that happened, and still at a time when I could pivot and make big mistakes. So I decided that tech was a great idea, that there were opportunities because of addressable markets and just fun to go and do some things in food that people haven't done before. So that led to a position with a large broadline distributor, Cisco Foods, sort of understanding, again, the supply chain of food, next to a cloud-based point of sale with Revel, finally into a vendor payment solution with Sorcery. The solution Baklava has come from kind of falling in love with this problem that exists in the food industry and letting that obsession kind of be the guide to my career path. And let me get to that, because there's a slide about it. So one of my favorite kind of bogeymen, Earl Butts, actually a great mind, but also someone who's very challenging to wrestle with. And there's sort of this paradox of the food industry where, for the first time in human existence, we are overfed and undernourished, right? That we produce enough food for everyone to eat, but 800 million people don't. And so sort of like the fractal pattern of my shirt right now, like from the high level view, it's the same as if you're kind of narrowing into specific areas. And I think food tech specifically, has kind of been going through this change of being just woefully misinterpreted and misused. And specifically what I'm talking about is the last 3 years, the amount of money that's gone into funding Uber for X, Uber for food delivery, let's grow your table count. Interesting that during this time, the only IPO that's come out of this space, right? Probably not the profile of the company you're thinking. Maybe you're thinking of a company full of young men with man ponytails and sort of a haphazard approach to coding and kind of a garage band energy. You'd be totally wrong. So that company would be Good Eggs, right? Sort of an example of the passionate ingredients of high caliber farm to table experiences being brought to you at your door as a consumer. $56 million in a Series C round that ultimately ended up in 140 employees being laid off and sort of a retreat back to their original market. This quote from the founder is one that really resonates with me, the idea that we failed because we didn't really understand what it would take to create a new supply chain, right? And again, kind of going back to this central paradox of just being alive right now in this world, that we have enough food to feed everyone. It's a logistical problem, right? It's a distribution problem. And why does that happen? So the IPO I'm talking about is US Foods, right? Literally have original charters from companies that were formed in 1849. 25,000 employees, they have revenue, right? Amazing for an IPO. Does not fit the profile at all of what you would expect to be coming out of the space, considering the capital that's gone in. But something that's interesting about US Foods that we've sort of learned through our concierge MVP experience with working with vendors and working with restaurants, they tend to be the largest source of credit for most restaurateurs they work with. So this hypothesis that we sort of came across and ultimately led us into this FinTech conference today is the discovery that the supply chain of food is the way it is because of the supply chain of payments is the way that it is. And if you'd like to change that, you need new tools. Just comparing the winners and losers here. US Foods, besides providing credit terms, they provide underwriting services, right? They actually employ an army of credit analysts and people to manage liens against bank accounts and things like this that you wouldn't expect for a company that brands themselves as FedEx for food. it seems slightly incongruous. The losers made a lot of assumptions about customers' willingness to pay for ingredients that didn't necessarily trans back to them having healthy cash flow. So where we sit in the middle of this is we said, okay, great. We feel validated that there is a problem here that needs to be solved by some sort of creative approach to accounts payables and accounts receivables, specifically between restaurant and the immediate distributor, not necessarily the up-channel farmer, but the people delivering it to their door. In investigating that, what we found is that a lot of the companies doing this right now are really focused on the problem of paper, which is a huge problem. I just think they're solving it the wrong way, right? We're talking about OCR and data extraction and document processing. And what we're not thinking about is the nature of the exchange itself, right, as a contract. And what we can do with this contract to create more favorable conditions for liquidity for people that need it. So the first idea we had was, what do people do who are making big, risky purchases, like a house, right? Escrow, very cool. Could this apply to a vendor who's typically on a cash-on-delivery basis? And sort of where would we interject that? What are the sort of the what-ifs? What could go wrong from each person's point of view? Again, just an anatomy of a very simple COD delivery. Biggest pain points we found for the restaurant side is there's about 40 buyer-vendor pairs, and each of those has sort of a separate credit application onboarding. From the distributor's perspective is that finding a credit-worthy restaurant is like a diamond in the rough. It's 30% failure rate in their first year, 60% over 3 years. So accurately assessing who is going to be a good credit risk and who's not is it's sort of a mixture of art and science. Where we've tried to kind of circumvent this is just a very straightforward kind of escrow arrangement. We've created wallets through Mist for both parties involved, very simple escrow template that we found through the Ethereum community of developers who I'm so thankful for. Just the fact that Solidity is so close to JavaScript, I can't thank you enough for that. It's a lifesaver. So this is what we built. This is the kind of typical transaction flow that restaurant would deposit dollar value in their wallet, vendor would deposit, they would just basically have the conditions, the sort of more favorable extra week to pay your bill, better than COD. Goods would be shipped over, restaurant would enjoy their new lax time schedule to get their bills paid. Payment is either remitted directly, or if it's not, that the contract self-executes and the vendor has basically some form of something to show for the fact that this deal went bad. So far, again, like I said, we've been doing this in just a concierge level. We have a really simple web app that restaurateurs are logging in to sort of negotiate their pricing tools with a chat bot. We have the pricing rules built in from the vendors. We then turn around and code these in manually into a smart contract. There's a lot of reasons for that. I'd say besides just the technical challenges of automating that entire process, we really want to make sure we're understanding everyone's incentives in this interaction. And the reason being is that, kind of getting back to the original question here, like the entire supply chain of food, is what's the next opportunity? Let's say we prove this, what do we do next? It's a very similar opportunity with what's happening between the distributors and the people they're buying their goods from. So, for example, the idea of moving into maybe not an escrow, but an IOU that could become fungible, right? So the distributor doesn't want to wait 30 days for payment. He wants cash now because he needs it. He now has liquidity. And in fact, we actually created incentives for other buyers to come into this market and start to buy these fungible assets as well. This is sort of a use case that I think is walking well before we're crawling. But ultimately, this is how we'd like to think about reorganizing liquidity along this chain. Pretty straightforward. Like I said, we're pretty passionate about going just neighborhood by neighborhood here in Chicago and really understanding the ecosystem, how food is making it to Linea, how it's making it to Next, and what blockchain can do, if anything, to kind of eliminate these barriers for really a class of businesses that have been considered unbankable. And I think kind of moving back to some of the points I've heard earlier in the conference, if you're going to explain why this technology, I think that's really tied into, you know, if you're asking questions like that, it's really tied into your perspective, right? If you're someone who's unbankable, you'd probably never ask why. You'd probably just do it because it's so cheap and it's great, right? I think the privilege to ask why is great. We should kind of vet it, and there's the temptation to treat everything like a nail when you have this really cool hammer. In this specific use case, I think that there's a large convergence of reasons why blockchain is going to solve problems for a large undocumented workforce, section of an entire vertical of merchants that have very little access to loans, to basic financial services, and then in sort of reorganizing our supply chain in a way that kind of speaks to a larger social ill of how do we get good food to people, not just sort of surplus calories. So that's BlockLaw. Thank you all so much.
What does your name mean? What does that mean?
Oh, so baklava is it's salt cod, right? This is a pun on COD. So I thought it was clever. Yes.
Are you currently working with any local vendors or restaurants right now?
Our beta clients have all been in New Orleans and San Francisco. So in Chicago, it's very early stages of customer discovery and kind of market building.
So you relocated the business from the Valley to Chicago?
Yeah, we met, there's a VC, or an incubator called Ronin, who sort of made the pitch for Chicago being the place to do this food tech, fintech hybrid.
Great.
And they were right. So,
welcome.
Thanks. Thank you guys very much.
All right, so up next we have our last panel of the day. You made it this far, and there's still quite a few of you, so that's a good thing. So if we could have the panel come up, Susan, Tone, and again we'll keep this one a bit loose. It's the future of blockchain, predictions for 2017. Are we missing somebody? Yeah. Oh, here it comes. Cool. So, looking at predictions for 2017, if you guys want to start with, again, I think we've met most of you before. Let's just do quick intros, and then I'll throw the first question, and then we'll go straight to the audience. But I think the goal today is I'd like to see you guys go on a limb and make some real predictions so that we can play the tape, you know, and see if you were right. So let's go ahead and start with some intros.
Hey everybody, can anyone hear me?
Take this one.
I'm Jonathan Solomon, co-founder and CEO of Digital Mint. We're a Bitcoin access company. We provide just simply the easiest way to get Bitcoin in a quick and efficient manner through our network of kiosks and teller locations. We've been around since 2014, and I'll pass the mic along here.
Hi everyone again. Thanks for sticking around. I'm Susan Poole, Blockbirds Advisory. Been in the space a while, moderated earlier today. Now I guess I get to talk myself, so there you go.
Hi everyone, Tone Vase. I was on the first panel. We talked about the introduction to the space, and former Wall Street, about 10 years, now just doing content and advising in the crypto space, and I'm also a trader, traditional assets.
Lawrence Johnson, head of retirement plan intelligence at Morningstar. I am chipping in. Lewis asked me to come in at the last minute. This was quite an experience, especially that I've been binge watching the Netflix series Black Mirror. So the notion of coming up with predictions was quite an impressive exercise.
So right now we have, the year is almost over. You've seen the trajectory every year, different things happen. You're seeing more governments getting involved. So first one, let's keep it broad. What do you think is one of the macro trends that you're seeing from being somebody in the space. Macro trends, so not too specific, but broad direction. And again, let's go quickly through each one of you.
Sure. Well, at Digital Mint, we're seeing an increase in consumer adoption, just organic use of Bitcoin as a digital currency, as a means of purchasing things online. And we expect that trend to continue to increase. It's been on an upward trend, and even just right now, during the retail season, our team has been very, very busy, just answering phone calls, providing help and general education about Bitcoin. And that reason is people are actually using Bitcoin to shop for Black Friday and Cyber Monday and Giving Tuesday. And we're seeing that sort of uptick in activity along with the uptick in general retail activity. And we expect the trend for digital currencies like Bitcoin to continue to be used.
Okay, one thing I think I forgot to mention is prior to doing my own advisory consulting as of May, for a year prior to that, I was Director of Development for the Chamber of Digital Commerce out of DC. And in that role, I was super lucky because I got to talk to people every day or every other day and say, what are you doing in blockchain? Talk to them about membership. So I actually felt like a priest, which I've never felt like a priest before, a bit in that, a lot of people would just say, this is everything that we want to do. And it's really exciting. And so now a little bit later and going into next year, the major things I see happening are traditional money in the form of industry verticals making commitments and investments not only in their innovation labs, but also in blockchain startups. So I was going to tell everybody, it's really good that you're here, and if you feel like all these people are up here talking and everyone's been in this space forever, if it's like this, we're like here. So you are really early in this space. I would love to say that there's huge amounts of production in blockchains in healthcare and in insurance. I also attended this event in Nashville recently on healthcare, and some startups did present what they're doing. But it's kind of, a lot of it is at the transaction level. So we can demonstrate we're doing something with a record in healthcare. So the opportunity is big, but the biggest future prediction I have for next year is that the amount of money being invested by traditional industries and large companies, the brands we all know and love, and maybe don't love all of them, but are investing, and they want to see things happen. And then the second thing I'll say is price of Bitcoin, personal, not investment advice, going up. I'll make that bold prediction. Let's see what happens next year.
All right, so I want to separate the space into 3 different components. I'll try and speak quick. One of them is what was said, the actual Bitcoin component, and I see that significantly growing. Basically, the concept of cash on the internet is starting to be more and more recognized, and more industries are going to completely move into that area. And governments may fight it, but they will be losing that battle. Like, I can see the entire global gambling industry being completely running using Bitcoin. I don't want to dig too much into this topic, but just the other day, someone emailed me a story that the UK is going to completely put a bill in to change what people can watch, what kind of porn people can watch on the internet, and they're doubling down on KYC regulation for that. So I can see that entire industry, again, utilizing the cash aspect on the internet. Something like Crypto Locker, which has just affected San Francisco, is going to continue to grow. It's actually the only company in all of blockchain space that has made over $1 billion in revenue up to this point. Crypto Locker basically locks up your computer and then ransoms you and asks for payment in Bitcoin for you to have access to your computer again. I think that will revolutionize the way companies do security. This way there's nothing that important on the computer. That's how I treat my personal computer now. If I get crypto lockered, I just say, okay, I'll just reinstall my operating system, I don't care. There's nothing that important on it. I think a lot of government systems will need to go to that kind of a model. So I see the cash aspect going way up. The next side of things is, oh, and by the way, that cash aspect, something like Netflix can now enter markets where they don't have to worry about credit card fraud. They can enter, let's say, Africa and say, hey, you want to watch this movie? Use Bitcoin and watch the movie, no account, no nothing, right? So I see that ramping up. The next side is this whole ICO and other currency boom. I see that completely imploding.
I've seen like basically I see the concept of the movie Boiler Room, penny stock trading, Wolf of Wall Street, penny stock trading, all of those, that whole ICO, I see a lot of regulation coming down on that. A lot of people that were open and public, unlike Satoshi who disappeared. I see that whole space having major issues, and people will eventually stop trusting it because none of them have really been successful. Ethereum is still holding up there, but the rest of them, I don't really see much there, only because the way they're all start. And on the last side of things, this is what everyone's referring to as the blockchain, the underlying technology, and I think that would slowly, I mean, that buzzword, I think will slowly start to move away, and people will realize it is database technology. It's not the revolutionary aspect of cash on the internet. And I see that realization happening, and the companies will start to cooperate together and then go talk to Oracle, go talk to Swift, and design better system for the digital age. But like was mentioned, like Estonia did everything without a blockchain. Just need cooperation and competent database developers.
I think that blockchain will serve as the invisible hand to proliferate the Internet of Things. I think Chicago is uniquely positioned to take a leadership role in this area over the next few years. And I think, again, as you just pointed out, that the notion of blockchain will kind of melt away, but will serve as the underpinning for a number of these initiatives, bringing together these new types of technologies, including and layered on top of big data analytics and AI applications.
Okay, so that was the macro trends. I think you guys got, Tone got pretty specific, but we'll forgive you for that one. Let's see, do we have any questions from the audience on what you think? Yep.
Maybe it's a wrong question, but when you take a Bitcoin and your rule, like already 70% is minted and 2040 is the last date, and it will be an alternative currency, or do you imagine that we'd replace the dollar or whatever you're calling the world currencies, or it will be another gold, like in your sense, right? Because you can't replace a generic old tradition and digital cryptocurrency. How you will see it as an alternative currency altogether?
It's a good question, actually.
I'm going to refute all your blockchain points when we're done, so you answer this one.
I think it's a very good question. That is way far down the line. Do I want to see a world on one currency across the world? I don't know. I don't know if that's a good thing or a bad thing. I don't know if, I mean, again, right, imagine if the world's on one currency and then there's especially something like Bitcoin and then we discover there's a big bug. Right? So there is a problem with putting all your eggs into one basket. Now, of course, since I'm a believer that Bitcoin will be the only blockchain, they say, well, how about these alternate currencies? Well, my answer is, well, they're not as secure. So what I would like to see is something like Bitcoin being a check on government, keeping their currencies, being more responsible with how they use their currency and how they print their currency, like some of the bailouts and things like that. So I just want Bitcoin to be more of a way for people to opt out from their government currencies if they don't like what the government is doing with their currencies. But I think there are advantages to having a responsibly run Federal Reserve, I guess, and but with better checks and balances. So that's kind of how I see it. I get into more detail, but I want to let somebody else jump in.
I'll add to that, Tone. I think that Bitcoin doesn't aspire to be a one world currency, and we're all just going to switch to Bitcoin at some point. Like, we'll switch to using email instead of sending letters. I don't think that that's what Bitcoin is trying to do. Bitcoin's a technology, and it solves a number of problems, and it solves those problems very, very well. It solves the problem of sending money over long distances. It solves some of the friction that's involved with transmitting value over long distances. It solves the time issue. You can transmit value instantly. It's incredibly liquid in the sense that You can send money to someone in Argentina, and then they can go to a public square or a Bitcoin ATM in that country and immediately get that into local currency that's usable. So it's a very powerful tool that makes our existing money more valuable at this point. But I'm not of the opinion, and this is my opinion, I don't see Bitcoin as out to replace the Federal Reserve or out to destabilize centralized systems. But it is very good money, and it is a great store of value. I mean, if you've been following what happened in India, something like 86% of all paper notes have been basically declared worthless, taken out of circulation. In that kind of world where a government can just make a decision and say, we're going to make a large amount of your currency, absolutely worthless, that's a really compelling use case for Bitcoin. I mean, I have a lot of faith in the US dollar and the money in my bank account, but we're very fortunate in this country to be able to have that sort of faith and credit. Not everywhere else in the world has that, and there is a use case, I think, for Bitcoin along those lines as well.
One more quick comment on that. Look, putting my selfish motivations aside to be rich because I hold some Bitcoin, putting that aside, I don't want to use Bitcoin. I would rather, governments completely go the other way on their AML, KYC regulations, and I want governments to treat Bitcoin like a person's property and not judge how they spend their own money. I mean, I would rather do that. I would rather use my banks for any transactions without a government's judgment on what I'm doing with my money. Another reason I really like Bitcoin is, well, what if you have a responsible somebody running probably a Caribbean island and say, no, I'm tired of corruption. I want to put all of our tax revenue and spending through the Bitcoin blockchain so any developer can audit the trail of tax revenue so we know exactly where all the money is going and who's making what. So I would rather see those kinds of changes than having a currency like Bitcoin. I would rather see government regulation on people's money drop.
Just adding to that, when you take other space happening, the R3 consortium or something, the banks are coming up, and in your case, if Argentina Bank and US Bank made an agreement, an open ledger platform, as we call database, and then Bitcoin is nowhere a necessary item because Argentina Bank allows US Bank with an open ledger concept in 1 second.
Right. Because like some of my friends, they make a joke. They say, well, in my country, the government makes me use Bitcoin. And then they say, well, what country is that? Well, America, right? They make me use Bitcoin. They judge how I spend my money, so they're making me use Bitcoin. Because there's no judgment. Bitcoin doesn't care what you're spending it on. It's just digital numbers.
I just want to, before the next question, I just want to pop back to the blockchain conversation. So here's what I'm experiencing every day in working with companies. So recently I've engaged with some startups. They actually have really cool technology, some old technology that's, I guess, now newer again, and some blockchain technology, some database technology, because don't forget we have all these legacy systems out there, right? So I'm working with a company like that, so placeholder there. Second type of company, multi-billion-dollar international company in the technology industry who is very much looking in their innovation center at blockchain technology because A, there's a fear of missing out, as someone said, and there's a fear that they might be displaced not only by their competitors, but by other people peripheral to their industry who might advance into their services area, right? And so that's the second placeholder. The third placeholder is traditional investors in solid blue chip companies who are now, hearing enough to say, I'd like to put some money into proof of concepts. So with those three types of entities, this is what I predict for next year. People are talking, people are collaborating, and it's all around blockchain. Will blockchain be the do-all, end-all, change the world? I don't know, but what I do know is I have been to many of Lewis's events. People are collaborating. I went to a healthcare event, 400 people in healthcare, and just about none of them were blockchain people because they have real-world problems in interoperability. And so they're all excited again about solving these problems, and there's a lot to be done in blockchain and a lot to learn. I've been in IT over 20 years, and I haven't seen this type of invigoration together again to solve these problems with existing technologies. And so I'm hoping blockchain's a catalyst, and I'm hoping it's also the solution.
Is there a question over there?
Come on, guys, questions.
I'm interested what sorts of industries you think are going to be the first to be taken over by blockchain. Do you see it being more business to business, business to consumer? What verticals are you especially looking at?
Well, payments is already happening, right, with Bitcoin. And we've got a very strong, solid, stable blockchain in Bitcoin. I mean, Bitcoin has its issues. We've seen that, sometimes transactions can take longer than we hope, and there's some maybe constitutional issues on what Bitcoin should be. Should it be more of a settlement network for larger payments or interbank type payments or cross-border payments? Or is it more of digital cash and you're buying your coffee with it? And there's some internal debate in the community. But I think what we're going to see, other use cases that really work, is already what we're seeing with the Cook County Recorder's Office, where they're using the Bitcoin blockchain actually to store transfer of ownership of real hard assets. And I think there's other, everyone's house now has a smart meter on your electricity. So you'll start to see things like those electricity meters actually recording the usage on a blockchain in some sort of encrypted way that doesn't maybe reveal, I don't want my neighbors to look up how much electricity I'm using on the blockchain. So there has to be some way to do that. But there are some very low-hanging fruit problems that we can start to use. So we're not, I heard the term earlier, just swinging a really cool hammer at this nail that we had. It's not a be-all, end-all solution. In the late 90s, everyone's like, well, every company has to have its internet strategy. And a lot of companies didn't even know what an internet strategy meant or what it meant to be online. And we're seeing some of that with the blockchain technology right now. Everyone's like, well, what's our blockchain conversation? What's our strategy? But I think you don't want to have a solution in search of a problem. You need to have a problem that has an ample solution in front of us. And so some of those things like, chain of title, it's a natural fit. Recording, certain usage. Someone mentioned the Internet of Things. You can have all of your devices sort of recording what they're using and talking to each other. You can have your, a fridge place an order on the blockchain and the grocery store sees it and delivers your groceries. I mean, that's sort of I think the next steps and use cases for this technology, short term.
For financial institutions in capital markets, it is much more of a B2B play. It is a B2B play because major players have got together and are creating private networks. They get together, 2, 3, 20 players determining the rules for consensus and participation. And essentially, it's a question of repairing or improving back office operations and transactions between other major players. So I'd say for the foreseeable future, you'll see much more on the B2B side. And hopefully, a lot of the B2C applications with blockchain will probably be unbeknownst to consumers. They'll be consuming or interacting through the blockchain without even knowing that they're actually using it. So the B2C conversation is a bit of a different conversation altogether.
All right, I guess I'll comment real quick. I don't think the future is going to be something that's obvious. And I think that in a lot of these cases, again, I'm not all that excited about real estate on the blockchain. I'm not all that excited about insurance on the blockchain. I just don't think I don't think these products need global decentralization. I don't think they're, I think they're much better in more of a private blockchain kind of setting, which to me is in a blockchain more like databases. I think Google can do a great job executing smart contracts. The question becomes privacy. And I think we have more and more companies that are now being focused on privacy. I like what Airbits is doing. They were mentioned during David Ripley's presentation, where they're trying to just change the way information is being stored so that you have more privacy as information. What I am really looking forward to is micropayments when, again, Bitcoin needs to solve a minor governance problem, but I think they will get through it. And then when the Lightning network or the Lightning product comes online and we have micropayments, I would love to see the email infrastructure get redone with micropayments to remove spam. I would like to see something like me connecting to somebody else's Wi-Fi on their phone without even realizing it, and I'm paying them in micropayments automatically. This way, when I travel, I have Wi-Fi everywhere, just connect to other people. So I'm looking forward to that kind of, again, there are so many uses for micropayments and cash-style payments where KYC isn't needed that can be utilized without completely overhauling the system. Just like these ideas, I'm really looking forward to.
I'll agree with what everyone's vision is, and in that respect, from the blockchain perspective, I would like to say, I come from the software world. That's been my life, and definitely databases. A lot of people have view that blockchain is a newer type of database with additional types of features, and that could be true as well. It's out there, all being discussed now. What I do know, though, is there's a lot of problems in a worldview in the world right now, and we've had databases for a long time, and I don't see those problems being solved. Now, they haven't been solved with blockchain either, but what has been done as far as tangible things, for example, I was part of the United Nations Identity Summit, ID 2020, brought together people from all over the world trying to solve the problem of identity, and it was based around blockchain. Now, the problem of identity has been out there a long time, so have databases. If this sparked the conversation and people want to utilize the advanced functionality of blockchain to solve those problems, I think we would all be for that. There's also challenges worldwide for payments for refugees, people in third world countries. There's not a lot of transparency in that. So with a lot of the charities and donations, people have been seeking greater transparency along the payment chain, and there are people working in those areas with blockchain, again, early on, proof of concepts. These kind of things are ignited. I'm more excited about technology than I've been, I guess, since I started in this field. And what the exact results are going to be is to be determined.
That was a great point, and the charity point was great. We shouldn't have to, again, in the world of a Bitcoin blockchain, you shouldn't need to file with the government to get permission to be a charity and nonprofit. If you run everything through the Bitcoin blockchain, then everything is displayed. Anyone can audit and see where all the money is coming from and where it's going. And it's also why I believe that privacy should be a layer, the protocol should be as is, and then with layers on top, you can be as private and as open as you choose. And if you're running a layer on top of Bitcoin that's a charity, you're 100% open. If you're a private citizen, you can be 100% private. And I think that something like that would be get out of the hands of regulators regulating charity. It can be completely audited by any programmer.
Oh, I wanted to add one thing that's a bit more fun, I guess, that people are really excited about, which is, the music industry, artists, all these people that, they used to just go out there and sing, and they actually got paid for what they produce, and now, movies and everything. So digital rights, I'm definitely not an expert in that area, but that's something people are very excited about in the music and the film industry. I don't know if anyone else knows much about digital rights for blockchain.
I'm an anti-copyright guy, so I'm the last guy to come.
I'm not buying your record if you have one.
Yep.
You talk a lot about, microtransactions, replacing a lot of payments. All these things generate more and more volume as people start getting off like the Visa networks and the cash networks and putting volume on the blockchain, specifically the Bitcoin one right now. A lot of people seem to be talking about. And right now, as far as I'm aware, when I play with blockchain just can't scale that right now, especially because it's decentralized nature. It needs to get more and further out. So I know there's been some work into kind of sharding that somewhere, kind of how Cassandra does it. But in the future, where do you see the performance of that going? What kind of scale do you think we need to get to in order to achieve some of these goals?
I'll just mention real quick. Well, the current initiative, segregated witness, which is being blocked by some people. So there is an initiative right now to set rails in order to scale as a layer on top of the Bitcoin blockchain. So if we can get this rail in, the scaling will take place on top, where something like Amazon, let's say, if they choose to use Bitcoin, they can open a channel, and then all the users of Amazon are using this channel on top, and the amount of transactions they can do is almost infinite. And then it settles to the Bitcoin blockchain at the end of the day, at the end of the week. It's up to them, really. Every hour, it's whatever is more optimal. So if we can get these rails in, there could be scaling greater than Visa as a layer on top of Bitcoin, and it will be used kind of more of a settlement layer. And there's debates on both sides whether that's good or bad. I think that's good.
I'll add a little bit too. I mean, segregated witness I read today, and to reiterate what that is, it's basically just it's laying out some rail or some foundation on the Bitcoin blockchain to say, here's how we're going to scale forward. And you've got people on both sides of the issue. Should we implement it? Shouldn't we implement it? But really, at some point, there will be some sort of consensus. Bitcoin has this network effect of miners, of developers, of investors, of entrepreneurs, merchants who are accepting it, consumers who are using it on a daily basis to pay for things in their everyday lives. And at some point, there will reach a point where there will need to be some sort of scale in order to get this to work. Whether it's building a layer on top so that the consumers have an ease of transaction on top of like the underlying settlement layer, or whether everyone just agrees we're gonna make some changes. It's very hard to change the Bitcoin protocol, and I think that is definitely by design. Whoever Satoshi was, or Satoshi, the group of people that Satoshi were, who invented it, this was a design. This is a feature, not a bug, for Bitcoin to be hard to change. If it was easy to change, then it might not have the staying power. It might not have stuck around since 2009. It's really cool to see some other technologies out there that are a bit more extensible and they're a bit more like JavaScript to interact with. But that also adds a layer of complexity to it, which starts to make things difficult and can also cause issues too. I mean, forks and all sorts of problems with where you have two different sets of code running on two different sets of nodes on a network. And Bitcoin is really, really, really stable in that regard. With that stability, it's a little resistant to change, but I think that as time goes on, the network effect will cause pressures and we'll find a way, and that's sort of like the democratic solution we're looking for. Everyone will keep fighting it out, and then we'll say, okay, here's the solution we can all agree on, and I think we're moving towards that with the segregated witness thing.
And even if Bitcoin doesn't scale, right? Let's say we can't come to a consensus, right? What happens? So what's happening now, basically? So the transactions. We can only have 3 to 4 transactions a second. Let's say we can't scale, we can't get that bigger. Well, these transactions will just get more expensive, right? So people that will get to participate are people that are buying something worth buying, or people that are willing to pay a 10% fee, right? Some people are willing to pay. I mean, I have a business in New Jersey. I use Groupon. I'm willing to pay a 33% fee, right? So it depends how badly you want that transaction. So these transactions on the Bitcoin blockchain will just get bigger. Like, you're not going to buy a cup of coffee, but you'll buy a car if it's more advantageous to you, or some other good, right? This is also, I mean, again, if you want to, I don't want to go down the rabbit hole of illicit activity, but that's the kind of activity that is willing to pay a higher and higher fee because they can't do that transaction in any other way. So you kind of want Bitcoin to scale to get it more to the masses. And the other part to that, was a two-part answer, I already forgot the other part. So yeah, they will just become more and more expensive, and micropayments can still happen. They just will not be decentralized. So that whole cell phone kind of thing I threw out there is just that both parties will just have to have the same entity doing that micropayment internally. So kind of like an exchange, like a Bitcoin exchange, they're doing everything internally. It's not as secure, but they do have micropayments. I can send you, half a cent as long as it's the same company, keeping an internal ledger, and then themselves until you take yourself out of that middleman. So there can still be middleman doing these micro channels.
Guys, I think we have time for just one, like a one-sentence prediction for what you think. Actually, no, there was a question over there.
Yeah, hi. I have one last question. That's around storage. What innovation do we know of, or has any investigation been done into storage innovations? Storage technologies that can pretty much store, the amount of data that's being saved on these blockchains, because that is the scalability issue, right? Is that over time, as every transaction is recorded in the world, over the next 10 years or however many years, will we be able to store it somewhere? So is there a parallel investment in storage technology that is running concurrently with the the blockchain paradigm?
That's a good question. The blockchain is getting pretty big now, right? And so it's gigabytes upon gigabytes, but I don't think it's gotten to a point where it's impossible to run a full Bitcoin node. I mean, anyone could probably spin one up in a few hours on Amazon Web Services or something. We haven't reached a point where it's too prohibitive from a storage perspective. But as time goes on, and we have more people are relying on blockchain, there's definitely, maybe it would be a good time, again, not investment advice, but maybe a good hedge against investment in blockchain technology or Bitcoin would be an investment in storage, because these chains are getting very big. We're adding a lot of information, and the whole point is it's immutable, it's there, it's permanent forever, so you can't delete it, so it has to be stored somewhere.
Guys, a one sentence answer. What's one thing that you would tell people to look out for next year?
Donald Trump will sponsor a bill to create a new trustless voting platform that cannot be hacked or impinged upon.
No, he's in power now. I don't see that. They all say that. I would, again, a lot of the things that I look for, they're not in the actual Bitcoin space. I look for stories outside of the Bitcoin space, and then I think, can Bitcoin solve this problem? And what was mentioned about India is important. Historically, governments have dropped interest rates every time there's a recession, and we can't really drop them anymore. And there's all this talk right now about eliminating cash. India didn't really eliminate it. India did something weird. They removed the $500 bill and the 500 rupee note and the 1,000 rupee note, but they replaced them with a 500 and a 2,000. It was just like the way it happened is very, very strange. So they're not actually eliminating money, kind of. But there is talk about eliminating the 500 euro note, the $100 note, and I think that is huge. I think if there is a push for eliminating a physical cash, that is something to keep an eye on, because Bitcoin came at a great time, and now that it's been it'll be 10 years, if that initiative starts to happen, people will actually trust it. And you got to think of it from the perspective of someone that's 20 years old right now, and Bitcoin's been around for 10 years and it's stable internet cash. They will trust it. Some of us may not trust it yet, but someone like internet, I fully expect it to be running tomorrow. So one of these days, people will see Bitcoin the same way. And what I keep an eye on is government's push for eliminating physical cash.
So the question is, a year from now? Or what's happening?
Yeah, just one thing to look out for that might be happening.
Okay, one thing to look out for. As I already said, big uptake by traditional companies in collaboration. And I would say an increase for everyone in the room to get more exposure to types of training and information. There's currently a serious lack of formal training programs to get into the development side of blockchain. So I want to leave you with a couple of resources that I hope that you'll be able to go out to. There's, Jennifer had mentioned Coursera, and some of these companies. There's a fantastic course by guys from Princeton called, what's it called? Bitcoin and cryptocurrencies. Do you know that one I'm talking about? It's on Coursera, and it's free, unless you want to buy the certificate saying you took it. Fantastic. I mean, when did that happen where guys from a major university just gave you a free course online? Brilliant. The other thing I want to say, there's a website called blockchaintechnologies.com. I get a lot of people that call me and just want to learn about blockchain, and I wish I had time to do that all day. But so I send them to the site. Every term you've pretty much heard today on Bitcoin, digital currency, blockchain is explained. The scenarios are explained. It's a wonderful tool, blockchaintechnologies.com. And I guess for next year, we're going to see proof of concepts really happening, and you'll be able to see live demos at these types of events, and I really see traditional money pouring into blockchain development.
I think the big takeaway is actually more of what we're seeing right here in this room, and it's collaboration between digital currency companies, fintech companies, regulators, banks, and more along those lines of, okay, Bitcoin is here to stay, blockchain is here to stay. Well, how do we responsibly use this technology and make sure that it's being used for good things, that people aren't getting hurt by it, and what do we do going forward, and how do we carry that conversation? I think it's great to see, the OCC taking a look at giving fintech companies some sort of special purpose charter. It's great to see the IDFPR articulating a request for commentary on different, on how do we regulate this, right? And continuing that conversation, I think, this could be the year Bitcoin and blockchain start to go to mainstream, because it will have the less of that regulatory uncertainty that keeps entrepreneurs from saying, well, maybe I don't want to start that business because I don't know what that's going to do to me from a legal perspective. And there'll be more certainty on that level now. And so that's I think the takeaway. We're going to foster in an ecosystem, and hopefully it happens here in Illinois.
Awesome. Guys, thank you for the great predictions. We'll see if they come true. Round of applause for our panelists. So we're just going to wrap things up. So I just have a few closing words to say. We're all here running at this conference trying to figure out what is going on. And hopefully today some of those things were answered. So this is just a quick, I usually like to do this before, but I thought today I would do it after. Again, it's going to take no more than 2-3 minutes. But this is, the stuff that you need to know about blockchain. I think that there's interesting things happening. I see the supply side and I see the demand side because I'm talking to IBM, but I'm also traveling around and meeting startups. So I'm looking at both sides. I have a bit of a unique view. So this is, for those of you that are polite in the room, this is the stuff you need to know. The first thing you need to know is that blockchain with a capital B, the blockchain, is the backbone of Bitcoin. Oftentimes you'll hear people say blockchain and they're talking about private blockchains, which is lowercase b. You can have an argument with somebody for 5 minutes and not realize that you're talking about completely different things. So know which blockchain you're talking about. The blockchain, cryptocurrency backbone, blockchains, distributed ledger technology. Know what you're talking about, or else you could be confused and the other person as well. That's very important. The other thing is that there's, these are some of the areas that are being disrupted right now. We've already we talked about most of these, so that's good. That's being covered. These are sort of the pillars of disruption. The other thing that's worth noting is that right now, people are either building platforms, like Ethereum or Scenario, or services. And this is what I mentioned before about either people building rails or people building cars, and they're not all connected. At some point, we'll have an application ecosystem when the two unite. We're not there yet. That's why right now we're always talking about the promise. So that's why when Susan said, you're early. There isn't an ecosystem yet. It's getting there. Everybody's sort of doing different things, but as soon as they start to talk to each other. The other thing that's happening right now is that everybody is doing innovation in the periphery. Use cases that are happening, but nobody's actually letting you into the big gate and run amok inside of a big bank. They're doing it in little sandboxes, play areas, use cases. It hasn't been let loose yet. You're starting to see some of it happen on the outside, but we're still in use case world, test, learn, prototype, lab. And the reason why that's happening is because everybody's worried about their market share or self-cannibalization. If you have something better, if you're making billions off of charging people $20 fees for transferring money, and you're making $350 million a year doing that, why would you make it more efficient? Just because you can doesn't mean you should. You're giving away good money. The other thing that you need to know is that blockchains require distributed ledgers, and the most important part about this is distributed. So anybody here with a blockchain idea, good on you, but you need to distribute it. So you need to actually get out there and get people to use it. Dixon was talking about the food supply chain, and in order to make that happen, he has to go out there and be a politician, shake hands, know the supply chain, and embed himself in it. So you have to be as much of a politician, trusted third party in order to unite these people, which is why I think one of the strongest possible winners here is governments, because they have the ability to enforce things from the top down. So the grand unifier is going to be the winner here, and this is why I think governments are important. So the fact is that all these things, once they're connected, the winner will be the person that connects them all, because it's about distributing and getting everybody to change their behavior. So if you want to be successful in this space, You need to be successful at unifying people, parties, and getting them to do behavioral change, which isn't easy. They have to do something that they haven't done before and change their process. That's not easy. You know, companies have billion-dollar innovation and transformation budgets. That doesn't mean that they're, you know, moving fast. And then the other thing, you know, so this is, you know, blockchain, the stuff you need to know. Hopefully, it was a good summary of what you can take away. The only last thing that I wanted to say is that for those of you sticking around, I think the Canadian evening reception is starting, so do stick around. There'll be drinks. I think you guys have earned them. So how about a round of applause for yourselves for making it this long. And we'll be back. Our next event is in London, FinTech Blockchain Week London, and then we're going to Tel Aviv in March, and then we'll be back here for FinTech Week Chicago in April. So I hope to see some familiar faces there again. And if you want to get involved, just give us a shout, and we'll make it happen. So again, thank you, and for those of you sticking around, stick around. Let's collaborate. All right, thank you.
Next door, there's a lounge there, and there's